is the mood on the AI trade still a little cautious right now?
Hey, good morning, Tamana. And I would say the mood on the AI trade has certainly improved. July was a very tough month for a number of the CapEx beneficiaries across that trade. I think a big part of that was just the move to the upside went incredibly far, incredibly quickly. And so some consolidation was necessary from just very overbought and stretched positioning. But we've come back to neutral with respect to positioning across semiconductors, across the broader market. Earnings continue to come in pretty good across the entire complex. CapEx has been reconfirmed by all of the hyperscalers. It continues to move higher. So I think the mood is certainly more upbeat. I've been pretty consistently optimistic around this trade for a while, and I still am. And I still continue to look for some opportunities of stocks that may not have rallied to the degree of where fundamentals support it. So I still think there's more to go in that trade.
Matt, morning, first of all, Alex here. And what do you think of the Kospi? And there's a joke here on this table that it behaves like a small cap, and particularly on account of those two very, very large companies.
Yeah, Alex, that's a good analogy, actually, because the volatility across the Kospi is just absolutely crazy. I think the biggest challenge that the Korean market has focused isn't that those two big names, Samsung and SK Hynix, fundamentally, those names continue to plow higher. You see fantastic earnings growth across both of them. But the challenge that Korea has faced is the tremendous amount of leverage that's been built into the system. You have a very retail-oriented market. You have triple levered ETF products that have been created on single stocks, both in Korea and in the US. And so that magnifies the upside moves, but it also magnifies the downside moves. So, 4% is kind of just a common move now for the Kospi, which is crazy to think a year ago that's where we'd be. So I think as investors, you want to be careful around investing in those sorts of markets. And again, to me, it just highlights, and when I speak to our investors, this is why you need to have diversified positioning in portfolios, because you can have exposure to AI. That doesn't mean simply owning Korea or simply owning a Micron or a SanDisk in the US. You want to complement those with offsets as well, whether that's in the healthcare space, other international markets, because you need to find ways to bring down portfolio volatility. And there's still plenty of opportunities across global markets from that perspective.
Matt, the other thing is what's happening at the Indian financial services space, because I think a lot of global money managers look at that. You presumably look at that too. And just the sheer amount of global interest that is coming into large, mid, small financial names. You've spoken about it in the past, but I'm just wondering, the fact that, or the possibility that FIs may come back, the fact that the valuations of some of the financial names and the large ones are very reasonable, does that make them a top priority for a global money man like you in India?
I think it does. You need to have exposure. And, Neeraj, we've talked about this before where, coming out of, at least when the initial MOU was signed back in May, owning financials was a key part of my 3-point plan for India. It was owning financials, owning some real assets, and then looking for those underappreciated long-term secular growth opportunities, like a Mahindra, something that was just totally undervalued. But financials, I would argue, still are very reasonably valued despite the comeback that they've had. And it reflects strength in the overall system. You can't have a bull market unless it's confirmed by financials. And so I think it's helpful that we're seeing financials maybe lead India out, because these are names I think more international investors are familiar with. They're part of some of the larger indices. And I think that can give foreign investors more confidence in the fact that when we do start to see things continue to build and turn to the upside, that it's definitely sustainable going forward.
Just wondering, Matt, anything that you were spotting and finding exciting in the Indian equity space right now?
Yeah, there's been some big moves, Taman, on some names that I've liked. You look at Eternal and Paytm; those have just been two meteoric comebacks, especially Paytm. But it's all based in fundamentals. The market again turned too negative on names that were exposed to, I'd say, strong and growing parts of the overall Indian economy. They surprised to the upside with respect to earnings. You see good management execution of plans, and that's exactly what you want. And so you see those stocks being rewarded. That's encouraging as a stock selector because you know that names that are having good fundamentally based recoveries are going to deliver over the longer term. So I still think there's other opportunities that are out there to keep an eye on. I mentioned M&M. I still think that name is too cheap based on where their last earnings report came in. That one continues to be interesting as well. On the real asset side, DLF, I think with respect to their Mumbai real estate exposure is also undervalued. So there's definitely opportunities across the Indian market.
Matt, it's always a pleasure speaking with you. Thank you so much for taking the time. Pleasure.
Thank you.
All right, let's talk about what happened in trade yesterday. Interesting session. You had foreign institutions that turned net seller after 3 sessions of buying. FIs net selling to the extent of 1,000 crore rupees or thereabouts. Domestic institutions net buying to the extent of 5,840 crore rupees. Benchmarks actually remained in a near 200-point range. The Nifty 50 gaining as much as 170 points from the day's low. What is interesting is, and if you can pull up the intraday chart from yesterday for the Nifty 50, is that there was as much as 74 or 75 points that was gained during that cash session. So there was quite a bit of a spike, while the previous 4 or 5 sessions have seen that gap narrowing. Once again, you saw an increase in the gap between the close at 315 and the final close after cash, and that might be on account of a couple of stocks. One of them indeed was Bharti Airtel. It swung into the green and aided the recovery for the Nifty 50, and that was on account of the action that it has taken on a couple of its plans at the bottom of its offerings, and we'll talk about that in more detail. My colleague Somit, who tracks this very closely, is very clear that this is not a tariff hike. It actually is a restructuring of what they're offering, but it will result in an increase in average revenue per user. It will be in focus at the start today as well. Tata Consultancy Services proved to be a drag on the benchmark, ended 4% lower, but off the low point of the day, TCS and other Tata stocks declined after N. Chandra stepped down. Broader markets ended mixed, the mid-cap index gaining 0.7% from the day's low and ending higher by about 0.25%. Small cap index more or less within a very tight band and ended with cuts of 0.25%, and the market breadth favored the declines with the gap widening through the session. You had the PSU Bank Index that moved quite sharply on the upside, ended top gainer up 2%, as a result of which you had the Nifty Bank that gained over 1% from the day's low and ended about 0.8% higher. So it's financials in focus today as well, I would think, but certainly yesterday, and quite a bit of buying in the PSU Banking pack.
Quite a bit of buying in the PSU banking pack, quite a bit of activity in that cash session yesterday, yes. Alex. So much to speak about, right, if you will. But let me. I'm just trying to do a slightly differentiated trade setup today, guys. So bear with me. And the messaging is that there never is, but now at the current point of time, opposite templates are at play as well, and therefore there is no right answer to whether value will work, growth will work, a combination of two will work, and for how long will it work. And the reason is this. I'm just pointing this out via data. Now look at the fundamentally strong large caps at good value, which are generating very good returns in the very recent past. Look at the 1 month chart of a LIC, Bajaj Auto, maybe an ICICI Bank. You could argue, Alex will say Bharti Airtel, and look at the 1 month charts of some of these. Very good returns, and most people buy these on leverage, so actually you get it in the F&O market, and therefore your ROI is much better. And why are these stocks moving? Because look at, I've just used a simple metric which is trailing 12 months P. For LIC or for ICICI Bank, you obviously look price to adjusted book value as well, or embedded value, but just look at P just for simplicity. The PE of LIC trailing 12 months, 8.8 times. Bajaj Auto, 27 times. Not Herculeanly expensive. ICICI Bank, 18 times. Now, you would think, therefore, that value is seeing buying, and why not buy these? Look at what else is happening. Expensive precision manufacturing is seeing some very strong buying as well. Look at the trailing 12-month PEs of some of these stocks. Sansera, 70 times. KRN Heat Exchangers, 90 times. Happy Forgings, 58 times. Craftsman, 58 times. Sona BLW, 64 times. You will think, how will people buy these stocks? Look at the YTD charts of each of these and you will see the kind of buying that has happened. Sansera, that's the YTD chart, 113%. KRN, whatever, 80 odd percent if I'm not wrong. Bring up Happy Forging, 78% or 75, northwards of 70%. Craftsman Auto, 36%. Sona BLW or Sona Comstar, whichever, whatever you pronounce, 67%. That's the kind of buying that has happened into these stocks, which are so expensive. I mean, KRN is at 90 times. It's rallied nearly 100%. But when it started the rally, it was still 45 times. So you would think that it's expensive. Boy, it is seeing some buying. So some serious buying that is happening into some of these stocks, and you got to be mindful of that. And just the template that is shifting. I mean, if you look at the MSA additions and deletions for today as well, right? You see some of those tech-enabled platform names, all of them making their way, right? Paytm in a blink of an eye, or not literally a blink of an eye, but at 1600. But the results that have come in from Lenskart or some of the others, some serious buying happening. So no one template is working. It is not that value is giving you great returns. You can argue it is, but then you look at what's happening to precision manufacturing, you will say even growth is giving you great returns at very expensive valuations as well.
So, but just a small point here, specifically on KRN, it struck me because I looked at the numbers. It's on my list and we'll talk about it. But there are several companies that looking at trailing may not give you the best picture because they're adding capacity. The revenue increase is going to be very substantial over 27, 28.
Agree, Alex, but precisely the point that at 90 times, even if they were to double the earnings next
45.
year, it'll still be 45 times.
Correct.
The only point I was making is that these are expensive names, but they are seeing buying. So the template is not that you buy value at lower prices because it is safety. These guys are showing that growth is being adequately rewarded if you pick the right pocket or the right stock.
I would go one step further and say that if you're sticking only to value buying, you have a big chance of losing out right now because in some sectors and specific stocks, growth is very, very visible. So you're going to have to see if you want to avoid it because of high valuations. Perhaps that could be at your peril, but choose wisely, of course. Okay, here are some of the factors that I'm looking at this morning. The Nifty managed to defend the 24,400 zone, and a broader near-term trend is there, but it remains cautious as momentum indicators point to some loss of that bullish strength. 24,360 to 24,250 will be the key support zone. A decisive break below 24,250 could drag the Nifty towards 24,000. On the upside, 24,500 to 24,600 remains the immediate resistance zone. So you have, these levels to look at, 24,500 to 24,600, supports at 24,360. There's a crucial positional support floor at 24,250. For the Bank Nifty, it snapped a 3-day losing streak and significantly outperformed the broader benchmarks. Resistance at 58,300 to 58,400. Sustained move above opens targets towards 58,800 and 59,200. Supports at 57,400, 57,500. Just to quickly highlight that, we talked about the US inflation numbers. You had the July headline CPI in India coming in at about 4.5% year on year. Now, while this as a tick is at a several month high, the fact is it's not as bad as what would have been expected. So food is holding up CPI inflation. The core is sticky at 3.9%, and rainfall momentum is holding into the second half of the southwest monsoon season. The RBI has, of course, delivered a dovish hold. I think one more thing I want to highlight is, because I know it's in the news cycle, sometimes it feels like this is yesterday's story, but it's a big one which will have ramification through the next several days. And I'm talking about the decision of the Tata Sons chairman not to offer himself up for reappointment in February of 2027. Here's how Jefferies looks at it. I thought we'll just quickly highlight it. Jefferies says the Tata Group is driving through the change of guard. Tata Sons is the primary promoter holding company for the Tata Group. Tata Group is India's largest conglomerate with a 150 plus year history and looking through the potential near-term market concerns related to leadership change. They believe business fundamentals will prevail. Top picks among the Tata Group companies for Jefferies is Indian Hotels, Tata Consumer, Tata Steel and Voltas. Please note, TCS is not on that list. But let me go across to Puneet right now, who's joining us for the F&O setup this morning. Good morning, Puneet.
Well, good morning, Tamanna, and good morning to all of you. We've seen, as we've, consistently highlighted in this particular week, that there have been largely weaker kind of cues, and yesterday was one of those days where you just saw all of those coming down and putting pressure on the Nifty 50. So we were below the 24,300 mark also on the index, and hence for that as well as for the Bank Nifty, that continues to be a key pressure point as of now. So what you have seen on the Bank Nifty is yet again come to that 57,800 level and wait for certain cues. Now what could those be will be something to watch, because you had earnings, you had the Fed meet, you had the RBI meet, all of those now done and dusted. So the next leg of the rally will be something to watch, and where it will come from will also be very important, because right now it doesn't seem to be of where that next leg of rally could be unless it's re-rating of certain candidates as well. But when you look at the cash markets, yesterday was, I think, the first day where you saw some meaningful sell number come through for almost 1,000 crores by foreign investors in the month of August. But the index long also, which they have been building into the positions, have also been slightly, in this range of 12 to 13%. And yet again, looks like that it is also waiting for the next leg of trigger, because while it's better than July, still continues to be depressed. The open interest distribution has been very interesting though. What you have seen, that 24,500 now seeing active call open interest, so is 25,000 on the out of money side. We highlighted yesterday that there is only 24,000 on the left of your screen, which is showing you that high open interest being built in. On the opposite side, so not too much action in the middle, only barring some call action at 24,500 and 24,600, but very range bound session indicated. But all the action is in the broader markets, last leg of earnings, and hence you saw all reactions come through. Godrej was one on the back of news flow, of course, of CEO change. Massive build-up of shorts here. If that continues, will be one more thing to watch. But PI Industries was another candidate with very weak earnings and shorts being built up on the system. HL would be an interesting candidate, came in the second half, and brokerages are also positive. So you could see some action continue on this counter. But on the open interest losing side though, you've seen MCX and Hero MotoCorp as the top two contenders for covering of shorts. And Pidilite also is one where you're seeing some short covering as well. But all action on the big earnings that we have today. So the benchmarks will likely be in this range that we've been looking at.
Agreed. I think action on Bharti Airtel. Look out for Grasim after those management meetings. Bharti Airtel, after they've knocked off their cheapest plan, and see what happens there. I think look out for TCS. Do you have some kind of a recovery after the initial reaction yesterday? Watch out for that. But in my top three, I'm starting off with Aditya Infotech. So strong set of numbers on Aditya Infotech. Revenue has been led by strong traction on the CP Plus brand. In fact, the contribution of that brand has risen to 87% of revenue. It's a favorable product and brand mix, which has led to margin expansion year on year. PAT growth is led by lower finance cost and better cost efficiencies. And the company expects FY27 revenue at between 6,000 to 6,500 crores. EBITDA growth in FY27 year on year was 45 to 65% plus. Now, revenue, the core numbers, revenues were up nearly 90% to 1,402 crores versus 740 crores. EBITDA has grown from 60.9 crores to 203 crores. Margins have gone from 8.2% to 14.5%. And net profit has gone from 33 crores to 142 crores. So a very visibly positive set of numbers and a high growth set of numbers from Aditya Infotech. We hope to get the company on to speak with us as well.
Just on one thing on this one, and the YTD chart of this tells you a story. The issues begin for the markets in the month of March. Since March, when the government made the move of banning some of the Chinese equipment and getting in Indian players to do this whole camera circuit piece, Aditya Infotech has moved from 1,500 rupees in March to 4,000 rupees right now.
Yeah.
It's a crazy move on this stock.
So in some effect, the numbers in their
Completely.
performance is also showing
Completely.
and keeping in tandem. Otherwise, it would be a very different kind of a scenario.
The very definition of bottom-up stock picking. If you were
Is
with the
this-
index,
is this the
you would
example?
be up 30% on the small cap index, but then take a look at this.
Yeah, no, and stellar set of investors in that company as well, right? From your global names to your strong domestic investors. Okay, Titagarh Rail Systems is the other one, and it's a thumbs up as well. Strong execution is what we've seen in the passenger rolling stock business. The passenger rail contribution has increased materially. What are the areas of concern? Well, freight rail revenues were lower year on year, and freight profit has also declined compared with last year. But overall, if you look at the numbers, revenues were up 12.6% to about 765 crores. EBITDA was up 26% to 95 crores, and margins have moved from 11.1 to 12.4%. Net profit was at 52 crores versus a loss of 23 crores. So this is also a thumbs up. Sansera Engineering is also a thumbs up, the third one on my list. So you have a whole host of, and of course this is a bit of cherry picking, so it's not like all mid-cap numbers have been great, but Sansera Engineering has had a decent set of numbers. Highest ever revenue during this quarter, strong volume growth and demand. India business is up about 17% year on year. The international business has significantly outperformed with 71.4% year-on-year growth. Exports to the US nearly doubled. The non-auto segment has achieved its highest ever quarterly sales, up almost 130%, and they expect to end FY27 with high teens top line growth. I'll just quickly take you through the numbers. Revenue is up 33% for the quarter at 1,021 crores. EBITDA is up 48% at 196 crores, and margins have gone from 17.3 to 19.2%. Profits were up about 39% at 86.6 crores. So at least the first three on my list, pretty solid.
Yeah, absolutely. And I have three good results as well. Apollo Hospital stands out because it's actually a beat across the board, and for various reasons. Pricing among them, but also patient volume going up. 20% or 21% uptick in revenue. This is a beat on the expectations, consensus expectations at that. Net profit is up as much as 34%. And the estimate had pegged it at 555 crore. They've reported 581 crore rupees. So it's a pretty decent beat. EBITDA is up as much as 28% or thereabouts, standing at over 1,090 crore rupees. Even the EBITDA was slightly ahead of expectations. The margins come in at 15.5% versus an estimate of 15.3%. And this is an improvement. Remember, this is being done at a time when substantial expansion is taking place. So it means that their mix is improved, their other metrics is improved. In fact, patient volumes were up as much as 13%. Pricing has contributed 4% of the growth, is something that my colleague Varsha has pulled up from their numbers. The healthcare services revenue is up as much as 22%. On a year-on-year basis, and the digital health revenue has also gained as much as 20%. There's a significant shrinkage in the PAT loss in their diagnostics and retail health business as well. So all told, a very good set of numbers. The stock has been under a tad bit of pressure in the recent past on account of those norms that are being discussed, the consultation on room rent capping. So if you pull up a 1 week chart maybe, or thereabouts, you see there's a little bit of a taper off at the end, but this year is done incredibly well. There you go. So 1 week is down about 4% lower or thereabouts. Couple of brokerage notes. Morgan Stanley on Apollo Hospitals maintaining an overweight with a target price of 9,397. Strong hospital growth, digital nears break even is something they're talking about. Strong Q1 execution across hospitals, pharmacy and diagnostics. It continues to balance growth with profitability with strong hospital performance and improving digital economics as well. Macquarie as well. It still has an underperform rating with a target price of 6,230, but it does say that it's an all-round operational beat driven by revenue. A very short note there. Let's talk about KR and heat exchangers. It's a thumbs up. And this is on account of a very sharp revenue increase with margins maintained sequentially. The revenue uptick likely on account of their Neemrana facility ramp up. We'll talk to the management later, and in the day to find out whether this is indeed the case. There wasn't an investor presentation, so I'm deriving this from past commentary. Strong HVAC as well as data center demand likely also aided the numbers. HVAC, in case you were wondering, is heating, ventilation and air conditioning. So take a look at some of those numbers. 252 crore rupees compared with 115 crore rupees in the comparable quarter a year ago. Look at that kind of gain in the top line. And it's accompanied by stable EBITDA margins, in fact, on a sequential basis. But the on-year margins have actually improved very dramatically to 19.4%, as a result of which the EBITDA is multiples higher, more than double. Well, way more than double. And the PAT number is as much as 33 crore rupees. I will be very curious to find out what the management has to say about the rest of FY27. You should watch out for that as well. Gujarat Pipavav is the third stock on my list. A strong performance despite disruption is what you should take away from this. Revenue growth is good, EBITDA growth is good despite that West Asia crisis disruption. The adjusted revenue growth is higher by 20%. EBITDA by as much as 25%. The adjustment based on what they have disclosed accounts for duty, benefit, scripts revenue and expenses. On a year-on-year basis, the revenue growth is aided by the roll-on, roll-off service as well as the container volume. The Ro-Ro volume rose over 50%, and that's what has had a bearing on the numbers. They look pretty good. The PAT number as much as 148 crore. And the EBITDA margins actually expanding on a year-on-year basis in a tough operating environment, 64.5%.
Interesting, very interesting. So some great names there. I have pretty decent names on my list too. Somehow this quarter is turning out to be in some sense fabulous in that fashion. Lenskart. Ordinarily, I think Tamanna would have picked it, but I beat her to it
for obvious reasons.
Okay.
One of us need to.
In case you're wondering what those obvious reasons are, the inside joke is that I lose one pair of glasses a month on average. Lose/damage.
She also steals everybody else's glasses. That's the truth of it.
So that's why.
But hey, courtesy Tamanna and a few other people, Lenskart has delivered good set of numbers. So let's just keep it at that. So here's the numbers that have come in from Lenskart, right? The Q1 numbers, revenues were up 43% at 2714 crores on that base. It's a very impressive set of numbers. EBITDA margins at 21.7 versus 17.7, and net profit jumps to 222 crores versus 60 crores. I mean, this is what expensive names need to do. I'm not saying Lenskart is expensive or is not, but I'm saying if it is expensive, it's put its best foot forward in terms of at least the numbers. Very good set of numbers. Not too many anomalies out there as well. Yes, on the bottom line front, yes, but EBITDA margins by themselves were so solid. 400 basis points margin expansion. I think it also makes its way to the MSCI addition deletion list today. I think it's one of the additions, so keep an eye out for Lenskart. May see some buying out there. Jio Finance is interesting, large cap name, and it is a very interesting deal also from a sector perspective. So what's happened? Bank of America has entered into a joint venture agreement with Jio Financial Services to acquire up to 49.9% stake in Jio Credit. It's a deal worth over 80,000 crores, circa $2 billion, in which will effectively be Bank of America infusion. And you know, I'll tell you why this is important in just a bit. But before that, I just want to mark the third name. And okay, it could be Tenneco or it could be Bliss GVS, either of the two. Tenneco Clean, there's some interesting buying that happened yesterday. HDFC Mutual Fund bought about 20.19 lakh shares at 525. And I think one more, SBI Mutual Fund, if I'm not wrong, also added to that kitty. Yes, SBI MF about 31 lakh shares at 525. So those are the top three names on my list. Keep that in mind. Bliss GVS also had a decent number. But guys, Jio Finance, for more reasons than one, right? And just the whole way the circuit has moved from global names shunning Indian financial services businesses in some fashion, Citi moving out, somebody else moving out, and there is a fair history of names which exited the Indian financial services ecosystem.
Deutsche as well, I think.
Sorry?
Deutsche as well.
Deutsche as well. A lot of names. To now we're seeing in some other fashion, but a lot of global names buying large stakes into smaller names, and now BofA infusing and becoming a 49% partner in one of those names as well. And to Jio's credit, Allianz, BlackRock, BofA, they're getting some marquee names on their side. But this is more than a geo news and ecosystem news about what's happening, because we've seen Emirates NBD coming into RBL, a clutch of other deals that have happened with smaller names as well.
Basically, solo was not working for them. You've had, so for all of these global names in the Indian banking system, solo was not working, or maybe
well put,
it was a policy environment, or maybe the kind of acceptance you have from the Indian public as well. There is a comfort with a very strong domestic banking sector. But yeah, I agree, Jio Financial Services will be in focus. So will Tata Motors CV. So Q1 earnings came out. Pretty decent set of numbers. Puneet joining in with the fine print and what brokerages are saying this morning.
Well, thank you for that. It's been a positive commentary from the management. Brokerages have taken this up and have increased target prices as well, upgraded the stock, but revenue grew by 23%, led by volumes. Now, while the margins did dip in this particular quarter, led by raw material price impact, I think the street's looking more forward than backward at this point of time, and hence you could see a positive reaction come through also. What other aspect which is a big positive is the EV side of things, because the EV segment grew 3 times. The small commercial vehicle, which is the electric side of the portfolio, grew up 4 times on a lower base and continues to be a big stronger proposition for the company. Now, very importantly on Iveco, the company mentioned that they've received another approval and they will close this transaction by August end. That's a key timeline, and then there will be a tender open offer since Iveco is listed in the European stock exchanges. And the other factor that they've already taken a price hike of almost 4% over the last last 2 to 4 months, and hence the margins could be looking upward from here as well. But Nomura has actually gone ahead and upgraded the stock, increased the target price to 554 versus 402 earlier, and has raised the FY27 demand outlook for the MHCV to 8% versus 5% earlier. They've also mentioned that the light commercial vehicle looks strong, and Tata looks to be one of the bigger beneficiaries to be benefiting from the EV transition, especially in the truck space as well. Finally, they believe that Iveco could be a good booster in terms of margins also, because they will remove the high cost sourcing and exchange that with low cost over the next 2 to 3 quarters, and hence 2 to 3 years, and hence you could see a bigger play here. Novama has also increased the target price to 525 from 480, and they feel that the upward momentum for CV will continue, and that will be visible for numbers of Tata Motors CV as well. But I had a chance to speak to the management yesterday on the media call to ask about a very important transition of demand that they are seeing, especially for large fleet operators, and how that is driving the demand in this as well as the next year. Let's listen in to what Girish Wagh, the MD and CEO of the company, had to say.
I assume
it does remain strong, as we have seen in the month of July also, especially in the heavy trucks, heavy commercial vehicles. We see that large fleet owners are actively replacing the aging vehicles to capture better fuel economy, lower maintenance, and superior total cost of ownership of the current BS6 vehicles. And as I've also mentioned earlier, the vehicles replaced by the primary fleet owners are typically absorbed in the secondary transport market rather than being scrapped, and therefore it continues to be in the system. Very clearly, I think the demand momentum continues to be strong.
Okay, so that's Tata Motors. We're going to take a quick break. We're going to talk about Bharti Airtel and the telecom pack on the other side. But before we slip into that break, I came across these visuals, and guys, I found this really inspirational. That's why we're going to just show this before we go into this break. Global investor Ray Dalio is there in those visuals. He's celebrating his 77th birthday. He's partying inside the Ibiza Hyper Club. Up till 4 a.m.
When was the last time you did that, Tamanna?
That is exactly the point. Should you be waiting till 77 to really enjoy growing old?
I know Neeraj does that quite often.
At Ibiza Hyper.
I don't know about Ibiza.
No, till 4 o'clock in the morning.
Okay.
In Mumbai till 1 o'clock, yes.
Okay. No, so I just thought this was inspirational. I mean, amazing.
That's usually
amazing
when we wake
that.
up. I think that's...
Yeah. Okay, you could make the argument Ray Dalio doesn't need to wake up that early in the morning. But look at that, man. I just thought this was awesome.
100%.
So that could be your midweek inspiration. We'll take a very short break. We're coming back with all the top stocks that should be on your radar. Don't go away.
के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
All right, welcome back. The implied open might be showing a pretty muted, slightly boring start, but nothing boring about this next segment on the show. Parag Thakkar, Khushbora with us in the studio. I hope that Ray Dalio clip has gotten both of you charged up. Not going to ask you to break into a jig, but Khush, any excitement expected on the indices?
Navratri is around the corner, so I'm excited about that, plus the dance clip.
You're already going to your Garba moves.
Oh, absolutely, huh?
कब है?
पता नहीं, गणेश चतुर्थी के बाद होगी.
Festive season starts.
Festive season starts, exactly.
Best part of being in India.
Happy time, such a happy time. This is my favorite half of the year. I've said it again. I love this half. Lekin, by the way, I think Neeraj, the data that you put out, very interesting, and I'll tell you why. We've heard about stock picking and this being a stock pickers market. Conceptually we all understand, लेकिन डेटा के साथ वो चीज एक्चुअली दिखाना या प्रूव करना, I didn't think it could be done, but you did it, so kudos to you. Beautifully done. The fact that no one theme is working and still there is one segment which is completely diametrically opposite to the other one doing well, so kudos to you on that.
Thank you.
But that also proves one more thing, that in times like this, if only you had a couple of guys on the table, one who would give you like table thumping fundamental ideas, and the second one who would give you like momentum picks every week, that would be something, right?
Exactly. It would, yeah, definitely.
We have that.
You're not giving the compliments back like he's hoping to.
I said we have that.
There was such a long pause for you to then come in and say, oh wow.
No, it definitely would be. Yeah, sure. Absolutely.
No, but you know what? Actually, on a very serious note, this is exactly what has been working. LIC. I was just telling Parag bhai just before we got on air कि क्या चला है? मतलब ये टेबल थम्पिंग, आई नो व्हाई यू गाइस मेड दैट ग्राफिक, बिकॉज इनको सच्ची में टेबल थम्प कराते तो ये टूट जाता है, इतना टेबल थम्प कर रहे हैं आजकल और चल रहा है सब कुछ, राइट? सो गॉड टू यू पराग भाई ऑन दैट. And incidentally, I have a lot of updates on the weekly picks that we've been discussing. So we'll come to all of that. But yeah, I mean, God's grace that it has been working so far, and your theory is confirmed that it's really a bottom-up market. Now, as far as the indices go, look, we've been talking about 24,400 as that support zone. If that is broken, 24,250 on the downside. By the way, that happened yesterday. On an intraday basis, 24,400 was broken. 24,250 was almost touched. We saw a sharp rebound from lower levels. Right now, it's a range-bound move. My concern is not the Nifty right now. My concern is the SMID space. Look at what's happening. Look at the market breadth. It's fairly in favor of the declines. So that's where you still need to be a little cautious. I maintain this. Respect support zones. Respect stop losses. One interesting index which is shaping up well is the Bank Nifty. And that's largely because of the HDFC Bank. And I'll come to that when I do stock picks. But I think there's time to go long on Bank Nifty.
Yeah. Okay. Very quickly, if you can finish off the stock picks, because then we'll move on to the telecom conversation.
Okay, fair enough. So HDFC Bank is starting to shape up very well for multiple reasons. So it's a buy with 765 and 808 as your target, 699 as your stop loss. Remember, this is not a momentum pick, right? This is a positional bet. Could take a while to play out. But I know you guys love momentum picks. So here are the other two ones. Karnataka Bank and Artemis Medi. We've discussed these stocks in the past. For targets of 320 to 332 and stop loss at 302. Karnataka Bank is still a buy. Artemis Med 325, 336 and stop loss at 307. So these continue to be our picks. Updates on the weekly segment, I'll perhaps do it a little later.
Okay, all right. Let's talk about telecom and Bharti Airtel specifically. I don't think it had enough time to react in trade yesterday, but you saw a spike. And that's because it is rationalizing its prepaid tariffs. The company's withdrawn 4 plans, 299, 319, 649 and 799. The 349 plan now becomes the cheapest plan and the cheapest unlimited option, I should say. Airtel is not calling this a tariff hike. And analysts are talking about an increase in the average revenue per user, which, by the way, is industry leading at over 260 by as much as 2 to 5%. Let's talk about this in some more detail because it remains to be seen whether this will be followed by Vodafone Idea and Jio. Piyush Pandey, equity analyst at SVP Telecom Sector at Centrum, joining us this morning. Piyush, thanks so much for taking the time and good morning to you. First of all, it's not being called a tariff hike. Effectively, that's what it is, though, isn't it? When people will have to move out of existing plans below 300 and move to the 345.
Yeah, it is sort of effectively a tariff hike because some of the base plans have been removed and customers would now move to higher price plans. So effectively, it can drive ARPU improvement for Bharti Airtel, which has been the focus area for Bharti say over the last couple of quarters. Like so, I would say effectively tariff hike, but net impact would be say in the range of closer to 2%. Yeah.
And on the ARPU, okay. And is this the other question? Of course, Piyush, two questions. One, is it likely that the other two players will also do a similar change in the structure of what they offer? And two, is this a precursor to more hikes down the road?
See, most likely other two players like Vodafone Idea and Jio might follow Bharti Airtel in terms of rationalization of some of the prepaid plans, because even they also want to improve their ARPU. And it also looks like that we might see a broad-based tariff increase, say over the next, say 4 to 6 months, because the last tariff hike took place in July 24. So it has been almost like say 2 years, 2 months like. And broadly, a tariff hike has been happening in India, say every say 2 to 2.5 years. Like so, of course, a tariff hike is expected, and it also demonstrates the pricing power of Bharti Airtel, like sort of I would say.
Piyush, does it make Bharti Airtel a buy for you at this point? How are you looking at that stock versus a Vodafone?
See, Bharti remains a buy for us. For Bharti Airtel, apart from like say steady gain of customers, industry leading ARPU, plus good gain in terms of 4G and postpaid customers with a stable margin profile, their capex will moderate going ahead, and that will lead to good free cash flow generation. Plus, Africa is doing pretty well, and Indus Towers steady business. So I would say Bharti, I would say almost all parameters are improving consistently. So it remains a buy for us. For Vodafone Idea, last quarter was, of course, incrementally much better. They added customers, ARPU grew, but still they need to close their fundraise and ramp up their capex. And so I would say the task remains, I would say challenging, but not impossible for Vodafone Idea. And at the current valuations, they are trading at close to EV/EBITDA of almost 13 times on FY28. So valuation-wise, also not much upside. So Bharti remains a preferred pick, and we sort of are neutral on Vodafone Idea.
Thanks so much for that. Really appreciate your time this morning. And that's on telecom. And you know, it's interesting. One, it could be a trading call too, trading conversation too, because of the move that it had. But Parag Thakkar has been unequivocally bullish on Airtel. I would love to know what he makes of the move, not the stock move that happened, but the fundamental.
So simple fundamental rule. It's a bond which is giving you 6% free cash flow yield. It will compound at about 10%.
What about what they did yesterday?
Yeah, so it will result in 2% EBITDA increase in my view also.
2% EBITDA increase.
EBITDA increase. So logically, if you keep EBITDA same, the stock price should move up by 2%. To put it in a very simple language.
But is it moving towards a trend of higher EV EBITDA?
Directionally, it is positive. Directionally, that one effort has been done by Bharti Airtel to improve tariffs or ARPUs.
Do you expect ARPU to hit that 300 mark in FY27?
I don't expect that. So, as I've said in our show only, even without tariff hike, I like Bharti Airtel. Now, with some tariff hike, I would like it more. I have 6% in my portfolio and I'll continue to hold that because in my view, it is a business which is insulated from major worries around the world and it can give you, right now, for example, 6% free cash flow yield on FY28 basis, and this can compound at 10 to 15% depending upon tariff hikes and depending upon the Africa business also.
So, just if you pull up what Morgan Stanley is saying about it today, they are characterizing this move as nudging subscribers towards higher value or higher data packs, saying these changes could potentially drive an improvement of 8 to 12 rupees in average revenue per user on a gross basis. Does this also re-rate Vodafone for you, or you expect Vodafone to go for it next? Or you're looking at Vodafone entirely as a separate story?
Yeah, it's a separate story. It's a story which is in repair mode. Okay, and with great intentions of government and promoter himself also putting some money. I think, recently this quarter result was not that bad. Plus they got some 6,500 crore loan funding also. So I think it is on a repair mode. It will continue, and it will only get strengthened if there is a tariff hike.
Okay. Quickly going across to Somit for all the chatter from the dealing rooms this morning. Somit Sarkar joining in on what's heard on the street. Somit, what do you have on your plate?
The first stock on the list is Bandhan Bank. Now, dealers are indicating that there are buy flows on the large HNI desk here. They're expecting some positive news flow, some positive corporate announcement that could come in related to fundraise when it comes to Bandhan Bank. So keep an eye out for this counter in trade. Dr. Agarwal Health, in fact, we saw a big block deal happen yesterday, and we did mention that among the mutual funds it was ICICI, Pru and Invesco, and if you look at the bulk and block deal data, this comes out to be true, and along with this there were some other FII buyers as well. For Vodafone Idea, there were buy flows on the institutional desk. Dealers are indicating that a large FII was a seller here, but this selling is largely over for Vodafone Idea. For Glenmark Pharma, there are buy flows on the large HNI and the PMS desk. Dealers are expecting some out-licensing deal that could come in for one of its key drug, that is ISB 2301. So keep an eye out for Glenmark Pharma. And lastly, when it comes to Persistent Systems, there are sell flows on the large HNI and the PMS desk. Dealers expect weak earnings to come out from one of its recent acquisitions, that is Nagarro. The company will be reporting the numbers on Friday. So Persistent would be important to track here. And Jio Finance was part of a segment on August 3rd, but we did mention that there are buy flows and dealers are expecting some positive news flow related to fund infusion, and that has come out to be true. Yesterday, BofA has said that they will be putting in close to 20,000 crore rupees in one of the subsidiaries for around 50% stake in the subsidiary.
Okay, yeah, so some positive news for sure, but perhaps bigger than what dealers were also expecting, Somit. The BofA deal is a fairly big one. Okay.
ये नहीं पता था लोगों को.
ये नहीं पता था लोगों को, Somit, I would say. Okay, but Parag Thakkar, I want to talk to you about Tata Sons developments yesterday and how you think TCS will be impacted. Now you saw 4 to 5% downtick. And I mean, the question is that does this cloud continue over some of those group companies, and especially TCS, till you have clarity?
It might continue for a while, and it will provide opportunity to buy good Tata Group stocks. Of course, I have huge regard for Mr. Chandra, and I will really miss him because The moment he took over Tata Group, actually, that time I was in ICICI Pru and I bought Tata Consumer, Tata Power, Indian Hotels, and all those stocks. Those stocks made great money in that PMS because he brought some excellent talent from outside, and capital allocation was also excellent under his regime, at least in the companies which he could control, right? In some, for example, JLR fortunes he cannot control beyond a point, but at least Tata Consumer, Tata, those kind of, even for example, right now if you see Tata Motors CV business, which is now demerged, and JLR problem is there in Tata Motors PV business. But Tata Motors CV is doing very well, excellent.
But
yeah.
Parag bhai, I know that you're appreciative of the group and you've been, you've liked many of these stocks for many of these years, right? But having said that, there is a criticism that has been made, particularly over the last 2 to 3 years, that several entities within that cohort of stocks has underperformed. And the ultimately the person at the helm who strategizes for the group as a whole is to a certain extent responsible for that.
So I think in my view, that is my view, I'm just sharing my personal view, that most of the problems which happened were external or in nature and not related to what Mr. Chandra strategized. And what he did actually has gone unnoticed now, that how he turned around Tata Consumer from being a 5-year non-performer to become a 5-bagger. Or say, I would say Tata Power, which was after, if you remember, Tata Power was 35 rupees during COVID
No,
times.
but I don't think it's been unnoticed because it's shown in the stock prices.
Yeah, Indian Hotel, 75 to 750. So
frankly, we don't even know what are the reasons. Is it a non-performance? What are the issues? Whatever it is. My question to you is, will you buy TCS today?
Yeah, so TCS, I'll gradually buy. After this fall of 5%. I'm not bearish on the stock. I'll gradually buy.
But you don't seem ultra bullish on the stock either.
No, I'm saying that it might drop another 2, 3, 4%. That's why I don't want to give a table thumping buy today.
Okay.
But gradually I'll start buying after this fall.
Okay. Another important story that we should note is a proposal coming in from the Reserve Bank of India on transparent loan pricing norms with a cap on floating rate benchmarks. Sharad is here with more details and also what brokerages are saying on this. Sharad.
Well, largely this is what the industry parameters were there, especially when we talk about the Basel norms, and now slowly we are converging towards that. The floating rate loans will have benchmark resets and they should not exceed more than 3 months. The existing loans might migrate into the new framework. And remember, these are the draft guidelines which are open for public commentary until September 11th. But the brokerages have a mixed views on it, especially Jefferies. They have stated that the prime lending rate, the PLR as we call it, and the spread components, they can be set as per the internal policies of the banks, and this will of course restrict the repricing of the spread components going ahead. NBFCs, however, are not required to adhere to these guidelines. And to put things in perspective in a very simplified manner, this augurs well for PSU banks much more than the private banks, because they have already, most of the category guidelines are already being held by them. Citi, on the other hand, have stated that this impact would be likely manageable, and the ceiling will of course cap some yields for the lenders which are reliant on the high yield small tickets as well. And the complexity and the near-term compliance cost can be there, but it is still non-trivial. So the impact wouldn't be so much, but yes, it will be slightly positive for the PSU banks as compared to the private banks.
Got it. Okay. All right. Let's talk about a couple of stocks that are going to be in focus. Laurus Labs, Lenskart, Adani Energy Solutions, and Grow. They've all been added to the MSCI Standard Index as part of the 2026 August review, and a couple of stocks are making their way out as well. So I'm joining in to talk about the implications, perhaps on the back of this, with regard to the flows, Somit.
Yes, multiple stocks that we need to keep an eye out for on the back of the MSCI August index review that has come in. Firstly, to say that 4 stocks have been added to the standard index, while 3 of them are moving out. When it comes to weightage, India's weightage increases to 11.9% from 11.8%. And when it comes to the small cap index, 19 stocks are moving out while 13 stocks are getting in, but weightage is increasing to 22.2 from 22% earlier. But apart from only Adani Green, there are other Adani stocks also that we need to keep an eye out for, because MSCI has revised the free float for Adani Group stocks on the higher side, and hence there could be more inflows coming in other stocks as well. So which are those stocks that we need to keep an eye out for? Firstly, it's Laurus Labs, Lenskart, Adani Energy and Grow. These 4 stocks are getting included in the MSCI Standard Index, because of which there could be inflows of anywhere between 256 to 598 million US dollar. On the flip side, there is Balkrishna Industries, SBI Cards and Astral. These stocks are moving out, because of which there could be outflow of anywhere between 138 to 169 million US dollars in these counters. Now, a host of stocks that remain in focus on the back of increase in weightage. Eternal, to be very specific here, they are seeing the highest increase in weightage, because of which there could be inflows of close to 674 million US dollar. Apart from that, there is Adani Enterprises and Adani Ports, which could see inflow of anywhere between 77 to 202 million US dollar. Then there is JSW Energy, Adani Power, GMR Airports and Swiggy, which could see inflows ranging anywhere between 13 to 34 million US dollar. There are a few other stocks that would also see a lower weightage on the MSCI Standard Index, and here it's Reliance Industries which could get most impacted because of the lower weightage. They could see an outflow of nearly 523 million US dollars. And apart from that, there is Jio Finance, Indian Hotels, Aditya Birla Capital and Colgate, which could see outflow of anywhere between 16 to 61 million US dollars. So, but do remember that these changes will be effective from the 1st of September, and these outflows and inflows will happen on August 31st.
Thanks, Sumit, for that. Remember, a lot of stocks, but the headline ones are the ones that came in the first plate to my mind. I'll talk to both our guests on that. First on the exits, right, and the ones that will move out. And one of them is Astral, which actually came out with a decent set of numbers, simply because if you look at it on a performance basis of what Astral did, not the reported numbers alone, I think relative to peers, Astral probably had a fairly decent performance, right? Parag Thakkar, you look at this closely, I know, and that's why I'm coming to you, because pipes volume was flat YOY, but best in the industry, and EBITDA per ton was also the highest in the industry, but headline margins came off, 18 versus 22%.
Correct.
What's your view here?
So my view is this, see, it's a quality company trading at slightly expensive valuations. So if there is a forced selling due to this MSCI deletion, I would look to enter into this stock again. Once I have booked profit, but now I can again re-enter, especially after hearing the management commentary that July month was very good, 40% volume growth, and their adhesives, paints, bathware, all businesses are doing well.
But Parag, sorry, just a follow-up there. Too volatile, the PVC prices, because you look at the stock, it's doing precious little. It's not able to eclipse some highs, and it's coming off very rapidly whenever the PVC adverse news comes in.
Yes. So right now that duty has come, right? That protection duty has come. So that will reduce the volatility. And that's why the destocking got over in June, and in July there was a huge rebound in demand. So I think now that volatility will stabilize and it will grow at 10 to 15% volume growth, which it was doing earlier. In pipe business, I'm saying.
Okay. And Kush Bora, actually it's 9 a.m., so maybe mark 2. But Kush Bora, very quickly, two names which are getting some flows, Lenskart and Laurus, presumably, or Grow also. Any trades on any of these?
So look, I am a big fan of strength, but there is a point in time when you say, "ठीक है, थोड़ा रुक के लेंगे." Laurus is at that level. Okay. It's been going, great guns even from elevated levels, but it's just far too overheated on daily, especially on the weekly setup. Just does not give me comfort to buy. So if you have, continue to ride the momentum, keep your stop losses at about 1700, 1750. I don't think this downtick will perhaps manifest at open, but around those levels, don't buy afresh. Lenskart is something that, yes, you can consider a very, very steady uptake on this one. So yes, I think Lenskart is something that you can keep adding now, even on declines. So more constructive on Lenskart. Laurus, yes, but on declines.
Okay, first ticks, just want to quickly go through them. Jio Financial Services up 10% this morning on the Bank of America news. We're going to get a view from Kush and Parag on Jio Financial Services, as well as on the RBI guidelines on floating rates. Sun TV Network, good set of numbers. Media company which is done well this quarter. Macrotech Developers is doing okay. CEAT, Nestle, some of the others. So your opening is looking like it might be fine. Remember, just first minute right now. So off the pre-open session, so you have to watch out. Alchem Laboratories, Laurus Labs, among those which are seeing some pain points. But I want to quickly go across to Mahima to talk about Grasim. Birla Opus is in focus on the back of its expansion plan and dealership network distribution. Mahima, I assume the trigger is details that have been released by the management on what their plans are?
Yes, absolutely, Tamanna. And how, so far the progress has been for for Birla Opus's business. So, they've gone ahead and said that in terms of the presence that they have is expanded now to 12,100 towns, which was just 11,500 in March 26. So, strong expansion is what they've done this quarter. 55,000 plus dealers billed at least once versus 50,000 in March 26. So, that has also gone up. In terms of the exclusive franchisee outlets across 800 towns, that has now crossed 1,450 plus number. And in terms of Q1 paint losses, that was lower, of course, on account of lower cost inventory and lower ad spends as well. But going forward in Q2, margins will likely be under pressure on account of higher cost inventory and higher ad spends as well. Higher ad spends because Birla Opus is still at a very nascent stage and trying to expand in terms of its reach. And Q1 price hike is likely to partially offset cost pressures, and focus still remains on aggressive distribution and market share gains is what the management commentary is indicating. Now, just a read through for what this means for other paint companies, because one, Birla Opus is adopting aggressive expansion and market share focus. On the other hand, there is Asian Paints, which is of course defending its leadership amidst the competition that we're seeing. There's Berger Paints, which is focusing purely on volume growth, and there's JSW Deluxe, which is of course a very new player in the paint space, trying to make its mark. So that will be an interesting wait and watch as to how they expand their business. But I think key monitorable in the paint business would be how market share gains are being attracted by these competitors, dealer additions, trade discounts, ad spends, and of course how they're able to maintain their gross margins despite of the crude volatility that we've seen. So this is the overall view of what the Birla Opus commentary coming in from Grasim indicates for the entire sector.
All right, thanks so much, Mahima, for that. It's all fast and furious this morning. Lots of news to talk about. Shrikant Chauhan, Kotak Securities, joining us this morning. Shrikant, very good morning to you, and thanks so much for taking the time. What is the index view at this point? Is it positive, or are we likely to stay range bound, and what stocks do you like?
Good morning, Alex. Good morning, everyone. So for index, our view is positive. We are of the view that the market has completed its first leg of correction at 24,250, 200 sort of levels. And from there, we saw quick reversal. Today also, after opening lower, we are of the view that we should look for taking some long bets. With the stop loss at 24,200, we are expecting market to move towards the levels of 24,650, 700 again. But on the dismissal of 24,800, we can expect short covering sort of trend. So for the time being, we are expecting market to remain in a range, but already the market has reached its first support, so we can expect rebound.
Any top picks this morning?
Yeah, Tamanna. So I would like to go with HAL, Hindustan Aeronautics, which is around 5,000 sort of levels. There we are expecting 5250, 5350 sort of levels. We are of the view that on long-term charts, the stock has given very strong breakout, and on every dip or in every short-term breakout, we should look for taking some long bets. Yesterday, the company has reported strong number. Based on that also, there is a technical breakout. So it's a buy at current levels with a stop loss at 4,900. The other stock on which we are bullish is Grow. There also today some news, but at the same time, if we consider its overall technical pattern, then stock has corrected to its important support level of 195, 197. And from here again, the stock can move towards 210, 215. So it's a buy at current levels with a very close by stop loss at 193.
All right, thanks so much, Shrikant, for that. Nuvama Wealth is the focus point for the big brokerage call of the day, and Sharad is joining in to tell you what UBS is saying on that company. Sharad, morning.
Good morning, Alex. And after a long time, you're seeing brokerages turning bullish on Nuvama Wealth. Interestingly, UBS has initiated a buy rating and the target price is almost 2,095 rupees per share. Now, this company itself is a structurally wealth compounder. That's what UBS has stated. And strong net new money has started coming in, especially in their financials. There's an improving earnings quality, which has led to strong annual recurring revenue, the ARR function, as we call it. And that's the mix where the shift is happening and going towards the higher margin products. Operating leverage is supported by scale, and productivity is also there, especially on the tech and the operating leverage front. The bullishness is coming in from UBS, and that's why I've taken this for our brokerage of the day.
Sharad, very interesting. And again, in that space or cohort of capital markets, wealth management, which is probably a high growth area. Parag Thakkar likes 361, but Nuvama Wealth out there has done very well, right? Has done very well in the results.
It's a great business to be.
Exactly.
Great business to own.
Yeah. So if you're in the top 4 or 5 names out there in this pocket, you probably will do well. No, I'm probably in that list as well. But the ones which are really moving, and Shrikant, John, I wanted your view on stocks which did very well yesterday and within that precision manufacturing space. Sansera, there was Happy Forgings, there was Craftsman Auto. All of them had a big sharp up move in trade yesterday. Are any of these good for a further trade?
So I think, see, stock-specific activity is definitely there in the market. But in that, the names that you have mentioned, most of these stocks have done really well. In that specifically, Craftsman Automation, which is currently around 10,500 sort of levels. Very recently, the stock has crossed its important level at 9,800. And since then, we are seeing consistent upward activity. Based on its overall technical pattern of last, let's say, even 4-5 years, it is very clear that the stock is into strong uptrend, and I can say the stock can move towards the levels of 12,000, 12,500. That's the overall view on Craftsman. We also like Sansera. There also we are bullish, and I think we need to keep a close watch on like stock specific activity in this market, and I think that can do really well.
We have just about 6 minutes to go for opening, and we want to cover so many things. So we're going to go to a rapid fire format with Parag Thakkar. Parag bhai, we love your detailed explanations, but today you have to compress it. 3 words to a sentence max. Geo Finance.
I have it. 3 words.
Okay, this is getting great. Lenskart.
I have it. And I like it.
Okay, I have it and I like it. Okay, we can do 6 words, it's fine. The new RBI guidelines on floating rates.
So April 29 is the transition date, so minimal impact.
Okay, Grasim.
Great value, deep value and good proxy on India's growth story.
Okay, and what about Astral?
Buy on dip.
Okay, that is brilliant.
Wow.
I think you have aced this. I think a round of applause.
I must say that.
Coffee. Tell Ramana, coffee mangao.
Till this time, I would have said Kush is the ace of rapid fire, but he has lost his throne.
You have been
happily petition to get Parag bhai on Ask Profits.
Sure, everybody would love that.
Okay.
Thanks.
Okay, so Shrikant, I'm going to come to you on a question on TCS and some of the Tata Group stocks. Are you expecting a recovery today, and would you have any positional view?
Yeah, I think most of these stocks have corrected yesterday to their important support levels, and from there we saw some recovery towards the end. But in that specifically, we like Indian Hotels and Tata Motors commercial vehicle. I think these are the 2 stocks on which we can keep a close watch. For Tata Motors commercial vehicle, we are expecting stock to move towards 490, 500 sort of levels. For Indian Hotels, again, the stock can move towards the levels of 775, 800. For TCS, I'm not very much sure, but I think they're also close to 2200. The stock is having very good support. And also I'm of the view that IT stocks have the trend of IT companies have stabilized. So we can expect recovery after hitting important support levels. So there also we are expecting some buying interest if it falls to 2200, 2250.
And thanks for that. A lot of stocks might react. So since it's 9:08 already done, I want to see what Tenneco Clean Air, for example, where it's some serious fund buying yesterday, is that reacting at all? No, not really. Bajaj Products got a 600 crore order. Is that stock reacting? And then, of course, you look at the ones with numbers. Bajaj is up just 2%, but Lenskart, there is strength in Motisans Jewelers, there was strength in Vadilal Industries. Very good numbers by some of these. Motisans up 3%, Vadilal 4.7%, and yes, it was a quarter which would actually be strong because of the summer. So yeah, some pretty good going there. We didn't talk about Lenskart Kush as a trading call, did we?
No, we didn't.
Can you look at that? Limited data maybe, but still?
No. It's actually a good buy. Yeah, it's a good buy. Lenskart is a good buy. Has seen enough momentum, and it's not been a vertical rise, so to speak, right? So yeah, I mean, you can accumulate it. I mean, if it opens 3.5% today, then perhaps slightly overstressed from a near-term perspective. But then if you again get it around 585 odd levels, it's a good buy. I think you should accumulate Lenskart on every decline.
Okay, well, accumulate Lenskart on declines. Parag Thakkar, from amongst the result names that have come out in the last 3 or 4 days, which one has stood out for you? Which is not a buy on dip, but you think that it's very good results and can be considered?
So we spoke about SBI and Sundaram Fasteners, right? So that I'll not talk about now. Sansera was a very good result, but stock is now 60 times if you annualize this quarter's earning.
Okay.
So your theme of that precision thing is picking up well, across the names I've seen, Sansera, KRN, all those stocks are reporting excellent numbers.
But difficult to buy a KRN, right? At 90
because
times.
all that. So if you annualize this quarter's earnings, I've seen everybody is trading at 60 times. So that is a little bit too much for me, at least.
What did you make of Aditya Infotech?
Aditya Infotech, I have not seen the result.
Okay.
Yeah.
KRN up 5%.
It's at upper circuit.
Yeah, KRN in Aditya Infotech also at 5%. So some numbers doing very well. Did you look at Polycab in any
So Polycab continues
detail?
to do well, and this wire and cable space continues to do well. RR Cable, Polycab,
Finolex also
KEI.
decent, yeah.
Finolex Cable
Finolex
what a
Cable was
number.
fabulous number. Yeah.
Okay.
It's finally, I think it might finally be losing ground today.
Yeah, because it has gone up too much now.
Yeah.
Okay, what other ideas this morning can we look at, Kush Bora? What is top of mind for you?
You know, something very interesting and something that Neeraj mentioned, Vadilal Industries.
Yeah.
Phenomenal. And
The
I'm not
numbers
talking
were very good.
that, plus look at the kind of moves that it's made over the last few. Now, okay, caveat here, right? This stock has a tendency of dropping 20, 30, 40%. तो buy करके hold किया upper levels पे, फिर नीचे आया तो panic मत करना, because it has this tendency of then rebounding very smartly. A very interesting find, I must say, right? So I will keep this on my radar. I wouldn't suggest a buy just yet, because obviously, I've just like kind of discovered this and it's already at overheated territories. But something that I will definitely keep on my radar from, like a multi-bagger kind of a return perspective. So that's something that you should keep an eye out on for sure.
I, for a second, thought when Kush said caveat here, he's going to say, this is my favorite ice cream.
Same thing.
95% up in profits this time. And it's not even peak ice cream season, is it? Or I don't know, maybe
it was.
It was hot. April, May, June. So yes, okay, it was hot. And of course, this was ice cream of choice. 20 seconds to go for the markets to open this Thursday morning. You're showing a flat start as far as your implied is concerned. But is the action really in individual stocks as we start up here? Your fast rates coming in this Thursday morning as we have the opening bell. Well, let's pull up. Okay, completely flat. We're staying above, close to the 24,400 mark. That's important. That's going to be an important one to look at. Your advanced decline ratio at first tick is looking good. 687 declines to 1101 advances, but nothing really to power the Nifty through. 0.29% down right now. The Sensex also completely flat. Bank Nifty seeing a bit of a tumble, 0.5% down. I want to pull up the Bank Nifty if we can, and I don't know if we still have data this early on its internals, but that's one to look at. So the first comment that we had on some of those RBI guidelines was minimal impact, but let's wait and see what really happens there. BOB, ICICI Bank, Axis Bank showing some weakness over there. Let's look at Nifty IT if you can very quickly before we get to the heat map for the Nifty. Nifty IT 0.64% down. So both banks and IT companies not really supporting today. That's why you're seeing that 0.3% dip on the Nifty. Let's pull up the heat map if we can and see what's on top of charts this morning. Is JFS there? Yes, Geo Financial 2.5% up after Bank of America has checked in. Bharti Airtel has locked off its cheapest plan. And that's edging towards higher average revenues per user. Apollo Hospitals, good set of numbers. You're going to be hearing from the management shortly. Adani Ent doing well this morning, as is Shriram Finance. But tepid, I would say, on the Nifty. Grasim, despite very, very, I would say, positive views down there. So is Hindalco. But this could also be on the royalty scheme for that entire group. So that's one to look out for. Infosys, Reliance Industries not really firing this morning, and nor is Titan. Let me look at Nifty contributors very quickly before we get Alex in on the broader markets and what's happening there. RIL, the big drag there, right? About 25 points down, pulling down the Nifty. So is ICICI Bank. So between RIL, ICICI Bank and Infosys, you have this 112 or 100 odd point downpull on the Nifty, which is why you're seeing it negative right now. I think the broader markets also is where some enthusiasm will show, but more stock specific.
Yeah, and what is interesting to me, Tamanna, is that the broader market gauges have been pretty narrow and range bound as well. So there is, and what Kush was speaking about at the start of the week, signs of fatigue perhaps creeping in the broader markets as well. We'll ask him about that in just a bit. But 0.1% or so lower for the mid-cap index, just about 0.2% for the small cap index. This is really a trend that we've seen over the course of the last 6 or 7 sessions. Now, take a look at the heat map for the sectors as well, just to drive home that point, and you will see that there's a fair bit of red on the screen. The media index is up about 0.7%, couple of those stocks reacting to numbers. Auto is up as much as 0.2% or so, and consumption is just about flat. On the bottom end of the spectrum, the worst performer is down 0.75%, and that is the Nifty Pharma. Nifty IT also cooling off just a tad bit. Realty, PSU Banks cooling off from yesterday's up move of close to 2% for the index, as a result of which the Nifty Bank is losing about 0.5% or so. But let's talk about individual stocks. If there's lackluster moves for the index, that's not true for individual stocks. Let's take a look at the earnings reactions. And front and center, you have Tata Motors CV. It's up as much as 3%. It has beaten estimates and the numbers look particularly good. This was expected based on the volume picture, and that is borne out in the numbers. Lenskart, solid set of numbers here. And a turnaround quarter for both Lenskart as well as Vadilal. Vadilal so far the biggest gainer, up as much as 12% or thereabouts. Astral, volumes and margins outperform peers. The stock is up 6%. KR and Heat likely at upper circuit. It is, in fact, at upper circuit. Revenue is doubled and the numbers look particularly good. EBITDA margin at over 19%. One of their plants started contributing, and so that could well be the effect of capacity expansion coming through for KR and Heat. Gujarat Pipavav, in a pretty tough operating environment, they've actually done better than expected, and so the stock is up as much as 2%. Aditya Infotech, let's pull that one up. Strong traction is being seen. Okay, it's just about 1% or so higher. By the way, in the CP Plus brand, Bliss GVS Pharma, the margins are up as much as 680% basis points. This is also at upper circuit, so watch out for this one. And finally, Sansera Engineering and Petronet LNG. We'll look at these individually. Sansera is losing ground, and Petronet LNG up about 0.8%. In terms of weak numbers, you have Vartec Wabag. It's not executed very well. So too HG Infra, losing as much as 3.7%, and EMS Limited, weak execution here as well, over 3%. So a couple of underperformers. Other stocks in focus, Geo Financial Services, it should be up about, it was up about 2% or thereabouts, cooled off just a tad bit. Its agreement with Bank of America in focus. Bajaj Projects, GE Power on the back of order wins, up and about. And finally, TrueAlt Bioenergy, there's promoter buying, not doing too much. And last stock on the list, GNA Axel, is promoter selling, again not doing too much. So a lot of individual stocks, Neeraj, that are reacting very, very sharply today.
Astral is at the top of the list, by the way. There's no correction. Parakar was hoping that agar correction aayega to buy karenge. There's no correction. Top of the list because industry leading performance out there by that one. It's the top of the pile of Nifty 500. Hindustan Copper is doing well, up about 4%. So that stock seems to be moving well. Adani Energy Solutions on that whole piece around the inclusion in the MSCI, and I think that is making its way at the top of the pile too. And interestingly, a couple of other names include a Kalyan Jewellers and a Nuama, by the way, on that UBS note, seems to be doing okay. So good start for some of these names. Kush Bora, opening thoughts, anything that stands out for you?
मजा नहीं आ रहा है वाला feeling.
It's like that long pause.
मार्केट में या खुद के पोर्टफोलियो?
मार्केट में बाबा. मार्केट में खुद का पोर्टफोलियो तो चलते रहेगा. मार्केट में 7, if you count today, 8 sessions of lower high formations on the Nifty. Is it really so bad? Okay. We did speak about how this mid segment is overheated. There are signs of divergences, this, that, everything. And when you go right on that, it's not a good feeling. So first thing that, right? The indices, the mid cap and the small cap indices are not true representatives of what's happening, under the hood, because your portfolios might still be reeling. So I want to see some sort of a rebound on the Nifty at the very least to take out the previous day's high to break this chain and break this momentum. That's not happening. So right now we looked at 24,400 as the first support zone. Yesterday that was broken. Today also we're under it. 24,250 remains a crucial juncture. Respect the support and stop losses. That's all I can say right now.
Okay, individual stocks and quite a few of them reacting therefore. So let me ask on something like a Tata Motors CV. Shrikant Chauhan, what is the view on this stock? It started positively. It's up about 4.5%. Would you hold on if you had it? Would you buy right now? You're on mute.
Correct. So, yeah, absolutely. This particular stock is consistently forming higher top, higher bottom series. Also, if we consider its overall pace of recovery from the lower levels, 300, 350, then it is very clear that based on its technical formation, the stock can even cross the level of 500. So even at this price, it's a buy because overall auto sector is like doing better versus other sectors. And I think the way there is activity and the way they have reported their numbers, I'm of the view that this particular sector is going to do well, at least for next 1 or 2 months. So it's a buy at current levels, more on dips, of course, because today we are seeing gap up opening. But broadly, I'm of the view that the stock is heading for the levels of 500 plus.
Plus on the cards for Tata Motors CV. All right, we'll circle back to a few of the other names, but meanwhile, let's turn to an interesting story. Aditya Birla Group companies will be paying brand royalty from June of 2026, subject to a cap. Grasim is likely to see the biggest earnings impact, and Somit is here to tell you more about that. Somit, what are the details here?
Well, if you look at all the Aditya Birla Group companies, be it Grasim, Hindalco, Ultratech, Aditya Birla Capital, all are trading down in trade, and this is after the comment that has come in from Himanshu Kapania, the MD of Grasim. Now, on the conference call, he clearly said that all the subsidiaries will pay as a brand value under the line of their own businesses, whether it is AB Renewables, whether it is Aditya Birla Capital, whether it is Ultratech, all will be paying their own brand royalty. Grasim will also pay the brand royalty based on the standalone business. And what is this brand royalty that they will be paying? Well, they will be paying close to 0.25% of the top line, and the amount is capped at around 225 crore rupees, and this will be applicable from the 1st of June 2026. So what we have tried to do here is we have tried to see the impact that could come in on individual of the company. For Hindalco, if you look at the royalty amount would be capped at close to 225 crore rupees, which is around 2% of its last 12 months profit. For Ultratech, the amount would be capped at around 225 crore, which is nearly 3% of its last 12-month profits. For AB Capital, the amount will be, the royalty amount could be close to around 120 odd crore rupees, which is around 3% of its last 12-month profit. While for Grasim, that would see the highest impact. The royalty amount could be close to 109 crore rupees, which is nearly 15% of its last 12-month profits. And that is the reason why Grasim is trading down the most. It had fallen as much as 3% at one point of time, because this royalty of 0.25% would impact the company's profitability the most among the other fours.
All right. Important update there. Thanks so much for that, Somit. Parag bhai, you track this pretty closely, and so therefore, what do you make of it, the earnings impact?
So basically 225 crore cap on each entity is a good thing. Of course, I would have loved that if they would not have done this. But and I'm a holder of these companies, so as a shareholder, I feel little bit worried, but they are capped. And if you see, for example, Hindalco's last year's consolidated EBITDA was 38,000 crores, right? So basically PAT was around 20,000 crores. So 225 crore is hardly 1%. So Grasim standalone, as Somit was pointing out, that works out to be a higher percentage of their net profit. But Grasim major value comes from their stake in Ultratech and AB Capital. Of course, standalone is now strengthening. So I would, so if there is a disproportionate reaction in a stock like Grasim, I would welcome it as a buying opportunity.
No, but you just directionally, what the company is trying to do with with the royalty rule or the direction that they've given. As a shareholder, how do you look at it?
So I'm slightly disturbed, and I also would like to have a dialogue with them. I'm saying it openly here. Yeah. But I would say that what was the reason? Right. What was the reason to do that? But I would say that there must be some valid reason. I have been tracking this group since long. And I like many of these companies like Grasim, Hindalco's of the world, and I own them also in the portfolios, and I would like to buy them if they're correct, because I feel the way they have capped it. And another thing in the Grasim's results, which they've told is that net debt to EBITDA will not cross 2x, which is another big positive in terms of prudence. So that I would appreciate them also. I would say that any disproportionate fall due to this kind of a news will be a buying opportunity in stocks like Grasim, for example.
Shrikant, on charts, any of the group companies, and let's start off with Grasim.
Yeah, for Grasim, we were also bullish based on its technical pattern, but today the stock has corrected back to its range resistance level around 3250, 3300, 3250, 3200 sort of levels. The stock is having support, but it is better if we see any reversal pattern, then only we can go for it. But in that specifically, we like Aditya Birla Capital. There we are bullish. Also, we like Aditya Birla AMC. I think these are the stocks which can do really well in the near future.
Okay. Well, and all of these stocks seem to be in the right space, at least at what levels you buy, etc. is all your call. Okay, very quickly. Astral, top gainer on the BSE 500. Puneet is here with the details of the results. Puneet.
It's definitely a lot more than the numbers. It's the commentary that's driving the stock today as well, because in this particular quarter, you've seen the raw material PVC as well as polymer prices shoot up through the roof. So volumes for the industry is down 10%. For Astral, it's flat. So they've had market share gains in a tough quarter, and that's one of the bigger positive points as well. They've also said that value growth, which is because of raw material price impact, will be in the low single to high double digits. So what you could see, it could be in high single to low double digits, pardon me on that, which will also lead to a higher revenue growth in this particular quarter. So overall, analysts are estimating a 19 to 20% kind of revenue growth, even if volumes are a little impacted in this quarter. And hence you could see, that positivity continue for Astral in the near term. What also finally is important is that they are anticipating in terms of margins for the adhesives business at 15% and almost 16 to 18% margins from the plumbing business as well. So the profitability will continue, and I think that's one of the positive points that UBS as well as Citi have picked up. They have a target price for UBS specifically at 1950 rupees per share, where they believe Astral's decentralized manufacturing is one of the key positive points for them, and they believe that this will lead to superior profitability going forward. For Citi as well, a 1900 rupees target price for Astral, and they feel that management of course remains confident, but they should lead to margin expansion going into FY27 as well as 28, since they are also doing backward integration. So multiple key positives, and that's reflected on the stock today.
So let's take a check on the charts. Astral up about 7% or thereabouts, 1563 Kush. Would you initiate right now? Would you hold? Would you take money off the table? What's the call?
I'd take money off the table. Astral for the last 18 months or thereabouts has been a range play, 1600, 1625 on the upside, and then on the downside you've got 1250, 1300 as the support. So now obviously closer to that upper end of the range, you want to take money off the table. Again, closer to 1300 or thereabouts, perhaps even 1350 with a favorable risk reward ratios where you want to enter. So unless it convincingly breaks above 1625, 1650, I think this range play could continue. At this level, I would take some money off the table.
Okay, take some money off the table. Gentlemen, all three of you, thanks so much for joining in, giving us your perspective. Really appreciate your time. Because the markets have done so well and there is some bit of uncertainty, is it time to take some money off the table from India as well? Or is the party just getting started simply because the result season has looked so strong? Ajay Srivastava, MD of Dimensions Corporate Finance Services, calls a spade a spade. Johnson right now to talk about how he thinks about it. Ajay, great having you. Great jacket, by the way.
Good morning. Thank you. Thank you so much, sir.
Good morning. And how are you viewing the market? Because there has been a bit of a run at the mid end of the market for sure, even as the Nifty may have maybe just gained a marginally. But there is also seemingly some fatigue, as expert technical people tell us, in the last few days.
You know, unfortunately, I don't look at Nifty at all because I don't, have many of the Nifty 50 stocks. I don't know, fortunately, but I don't understand Nifty because, those stocks are not my domain at this point of time. I've not been buying them. Maybe one or two stocks out of the top 50 we may have. So, so I think for an investor standpoint, you need to look at segments where India is strong, where we are committed, long-term moats in the businesses. And those companies have done fine. If you look at whether Indian commodity companies, whether it is India's pharma CDMO companies, auto ancillaries, I think they've done fine. So I think most investors should kind of, who are non-institutional investors, look at stocks, man. Why are you worried about Nifty? Nifty 50 is gone. And I think you need to hear the word from Jantar Mantar said that the old order is over. The new order has taken over. Let's go to the mid cap. Let's go to the small cap. Those are the ones where the action is. And India is strong in many areas. So, Nifty 50 depresses me sometime, but I'm fine. I think portfolios are doing well. Companies are doing well in India in most of the segments, and therefore no need to despair at all.
Okay. No, so I like that line, no need to despair at all. Good morning, Ajay. Tamanna here.
Good morning, Tamanna.
So what is giving you that optimism when you say new kids on the block, the new order? Is it some of the results that we've seen in the mid-cap and larger, broader space?
Oh, yes. Including the commodities. Because India is deficient in commodities, where rupee dollar is where it is. Commodities have done phenomenally well. Okay, all the new kids on the block, they've by and large performed quite decently, if you ask me. So there is India, which is commodity driven. There is India, which is, I'm not saying new kids on the block, but the businesses, right? Look at the EV business. That's exploding like nobody's thinking about it. So, just not look at companies, but businesses. So if you're not in the EV space or you're not invested there, I think you lost out a lot of money both in auto ancillaries and autos. Same thing is the new age stocks. They've done reasonably well, if you ask me, given the constraints and all the news, etc. They're doing reasonably well. Give them time, they'll do better. So I think you go look at the new listings, look at the new CDMO listings. They've done fantastically well. India is great. So I think, it's not just about when I say new age means the old legacy guys sitting with us big fat bellies. That's over. The era is over of those cement and steel and all those things. That's over. There's so much more happening in this country and abroad that you just need to move to new segments of market, industries and people and promoters.
Yeah, I love how descriptive you are. Old legacy guys with big bellies. Some would say that these big bellies are the safer ones, right?
Well, that's I don't want to go there, but that's a popular myth that, old big bellies are loved by some segment of the world population. But I think by and large, so I think bellies are good for that purpose, no other purpose, not in the boardroom.
Okay, all right. Yeah, so you don't need to have genial, laughing, big-bellied individuals. All right, I get your point. But having said that, let me ask you about a few pockets then, Ajay. Right? Let's talk, for example, about precision engineering. Let's talk about the value chain for oil and gas exploration and production. Because you've seen a few of these companies, say, for example, your Deep Industries, Man Industries. These are companies that are relatively small, sub 5,000 crore in the case of Man Industries. What a good set of numbers. So you have a few pockets where there are themes that are playing out that are not necessarily overly spoken about. Would you agree?
Oh, yes, certainly. You're a smart guy, man. You picked up stuff which nobody else talks about it. But yeah, you're right. Engineering, we are strong at the end of the day. Our core is strong. We got a good manpower right through the chain of engineering. Doesn't matter, talking of marine, offshore engineering, you're talking of engineering services, you're talking of making turbines, you're talking of, you name the engineering segment. And India is really strong because we produced so much talent in engineering side that we are really good at it at the end of the day. And I think that's a great segment. And same goes for electricals. If you look at the electrical industry, it's done gangbusters absolutely because India's energy need expands. The suppliers into the segment, they are doing extremely well. P's are very high, I'll admit to that one. But then you got to get on the bandwagon sometime. It's like a 10-year runway for most of these companies. If, you got to have big data centers in India, you got to expand, you got to have battery storage capacities. You need that equipment, the core behind it, to be put in place first. And India doesn't have so many companies, but those companies are raking it like nobody. So apart from engineering, I think electrical energy supplying into the grids, transmission, electric storage, fantastic run because they have a moat, is technology. And they have, an order book which is 10 years down. You can see a clear runway. And they don't get affected by a war or something. Somebody goes, gunning for somebody in the world. India will still need them. So I think that's why I said there are great segments in India unspoken about. Too much focus goes to the banking sector at this point in time and the large behemoths who do nothing. And therefore, investors miss out with this, just little, when I said despair, little, when they see Nifty and say, oh my God, it's not gone up in 3 years. What's going to happen to equity? Guys, nothing going to happen to equity. We are doing fine. Lots of new segments. And listen to this channel. He'll give you good ideas as well.
So that's the endorsement we need to make our morning, Ajay. But okay, so for a lot of investors, they look at the Nifty because it's simple, it seems safer, it's an easier investment strategy to have. What should be the alternative for others who now, if you're saying don't look at the Nifty and think that, oh, my portfolio is not doing great?
Tamanna, you tell me who invested in Nifty 50 stocks? Mutual fund, large caps, maybe institution. I don't know how many people who come to your channel or how many people you interact personally or your own portfolios do you invest in the Nifty 50 stocks? Maybe very few. So therefore, if you invest in very few stocks, why monitor that? I think a good place to be is pick out your segments where India is strong and see whether you are entering those segments at various correction points and you got a portfolio in those industries and segments. Luckily, and also so many restructuring stories unfolding. You just saw I'm invested, so disclosure, but you saw the Vedanta story emerging. It's been a mega blaster absolutely from the day one till now because he's got moat, he's got commodity. India's restructuring stories have been tremendous. The demergers given tremendous value. So I think focus on demergers, focus where Ps are putting in big money. You just saw Gold Loan Company, moment from the time P announced the investment, till the time today, you got a 40-50% return. You saw an investment by a PE fund in a pharma company. They bought it out from the time they announced it. And you could have bought it very close to that. There are 40-50% returns. So I think follow good quality leaders in the industry, the good quality PE funds, good quality venture capital fund, where their money is going, follow them and stay with them. They monitor the companies. They look after the management. They ensure reward matrix is done. That is why you see the Tatas don't perform at all. Because there's no nexus between reward to employees versus their performance. So they will never perform. You saw the whole group is underperformed Nifty, forget anything else. So except one company which has done absolutely wonders, that's been a historic it was born out of Bangalore. That's why to say that, listen, we are separate. But therefore, follow financial leaders and you'll be fine, absolutely.
Wow, what gems from Ajay Srivastav this morning. Ajay, I wish we could speak for a longer time, but I have to go to the Apollo Hospitals interview. Thank you so much, and we'd love to invite you back.
You have a wonderful day. Thank you so much, ma'am.
Have a longer conversation. But let's turn focus to Apollo Hospitals, and Hirul is there with that conversation and all of the details.
Thank you, Tamanna, for that as well. A very interesting set of numbers is what we've seen because strong quarter with growth across hospitals, digital health, and retail healthcare business as well. In fact, to talk to us more about what is the roadmap going to look like ahead, Sunita Reddy, Managing Director of Apollo Hospitals, joins in. Welcome to the show, ma'am. Always a pleasure to speak to you. First up, congratulations on the strong numbers because a 21% revenue growth. PAT has seen a growth of 34%. So what have been the biggest drivers of this kind of outperformance and how much of it has come in through volume growth versus pricing improvement?
So what have been the drivers of growth? In the hospital space, we've had revenue of 3,562 crores, a growth of 22%. Of this, 13% is volume. And the balance is also in the OPs, we grew by 10%. There was an ARPP growth of about 11% coming from the insurance sector, which is 46%. The rest of it was price.
Okay, so that's the breakup in terms of what's led to the growth. So if you talk about the, ARPP, that's the average revenue per person, is there a improvement that could be expected because you have oncology, robotics, and complex surgeries that come through? So is there further room?
Yes, I think the insurance after a long time, this was a reset that happened 12 months ago. So as we go forward, we can expect to see a resetting of prices around 6%, 6 to 7% in terms of price, and the rest of the growth will come from volumes as we've demonstrated with these results.
Okay. Ma'am, let's talk about segments. Now, healthcare services, strong growth. How should investors actually think about margins for the rest of FY27 then?
I think a 24.2 is a very healthy margin. And I would say that as we're adding new beds, we've added 380 beds this quarter. We've operationalized. We have another 700 to go. So I think steady state margin of 24% is a good margin to expect because we will be operationalizing the rest of the beds.
Okay, so when you're operationalizing rest of the beds and ones which are already operational over there, your occupancy has also improved towards 70% from 65% last year. Now, what is that sustainable occupancy range that is going to, that you're going to see for the hospital business going ahead?
74% is a sustainable occupancy. So as we go forward, we are seeing the established units will start to give 12 to 13% growth. Another 7% will come from new units, which will ensure that we continue to grow above 20%.
So, interesting occupancy levels that you're talking about in terms of sustainability. And then, over and above that, we have plans to add, 5,800 beds over the next 5 years. So, what is that expected capex going to look like? And what is going to be your funding strategy for this kind of an expansion?
So as we go forward, another 8,000 crores of capex, which currently, we have free cash flows and money in the bank as well. So going forward, I think it's the free cash flows we generate of about close to 800 crores of free cash flow, plus the reserves that we currently have. Added to that, we will take a little bit of debt towards the end of the expansion cycle.
Okay. So basically, majority of it comes in from internal accruals and the remainder is what you're looking at in terms of debt. Now, let's talk about the upcoming hospitals. Sarjapur Hospital, that has been commissioned. Gurugram is on track as well, it seems, for the third quarter. So when do these facilities actually reach EBITDA break-even?
Sarjapur will be faster. I believe that Gurgaon, we could expect break-even in 12 months.
Okay, so 12 months break even in terms of, Gurugram is what you're looking at. Now, Apollo 24/7 losses have reduced significantly, so that is one of the positives. When do you actually expect the platform to achieve sustainable profitability?
Next quarter.
Okay, so I mean that's a short one. So next quarter is when you will see that business also firing. What about international patient flows, especially, you're seeing a lot of inflow coming in from Bangladesh, Africa, South Asia. What is that trend actually indicating from the first quarter onwards now?
So we've seen 24% revenue growth coming from international patients. As we go forward, I expect that this will increase, especially because we're opening out a hospital in Gurgaon. So there is a potential to have 30% of the revenue coming from international patients, as well as the opening of the new airport in Navi Mumbai, where we will increase international patient flow. So all in all, it's looking good. I think we'll be able to sustain this momentum.
Okay, so okay, so that's with regards to what happens in the coming quarters. Now, the hospitals which are already established, they had scope for another 100 to 125 crores operating improvement through cost rationalization, and that is what you had indicated in the previous quarter. So has any part of this benefit already started to reflect in the first quarter, or do you think it's going to start reflecting in the second and the third quarter?
I think now we're just seeing operational leverage. We're at 29.2% EBITDA margin in established. So going forward, yes, we should see a structural cost reduction of about 150 basis points, which will take us to 25% EBITDA margin in the next 18 months.
Okay. And what about Apollo Health and Lifestyle? What is the outlook looking like there? Because we've spoken of two of the businesses. What about these two?
I think AHLL had a very good quarter. The diagnostics grew at total revenues for AHLL were at 499 crores. Their EBITDA margin also improved. This was demonstrated through very good growth in the diagnostic sector, and margins also showed a very good improvement. There was 60% growth in diagnostics. I think the focus on diagnostics as well as the clinics revenue is something that is going to really take Apollo Health and Lifestyle forward. Of course, the utilization of Spectra and the other formats of care have also improved, and therefore the improvement in their EBITDA to 49 crores.
Okay, so across you're seeing that improvement come through. So the next question comes in, ma'am, is with regards to where the demerger goes. Are the timelines in place, and when is the final expected?
I think March, April should be a good time.
Okay, so March or April is when you will see the demerger come through. You know, I can't really let you go without asking you questions with regards to the parliamentary panel recommendations in terms of 3-star cap on hospital room charges, surgery rates, etc. Your initial comments on that?
Well, I think the broader picture that emerged was that healthcare spending should move to 5% of GDP, and a deeper understanding that there is a structural demand for good healthcare. The third is we're already at 1/10 of international cost. So just the focus on room rent, I think, is not that important or relevant, because we have to look at the big picture. And I think we are willing to work with the entire sector, with insurance and the government, to make sure that we provide healthcare for India where the infrastructure is needed very badly.
So this is more with regards to infrastructure, but now that you know what comes from here on, will you make recommendations to the government? You know, how is the industry thinking like? Because there is a disconnect versus, I mean, in terms of what private is looking at versus how the government hospitals look at. So how is this equation going to really work?
No, I think you said it all when you said that you explained how government hospitals work. And I think that, you know, the citizens need an option, which is definitely to look at, to have private sector available for them. You know, 40 years ago when we started, 80% of our patients would go abroad for high-end tertiary and quaternary care. Today, patients from 147 countries come to us. So there's a lot of value in the sector, and we want to create patient value. So I think the journey is the same, and I'm sure that there will be progress on all sides.
Okay, so progress on all sides, and the targets are seeming very tall in terms of what's expected in the entire, in terms of FY27 as a whole as well. But thank you for joining in. Always a pleasure to speak to you. Over to you guys, Tamanna, Neeraj and Alex, because in terms of Apollo, quarter very strong. Stock probably seeing some bit of profit booking today, but I mean just a 0.5% up move from the day's highs.
Yeah, a very interesting conversation at that as well. Thanks so much, Hiral, for that. Now, one of the stocks of the morning, and it would be higher if it not had, if it wasn't for the circuit. In fact, it is at circuit. KRN Heat is up 5%. And by the way, this is something that is practically defying gravity, because take a look at the longer charts. Look at the year-to-date chart, for example, or look at the one-year chart. This is a stock that has gained from strength to strength. And some might argue that it is expensive. Certainly on a trailing basis, that argument is strong. But if you look at the revenue growth, then you can probably guess that the picture will look very different 12 months from now. Let's, in fact, get in the Chairman and Managing Director, Santosh Kumar Yadav, to talk to us a little bit about that. But before we go to Mr. Yadav, thank you so much for taking the time, and we understand that you're maybe a little under the weather, so therefore we appreciate it even more. But let me set the context with my colleague Parth. Parth, what stood out about the numbers?
So KRN has reported a very strong set of numbers in Q1, and that is visible in the stock performance as well. Like you mentioned, with the stock just 0.5% below its all-time high, so it's all set to make a brand new high as well. If we look at the Q1 numbers, then revenue saw a growth of around 120% year-on-year, while profits grew even further at 165% year-on-year. Margins have also seen a growth of 410 basis points, and this growth was mainly led by exports because for KRN, the overseas revenue has jumped around 180%, while domestic revenue has doubled year on year as well. Also, the overseas contribution in their overall revenues has increased from 16% earlier to 21% right now. USA remains their biggest export market currently, followed by France and Vietnam as well. So really strong numbers and rapidly growing presence in the export markets is the reason why KRN is in focus today.
Thanks, Parth, for that. Like we said, Santosh Kumar Yadav with us. Santosh ji, thank you so much for taking the time out. And as Alex said, really appreciate the fact that you're feeling slightly unwell and yet you've joined in. But I thought you will be feeling on top of the world considering how the results have been, because not only have you expanded revenue growth, but it has come in with substantial margin expansion. How has this happened?
Yeah, good morning, Neeraj. So I think we know before actually when we started our expansion in new facility, of course, I think as per my personal opinion, we delayed 1 or 2 quarter, you can say, but now we are on right track and what we promised, so we are going to achieve, and especially export and data center is really growing and we have good demands. So now we are serving to our customer. And about margins, I think able to achieve because of top line increase and then export revenues increase. So export we have slightly up margin, and also our buying power little, you can say now we can have more negotiate with our vendors because our buying power almost double compared to last year. So if you club all things, then I think revenue also is on a right track with margins.
We'll get to all of those points as well, but one of the points that you mentioned, Mr. Yadav, and I want to probe that a bit. You are, with your new capacity, probably at 25-30% capacity utilization. Would that be fair right now?
No, it's like mix. Actually, we have now multiple vertical, especially bus air conditioning, bar and plate, and then fin and...
No, I'll get to that. But what's the capacity utilization of the new plant, Mr. Yadav, currently?
So this year, our target is to 50% utilization.
Exactly.
Of the total.
So let's assume that right now you are sub 50%, you will scale to 50%. So if indeed you scale to 50% and therefore your volume pickup happens and therefore your negotiating power improves even further, will you be able to improve this 19% EBITDA number to higher numbers as the year goes by? That's my question.
You can say slightly it can be increased, but if EBITDA you will add like our incentive, then of course it will increase, because it's still in EBITDA is not added our PLI benefit and RIPS benefit. So these two benefits still have to add maybe in coming financial year. So if we will add both, then of course it will increase. And last quarter, if you see our finance cost also slightly up, but now this quarter it will be slightly down because last quarter we did QIP, so that also will show in coming quarter.
Very well put, Mr. Yadav. I just want to ask about the Neemrana facility, which is ultimately what we're talking about, right? Your capacity expansion has taken place there. What is the status of that? Is that completely done? How much is still to be built out, and what is the plan there?
So facility is completely ready, and of course I am sitting on the same office in new facility only. So now our completely team shifted, and of course as a corporate office we are run from here only. So particularly because the segment is quite different, like bus air conditioning is still we have to add more orders, and then bar and plate also, refrigeration division also, but heat exchanger we have quite good order. So if total mix up like as a revenue in total product wise, so we will able to achieve 50% capacity utilization by end of this year.
Very interesting. So congratulations on moving into the new office, and obviously we can't see it right now because of the blur behind you, but then I'm sure that it's a very beautiful facility. Having said that, let me ask about the growth, sir, because FY26, Mr. Yadav, you had growth of 40% in the top line. With the new facility coming on stream and 50% capacity utilization by the end of FY27, what is the kind of growth in revenue that you're penciling in? And as you start FY28, you're starting with the expectation that capacity utilization will go up even further. So what is the kind of compounded growth that you expect to pencil in heading into 2030?
So if you club like total as a console base, of course, slightly we will do compared to last year almost double, I think, if I club all segment. And then of course 80% it will be also, you can compare in percentage because I didn't calculate on the in numbers. But now I think both what we promise or what we offer guideline to our investor in term of especially export and data center, so that both we are on in line, because export also is growing and the data center also now we have good orders, especially small customer also offering good big orders. Last month also we received one domestic order, also 40 crore of single order. Earlier it customer was very small for us, but now they offer single order 40 crore. So order is there. Now we have to utilize our capacity and offer to right quality to our customers.
Mr. Yadav, very good morning. Tamanna here. Clearly, a lot of the boost has come from the export business. Can you give us a sense of the kind of growth that you've seen? Is the US market still the biggest one? Do you expect exports to have a larger share of revenues in the next couple of years? Trying to understand if this was an exception or you expect this trend to continue.
So Tamanna, I think as per my personal opinion, the US market now have shortage of the heat exchanger, especially demand is increased too high, particularly in data center, but they have other application also. So they have limited manufacturer who can serve to them easily. So that's why we are receiving good orders from US market for data center as well as other application as well. So also now we have restarted data center for one European customer as well. So in next quarter, you can able to see like numbers in export from Europe, and of course US will be number one in coming year, that is for sure.
What is the kind of increase you're seeing in the US business specifically, and then I have a follow-up on the data center bit?
So US we are receiving data center, of course other application, and Europe also data center and other application, and same is in India. So you can say ki main growth we will receive from export side and data center side.
नहीं तो कितना growth आप expect कर रहे हैं और US market से? That's essentially, is this any kind of timeline? Because you made an important point that they don't have that many manufacturers to come in. They don't have that kind of capacity. So what is the growth potential that you're seeing from where you already are right now?
No, in term of percentage, if you like year on year, it will be you can say just double. So maybe next year also we'll do double, especially for export side and mainly from USA.
Okay, so you're expecting your US exports to possibly double in the next 1 year. Do I have it correct?
Yes.
Okay, that's excellent. And how do you see margins then keeping in space? Are you expecting margins to remain in this 19-20% range, or you expect them to maybe moderate a bit?
So once export will increase, margin slightly will also increase, and if we will add our PLI and RIPS benefit, then if we add both, then also it will increase, because these results like last quarter result, PLI and RIPS not added, because once we will have entitlement certificate, or you can say claim certificate, then our auditor will add. So still they are not added.
What is the extent of PLI inputs you're expecting, and do you know by when? Is there a timeline you have in mind?
So this year we will be have like 5% of the heat exchanger dispatch. So maybe by end of this year, once we will file our claim, then once government will approve, then they will add. So it will be 5% of our heat exchanger top line, and RIPS will be 1.5% of the total revenue for new facility only.
When you're saying that margins will, as a result of all of this, increase, do you have a range in mind? Because you're at, say, 20% right now, or 19.4% right now. Do you have a range in mind?
So actually numbers are not completed yet, because the RIPS and PLI will receive by end of this financial year. So I think as of now, it's I can't comment on that. So maybe in third quarter or maybe fourth quarter I can comment.
Okay. Mr. Yadav, one question on what do you do over the next 2 or 3 months, as the next 2 or 3 years, as capacity utilization expands, more cash flows come in. You don't probably need more capacity right now. So what do you do with those cash flows? Do you reinvest them into acquiring other specialities, the way you acquired that bus AC piece or something else? Or do you plan for further capex after the Neemrana plant immediately starting now only?
So, Neeraj, we already planned our Bangalore facility. We are looking for lands. Even yesterday, we filed our application on single window for Karnataka government. So, we are looking land in Bangalore to expand our capacity in South India, especially for data center customer. And as well, we think bus AC also will grow in good way. So, we added our bus AC and railway complete HVAC system. So, we hired our railway team as well. So, this segment also will separate in next coming 1 year. So you can see next 1 year we will have two new facility, one for bus AC, railway AC, and then other one for heat exchanger for South India.
And if I therefore put all of these things together, because now you are becoming from a small heat exchanger business to doing multiple things, Mr. Yadav, what is the official guidance that you're giving after end of Q1 for FY27, possibly FY28? Revenues, EBITDA, and as well as bottom line.
So guideline for this year will remain same what we said before, and I think next
which
quarter.
Which is how much, Mr. Yadav?
So it's capacity utilization we guideline like 50%. So you can say.
But revenue, EBITDA, and bottom line. Do you have a formal guidance for that? What you will do in revenues?
No numbers. I think in our PPT is there. So maybe. Tomorrow call I can maybe discuss with my finance team, then I can declare. But to capacity, I of course offer 50% of. And this new facility we are still working on, like what will capacity we will put, and so maybe next quarter or maybe third quarter we'll get the guideline for new facility as well.
Okay. A couple of things, Mr. Yadav. I didn't push you to give me a trajectory for 2030, but आपने बोला था कि आप revenue double करेंगे in the current financial year roughly, right? What will happen in the trajectory to 2030 though? Because you will have a full or maybe 75-80% utilization of your Neemrana facility by then. You will have new capacity that you will likely add in Bengaluru. So first of all, what are the timelines? Once you identify the land, which should not take too long, one would assume, for a company like yours, are we talking about a setting up of capacity within the next 2 to 3 years? That's the second part.
No, capacity, of course, if we will get land in 4 to 6 weeks, then we can able to start our new facility in Bangalore, I think within 1 year. And for bus AC, we already have land from Rajasthan government. So I think in next 2-3 weeks, we will already start the construction for same. So in next 1 year, I think we can able to run both facility. About guideline 2030, I think it still is too early for us. So maybe give us 1 quarter or 2 quarter, then of course we will come up with this guideline as well.
Okay. If not a guideline, Mr. Yadav, then I'm pretty sure that you would have envisioned it and you would have certain aspirations. What would those aspirations be?
Now, of course, growth will be there. So if you see our journey till now, I think because of course now we are going to complete around 2 years in market as well. Before that, we completed around 6 years. So now we almost 8 years. So each year we bought like one new facility, one new plot, and then expand our capacity, and it still is going on because when we bought this 20-acre land, so we thought ki now is quite big for us, but of course this also seems going to full in within 1 year. So that's why we are going to add 2 new. So I think journey will be continue because now market is growing, and honestly, especially data center, they need a special type of quite big heat exchanger, and I think we are the one of the best supplier for the same, especially export. Even when we started this, our capacity, we not thought data center will ramp up like this. We are receiving orders in this way. So it is good for us, and I think when market demands, of course, we have to expand our capacity on same way.
Yeah, certainly. And exciting times ahead. Just one last point, Mr. Yadav, you mentioned the QIP, but there's still money that you can still utilize from that. I believe around 140 crore or thereabouts. What is the utilization going to be for? And what is the trajectory on debt that you anticipate?
So this money completely will utilize on working capital only, because now revenue is quarter on quarter. If you see, we just did double. So of course our working capital is quite high. So that's why we did this QIP, and I think this quarter or maybe maximum in next 2 quarters it will utilize as a working capital only.
Okay, and the debt level, sir?
So as a term loan, we have almost 0 as of now, but CC limit, I think we utilize some based on in HVAC only. Karen I think is 0. So basically non-fund based we have or some CC limit only, because we buy material on LC. So that's why we need non-fund based limit.
Understood. Mr. Yadav, absolute pleasure speaking with you as always. Wish you all the best and do get well soon, and we look forward to speaking to you again soon.
Thank you. Thank you. Thank you.
Very interesting company, and certainly the stock is up. The market taking note of the fact that the trajectory going forward is also looking pretty rosy, pretty robust. We have to slip into a very quick break. We've got a conversation lined up with Pritish Chaudhary, who is the Deputy MD of Titagarh Rail Systems, up next. Do stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
All right, welcome back. Let's take a look at what's happening with markets before we move on to the list of stocks that's buzzing right now. While the Nifty is showing quite a boring picture, 0.4% down and not really holding up, the action is, as it has been for the last several days, in the broader markets. That's where you're seeing a lot of stocks buzzing. I want to pull up the mid cap and the small cap as well, but it's individual stocks. In fact, Mahima is joining in right now with a list of stocks that are buzzing in trade, and one of the key reasons is the Q1 performance. Mahima.
Yeah, absolutely, Tamanna. So I'll start with Lenskart because it's been a strong quarter for Lenskart, and overall there has been growth momentum that's continued. Margins have also done well, and is trying to reach the life high levels as well. In terms of the international business, also large margin expansion happened, and the same-store sales growth also stayed elevated, so that's a positive sign. In terms of India business, volume-led growth was seen in terms of where the top line goes, and operating leverage has led to margin expansion as well. Premiumization is also the new growth vector for them, and going forward we'll have to see as to how that pans out and whether that translates to the margins or not. In terms of the overall numbers, the net profit came in at 222 odd crore versus that of 60 crore earlier. In terms of revenue, it saw an uptick of 43%, EBITDA an uptick of 75%, and margins came in at 21.7% versus that of 17.7%. But the question here really would be whether these kind of margins are sustainable or not. In terms of HT Infra, this was it was a bad quarter for this one, because overall, of course, there was an exceptional item of around 146 odd crore which did impact the Q1 numbers. But consider the proposed approval of divestment of 100% investment in the 5 of its wholly owned subsidiaries. That is also one of the reasons as to why the stock is being weighed on, and overall loss was also recorded in terms of disposal of certain subsidiary, and that's impacted the overall numbers as we see in terms of the net profit number. The last one on the list is VIP, because overall it's not been a very strong quarter for this one, but the stock is reacting positively, largely because the overall performance in terms of top line was slightly better than what the street was expecting, but gross margins have taken a hit because of the raw material inflation. The new management strategy and supply chain is something that a lot of brokerages will be watching out from here on, and growth strategy for FY27 is something that we'll be watching out for in terms of volume, because competition in this space is getting very intense. So these are the 3 numbers that are buzzing on the back of Q1 earnings.
Okay, interesting ones at that. And VIP Industries has been trying to claw back a little bit of lost ground for some time. All right, let's talk about Titagarh Rail. It's in focus after its quarterly numbers. Let's first talk about those numbers before we speak to Pritish Chaudhary, who's the company's Deputy Managing Director, who's joining us this morning. We've got Shivam joining in first. Pritish, to give us a sense of the contours of this conversation so that we can set the context. Shivam, what are the key numbers to focus on?
Yes, Titagarh Rail has come up with their Q1 numbers, and starting with the key highlights, this has been a turnaround quarter in terms of profitability. The net profit of the company has stood around 52.6 crores versus a loss of around 23.1 crores from previous year. Also, in terms of revenue growth, we have seen a healthy growth of around 12%. Also, this was led by the passenger rail segment, and in terms of revenue, the passenger rail segment revenue has grew up by around 3 times. Also, in terms of margin, we have seen an improvement, and that was on the back of better operating efficiency. So overall, this quarter has been good for the Titagarh Rails.
Got it. Okay. A quarter has been good for Titagarh Rail. That's a good way to put it. Thanks so much, Shivam, for that. Let's ask Pritish what he thinks about that. Pritish, was it in line with your own expectations? It seems to have been a good quarter. But what are the factors that led to these numbers?
So firstly, thank you very much. I think we'll talk about the numbers in 2 buckets. The buckets being PRS, which is passenger rail systems, and FRS, which is freight rail systems. So on the passenger rail system side, yes, definitely it has been a good quarter with the highest ever quarterly turnover for the passenger rail systems business. In fact, even in terms of dispatches, we dispatched over 30 coaches in the Q1, which is the highest ever dispatch for coaches in a particular quarter. And this business, as we've maintained that the passenger rail business has a large runway for growth. We have an order book of roughly 10,000 crores in the passenger rail systems business. So this system, the passenger rail systems business, is now clearly catching steam. It's catching pace. And over the next few quarters, we intend to stabilize the production at 45 to 50 coaches per quarter to start, and then further ramp that up over the next few years. On the freight side, execution was a little dim. That owes largely to the wagon ordering cycle. The freight rail systems business is a cyclical business. And while we await a new tender or larger tenders in the freight wagons, we aim to produce anywhere between 600 to 650 wagons per month. until such time that a new tender from the railways or a new large tender from the railways is out.
Pritesh, hi, good morning. Tamanna here. Clearly, the passenger rail segment is what has really worked, right? That's where revenues are up, I think, 3x. Why do you think freight has been a bit dim?
So freight has been a little bit dim as a conscious call. The order book on the freight side is largely dependent on government tendering, on government orders. The private sector only accounts for a small part of the total wagon requirement in the country. And until such time that the Indian Railways does not actually publish a new large tender for the freight wagons, we consciously intend to produce anywhere between 600 to 650 wagons per month, so as to not completely exhaust the order book ahead of time.
So you're going slow in an intentional manner. What is your passenger freight revenue split right now?
So the last quarter was actually the highest share of passenger revenue. I think we crossed 30% of passenger share in the revenue, almost 31%, I would say, in the last quarter. And over the next few years, we only see the share going up, which is also very clearly evident in our order book. You see, if you look at our company-wide order book of roughly 26,500 crores, half of that is from JVs and our share of JVs, and half of that is direct orders with Titagarh. Now, out of the direct orders with Titagarh, which is about 13,500 or 13,000 crores, 10,000 crores is on account of the passenger rail systems, and only about 3,000 is on account of the freight rail systems.
Pritesh, the question though is, when do the tenders from the government come through, and do you have any sign at all? Because it's not just you, it's the rest of the industry that's been waiting for this as well.
So, you see, this industry, the wagon industry, has always been a cyclical business. For the decades that we've operated in this business, we've seen it be a cyclical business. However, that said, the Indian Railways has invested so much time and money in building the capacity, building the tracks, and building the whole ecosystem, that a wagon tender or wagon procurement in the near future is inevitable. Because procuring those wagons is the only way to make that capacity useful. It's the only way to utilize that capacity. So it is not a question of whether the wagon tenders will really come or not. It's only a question of whether they come after 2 quarters or 3 quarters or 4 quarters. But from our perspective, the logical demand is very, very clear.
So therefore, we were having a conversation recently, I hope I remember my figures right, but there's an expectation that it could come up to 100,000 wagons in this next leg of tendering. And if that is the case, how much of that do you feel confident you'll be able to grab?
So those were based off of media reports. I mean, we also read those articles which talked about a wagon tender of anywhere between actually 70,000 to 100,000 wagons. We read a couple of conflicting reports. So, if and when that tender comes out, we will bid for it aggressively. Historically, we've maintained a market leadership with almost a 25% market share. And of course, going forward, we will try our best to maintain that.
Pritesh, this has kind of been, in that sense, from a profitability standpoint, a turnaround quarter, right? You've swung to a net profit of 52 crores. You're seeing this trend sustainable now? You're seeing the margin trend at about 12.5% sustainable?
So, yes, again, the margins are split into 2 buckets, which is the freight rail systems and the passenger rail systems. On the freight rail systems, a 12.5% margin, EBITDA margin is the sustainable number. On the passenger rail systems, you will see a reported margin of almost 15% in the last quarter. That is primarily on account of the contracts that we were executing. You see, we were executing the Bangalore Metro contract, which effectively is a conversion contract where the top line isn't very high, but the margin percentages are higher. So on the passenger rail systems, a sustained EBITDA margin would be anywhere between 11 to 12%. As the operational leverages start coming in, that could be anywhere between 12 to 12.5%. And by, let's say, 28, 29, once the propulsion technology is fully absorbed by us, and once we start doing our own propulsion for the metro coaches, we can further see this margin being enhanced to almost, let's say, 14 to 15%.
Okay, and yes, you want to pull down freight order book as well, or at least you want to pull down the concentration of freight going forward. Just want to understand what the timeline is for the Vande Bharat deliveries.
So Vande Bharat, the project is very much on track. I'm happy to state we'll be delivering our prototype by the end of Q3 or the very beginning of Q4 of this year.
Okay, and what about the Gujarat Metro project? Any updates on that you can share with us?
Absolutely. So the Ahmedabad Metro, in fact, we launched the prototype a couple of months ago, where we had the Honorable Chief Minister of Gujarat himself who came to our facilities to kind of receive the first train. The Surat Metro prototype is also nearing completion, and very soon we'll also be able to share some good news on that front of the prototypes being delivered. So the metro projects are ramping up, and they are ramping up well, as I would say was evident with the last quarter's production.
Pratish, far be it for me to assume anything with regard to the business and with the name, but I'm wondering whether a change of name at some point would make sense, considering that you're venturing into a completely different business that has nothing to do with rail. And I'm talking about the naval business. What's the status there, and what are the timelines that you're talking about? What is the aspiration for revenue contribution as well?
So, on a lighter note, we preempted this, and that's why the shipbuilding business is now being controlled in a wholly owned subsidiary called Titagarh Naval Systems Limited. Right. That was, on a serious note, that was the intention, that Titagarh Rails should be a rail-focused entity, and shipbuilding being a sector, being a business which has a lot of potential for growth, should be focused on and should be given the necessary bandwidth and capital allocation that it deserves. So we decided to put that into a wholly owned subsidiary of Titagarh Rail Systems, which is called TNSL. And that subsidiary, or that company rather, the intention is very clear, to grow that company of its own accord, and then eventually in a few years, maybe even make it large enough to list. So there we have an order book currently of about 500 odd crores, which is not very large, but again, it's a new company with a small order book. We've already bought land in a place called Falta, which is in the south of Bengal, to build up a greenfield shipyard. In fact, we applied for the subsidies under the Central Shipbuilding Assistance Fund, and we were one of the first yards to be approved under that. So we're making a 610 crore roughly investment into a greenfield shipyard in Falta. And we're very excited for that business. We see that business over the next maybe 5 or 6 years with a revenue potential of almost 2,000 crores.
Very interesting, certainly. Pratish, thanks so much for taking the time as always, and wish you all the best for the rest of FY27.
Thank you very much.
Well, the stock is up 1.5% or thereabouts, and the markets are not doing too much. This is really something that you've gotten used to over the course of the last week or so. The benchmark at 24,332 or thereabouts, and up about 0.4%. The Nifty Bank just about 0.5% lower. The broader market's also not doing too much at this point. Mapping what is happening with the benchmark, 0.25% lower for the small cap index, and just about 0.2%. Higher for the small cap index and 0.2% lower for the mid cap index.
Yeah, it's just the small cap that is really showing some signs of action. We're going to take a very short break, because what becomes more relevant right now is what's happening in your portfolio. And that's what you will get on our next show, Ask Profit. But for now, from Alex, me and the team that put the show together, thank you so much for watching. Stay tuned. You're watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the $64,000 mark on selling pressure. SEC to weigh exemption for 24/7 tokenized stock trading. Jordi Visser's top bet becomes Bitcoin. And lastly, Fidelity adds staking payments to Ethereum ETF. The US Bitcoin ETF has recorded almost $865 million of inflows from the last 5 sessions, marking the strong weekly inflows since April. But of course, a little bit of technical pressure coming in for Bitcoin, becoming below that $64,000 mark. At its August 14 open meeting, the Securities Exchange Commission will consider a crypto rulemaking package that includes an innovation exemption. Now, this enables 24/7 trading of tokenized stocks on approved platforms. And macro investor Jordi Visser says that the yen intervention has signaled that the US government is in financial trouble, and Bitcoin is his top bet to capture the money printing that follows ahead. He calls Bitcoin the purest AI trade.
And privately held asset manager Fidelity says it's adding quarterly staking payments to its leading Ethereum fund. Now, staking payments refers to the awards or the rewards which is earned when you lock up digit in a proof of stake blockchain network which helps verify transactions. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours, and largely we have seen sell-off coming in majority of them, Bitcoin, Ethereum, XRP as well as Solana, and it's been the range between that 0.1 to almost 1.1%. But yes, the support and the resistance that has shrunk for Bitcoin ranging between that $62,000 to $65,000 mark. Now, time to look at the crypto strategy for the day, and we see a little bit of a pullback happening, especially with the consolidation with a bearish biasness coming in. Last night the July CPI data came in. It was in line with the expectations, but nevertheless that risk off sentiment which is there, especially for the risk assets, that seems to come down a bit. But remember, on the technical charts there is an absence of bullish momentum, and currently if you look at the support range, that's coming on the lower side, but yet a very narrow one between $62,000 to $63,000 mark. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. Mahima Vachajani will be joining with me in a very short span, but over the next hour or so, we'll try and get to all your stock-related queries. So do start sending them in if you haven't already, and we'll get to those with our experts as well. Quick check of how the markets are doing, because we spoke about yesterday that we almost breached the 24,300 mark and then saw some revival. Today though, yet again seeing a 100-point downtick, so we are back again close to that 24,300 mark. If this holds on, it will be something to watch as well. So that continues to be an important one as well. But before we move ahead and look at the other key factors of the markets, let's also pull up Astral. That's another counter that's flying away in trade, now up almost 6.5% on the back of its quarterly results basically. Now, it was a flattish kind of a margin picture in this quarter. It's actually fallen while volumes have been flat. So why is the stock up 6%? And therein lies the conversation with the management now, which is very important as well, because we have spoken about the demand as well. But let's get in Hiran Savlani and ask him about what worked in this particular quarter as well. Mr. Savlani, very good afternoon to you. Thanks so much for joining in. My first question to you: we've seen the plumbing demand largely remain weak in this quarter. The industry volumes are down 10%. However, for Astral, the volumes are flat. So you've actually had market share gains in this particular quarter. What was the one defining factor for you in this quarter which led to market share gains?
I think we have communicated in the past also that Astral has spent a sizable money into the capex. So last 4 or 5 years, we have spent close to about 1,500 crore. And that benefit have started coming now because we have decentralized our plant. So now wherever the new plants have started functioning, we are getting the market share of that particular geography. Because in the piping industry, logistic costs play a very important role. So if you are near to the market, then the more and more distributor will join. And today that is what exactly happened. Many competitor distributors are also joining Astral, and that is contributing a good growth to the company.
But how has plumbing volume essentially, has that recovered in the month of July? Because generally when we see a quarter where you've seen destocking, the next one in the initial month itself, we start seeing that recovery. Has that played out in the month of July? as well as in your newer regions of Kanpur, Hyderabad, how is the utilization levels increased since you commenced these plants very recently?
Yes, you are right that it has sharply rebound in the month of July and first 12 days of the August. In the month of July, we were close to about 40% volume growth. So if I add that 40%, then the first 4 months our volume is double digit. So it's a robust bounce back, I can say, and the new plant contribution is continuously increasing. In fact, Kanpur plant we are sold out. Whatever we are producing, most of the product we are able to sell. So that plant is giving us a good number. Similarly, Hyderabad is also picking up very fast. So I think as and when the dealer and distributor will get the confidence that now plant is functioning very well, we are getting the regular supply. So definitely a lot of competitor distributor will join Astral. And that is what we are expecting. That was in mind, and that is why we have put up the plants over there.
So Mr. Savlani, and got that point, because if Kanpur is sold out, that's a great thing to hear, sir. But when you look at the overall volume growth, you mentioned generally a 15% in the past. This time around, you're mentioning a 10 to 15% kind of volume growth. But you've also seen raw material price impact that will help the value growth, I feel, as well, right? So what is the kind of revenue growth that we should anticipate for Astral for FY27?
So I think beginning of the year, there was a lot of volatility in the polymer price. So because of that, we were little bit shying away to give the higher volume guidance. So we don't want to unnecessarily misguide any of our investors. So that's why we have given the range of 10 to 15%. But there is a lot of change has taken place in the industry from the government side. Government has implemented MIP, minimum import price. So because of that, now the polymer price is going to be stabilized. And there is very, very low risk on the downside particularly. So because of that, I think industry will be having more confidence as far as the growth is concerned. And even dealer and distributor will keep inventory because they also know that the downside is protected. So there is no worry to hold the inventory. So because of that, we are expecting that industry is going to perform very well. In fact, we have given the guidance of 10 to 15% volume growth. And once we will complete Q2, we will look into that whether we want to revise, upgrade, upside. So that decision we will take at the end of the Q2 number. Regarding your second question of value, you have absolutely bang on the real point of the industry pain. That last 3-4 years, the industry was having the volume, but there was no value growth. So that was denting our margin as well as the top line growth. This is the after 3-4 years, first time we are seeing that the value growth is much, much faster than the volume growth. So today the gap is 10%. So now hypothetically next year, this full year we grow at 15%, then the 10% value growth will be there. So the top line growth will be 25%. So then the EBITDA and all will be much, much better than what we are seeing.
And just one more question on the piping business to wrap up that conversation, because you've guided for the piping business to have roughly 16 to 18% kind of margins for this year. Do you think that there is an upside risk to this because you've reported 18.9% in Q1? You'll also have the value growth aspect as well, or will you largely pass it on once you reach that higher end of the range? So is there any upside risk for this year?
I don't think that will be there because last 3 years, if you can see our number, we are into that zone. We are always on the upper side of the curve. So this time also in the first quarter also we are in the similar 18% plus kind of zone. So I don't think that is going to end. Secondly, if the top line will grow, then your overheads are going to remain same. So that is going to give you the extra EBITDA in terms of percentage. So we don't see that is going to be a risk to the company. And on the contrary, polymer prices are going on the upward journey. So that is also going to directly or indirectly going to contribute to your inventory gain. I don't want to give the number of inventory gain that is we are counting, but at least that some benefit will be available if the polymer prices are going to be on upward journey. So I don't see there is a high risk on the margin side.
You did preempt my question on inventory gain, Mrs. Avlani, but nevertheless, let me ask you on the chemical business. Now, it was a demerger that you announced in the last few months. You have called off the demerger now based on what you put out as investor feedback. Any particular rationale that you have put out, the reason for the chemical business being called off now from the earlier demerger plan?
See, rationale is very clear that we more thought that it is good in the interest of the organization. But end of the day, we are the trustee of shareholders' money. If our shareholders or public at large or the English community all are not happy with your decision, then I think we should respect. We are not having any kind of ego or something like that, that we can't just change our decision. If it is not in the interest of shareholder, we are always open-minded people. We always want to respect that decision. And considering that in mind, we decided that we should postpone this decision, because end of the day, everyone was of the view that is your size is still low. So at this stage, it is not advisable to do the demerger. You pick up the scale. At that point of time, you can rethink. But at this stage, at least it is not in the interest of shareholders. That's why board took, and we took the independent opinion also from the Big Four. And they also suggested the similar kind of view, that it is not a good thing at this stage. Better you gain some scale and then you can do.
Just to wrap up, Mr. Savlani, we've seen, the adhesive business, especially in India, continue to do very well, 12.2% margins that you've done. For the UK business, though, that has been a laggard last year. You are at, I think, 4.9% margins there. Do you feel that you could look at that business in a different lens in this year? Do you want to divest that business because you absorb the technology, use that in India, and the numbers are clearly visible for this business? But for the UK business, has there been any thought process at this point of time as to the future of the same?
Because you see the history, last couple of quarters, adhesive business of UK was not giving us the number which we required to do. Otherwise, we were able to grow at a double-digit margin in last 7-8 years. So, absolutely, we were not having any concern relating to the UK business. And we are forgetting one good fact about the UK, that today Astral Adhesive India business is growing so fast with the higher margin, that is thanks to UK only. Because UK has given us the technology and all this thing support in our product. That is why we are able to fight with the market player in India. Otherwise, growing so fast in India was also not possible. I think UK has not only contributed on this side of absolute number side, but indirectly also we are getting a good support from the UK. So I think divesting UK business at this stage doesn't make any sense, because now we are already coming back to the revival. We already said that this year we are going to deliver 8% kind of to 10% kind of EBITDA margin. We are already reached at 5-6%, and with a very hefty growth of 26%. So I don't see any problem into that business. Slowly and gradually that business also will come back to the normalcy, and then everybody will respect that our decision was good.
Well, Mr. Savlani, we leave it at that. Thanks so much for joining in, giving us your time as well as your inputs on what led to a good quarter this year. We, of course, look forward to our next conversation, sir. Thank you for joining in. Well, let's now get back to your stock-related queries. Kush Bora, founder kushbora.com, now joining in into the studios. Shaina Mukaddam, independent market expert, joining in on the fundamental side of things. Both of you, thanks so much for joining in, and a very good morning to you. Shaina, just a quick question. Firstly, on what you think of Astral, and what's your opinion on the counter now? Because we've seen decent results from the company. Any view on the stock?
After 2 years, hi, good morning, everybody, to start with. Basically, after 2 years of very subdued type of numbers, this quarter has been decent in terms of both, I think, profit growth. If you look at it on a YOY basis, has been good growth. Margins also have improved a bit. What I would say is that, an investor may not have been very happy in the last 2 years, not really seeing too much of a price increase. But I would say that even at current levels, it is not cheap. In terms of valuation on a EV by EBITDA basis also, even still now, it is a bit expensive. So I would see consolidation in the stock price continue for some more time. So if I'm an investor, maybe I can continue to hold for another bounce. I could see it go up by another maybe 100 rupees and odds over the next 1 odd year. So you could hold for a bounce and wait for improvements, but do not expect too much of a upside because of valuations in the, I would say, over a 1 year period.
Got that view, Shaina. But let's go across and take the next question. This one's from Shankar from Bengaluru. And his question is on Tenneco Clean Air, Kosh. He's holding shares at 579, holding almost 350 shares. We had a stake sale from the promoter yesterday, and hence the stock was down. But he's asking if he should average wait out, and what's the target price, Kush?
First up, a very good morning, guys. Very good morning to Shaina as well. To the averaging question, I don't think I need to answer that again, right? No averaging recommended. Even before the sell-off that you saw yesterday, the stock has been in a structural downtrend. Now, the saving grace for this one is that 525, 530, that's the medium-term support zone for this one. So it should hold on to that and then perhaps rebound from here. Not too far from his buy price, I would say. So you should continue holding on to this. 520, 525, that should be your stop loss. And on the way up, start looking at an exit once it's closer to your buy price or maybe just above that. Because like I said, this has been in a bit of a near-term downtrend.
Okay, all right. So that's the view coming on Tenneco Clean Air. The next one is Cupid. Sushira from Billary has bought it at the levels of 136 and she's holding around 1,577 shares and wants to know if she can get the targets for this one going forward. Kush, what do you make of the charts? Because she's sitting on handsome profits. It's time to book them.
My God.
I know.
What do I say about this? It is overstretched on every parameter. I'm sure Shaina will also confirm that from a fundamental lens. But daily, weekly, monthly, all time frames massively overheated, but just continues to shine. All I can say is you might want to book some profits, at least about 20-25%, and continue to hold the rest with trailing stop losses anywhere close to about 270, 275, and then keep moving them higher as the stock keeps going higher. I would really be a little circumspect about giving higher targets from these levels.
Maybe it's the name push. Maybe they are showing a lot of love to the stock, continuing that gains. It just continues to find new levels every time we get a question on this one. But the next one's on CDSL. Our viewer Vishal wants to know if him holding shares at 1480 is the correct as per China. He wants a 3-year view on the stock. What's your opinion?
Well, yes, if you're a 3-year investor, if you're holding it for a 3-year period, definitely you can continue to hold. I think the overall capital market stocks, and of course CDSL is related, should do well. If you see over the last 1 odd year, there has been some disappointment. There are a lot of policy changes that have to an extent affected sentiment also. But I would say that the longer term things should look decent. I would say even in terms of earnings, I would say that if you see the last quarter numbers were very strong, and this year should be much better, hopefully, compared to FY26, and so also I think the stock price. So one could continue to hold in my view, and if there is any dip, that yes, you can add if you're a 3-year investor.
All right, okay, so that's the view coming on CDSL, but it's time for a rapid fire round. So Kush and China, you both know the drill. I'll start by taking the first one, which is on Netweb Tech. Pawan Shekhar is holding 41 shares at an average price of 3,800. Hold, book profits, Kush?
Hold, stop loss at about 47.50.
The next one coming through, and this one's on MCX, Kush. Uma from Bengaluru bought these shares at 2925. What's the target that she can look at?
One, of course, it's a hold. I would suggest targets of about 3150 and 3300 rather comfortably, and stop loss could be your buy price or maybe just under.
Okay, the next one is on Chennai Petrochem. Is it a good buy at the current market price, Shaina?
Yes, one can go in. The numbers also are pretty good, and I think at current levels one can look to buy it. You could look to buy it. You can keep a stop loss close to about 1,200. And look for a target of close to about 1,400 in the near term.
Next one's on NMDC, and our viewer Venkat Ramani actually bought these shares at 33 rupees. So in massive gains right now, holding 1,200 shares. Asking if she can still hold on to this one, Shaina. Should she ride the wave?
Yeah, she can continue to hold on to the stock for now and ride on to the wave. Keep a stop loss close to about 80 rupees.
G Shipping is the other one, China. A good buy right now for the next 2 years?
I would say it's a avoid as of now. You could relocate it at further dips.
The next one coming through, and this one's on Motherson. Raghu wants to know if it's a good bet from the long term. China, we've seen a massive run up, post good results after Q4 and Q1. What's your opinion now?
Yeah, Motherson is a hold as of now. Numbers were very interesting, so it's a hold.
Okay, BLS International is the other one. Sam from Kolkata is saying whether this is the right time to enter. He says fundamental is convincing him, but our technical is also positive. Kush?
They're starting to emerge and turn positive. So yes, I mean, if you're convinced from the fundamental lens, I would say yes, you can start accumulating stop loss 250.
The next one coming through, and This one is from Lalita from Bengaluru on Aarti Industries. Coach, holding shares at 505. Should she continue to do so?
On Aarti Industries, you can. This is giving you a breakout. By the way, the breakout level is her buy price, so keep a stop loss at that.
Okay, Pine Labs is the other one. From a long-term perspective, is it a good buy at the current moment, China?
It's slightly expensive, but yes, it's an interesting stock. So I would say yes, you can keep adding it, buy it at any dips and hold for the longer term.
Got it. The next one coming through, and Kush, this one's on Suzlon, and we get a lot of queries on Suzlon these days. Our viewer Sanjay is holding shares at 43, but he's holding 3,600 shares and asking what he should do.
Slightly tricky. I would suggest you can continue to hold, but strict stop loss at your buy price.
Okay, the next one is on Bharat Dynamics. Zakir from Dubai is holding 100 shares at an average price of 1270. Hold, sell, Kush?
Book partially and then continue to hold on the rest with 1270, 1280 as your trailing stop loss.
Gujarat Energy, which is of course Gujarat Gas earlier. Praveen from Hyderabad holds shares at 276 China and wants to know if he can continue to hold. We had a good result, good Q1 China from this counter, but not, and we've seen the stocks move a little bit this week. What's your view? Is it a good time to enter now?
I would say that in terms of numbers also it was good, and I think it is a decent stock if you want to enter in. The stock has been actually disappointing for some time, but current levels I think it is bottoming out even in terms of business also, as we saw in the numbers. So yes, I would say that it is decent. You can start adding on. Stock price is giving you a good bounce even now. So yes, add.
Okay, the next one is on Senco Gold. This is from Nikhat, I think, who's asking and wants to know whether to continue to hold or exit. The buying price is 385. Kush?
Exit.
The next one's on Shakti Pumps. Sundar from Madurai holding shares at 720. Wants to know the long-term prospect. China has been an underperformer, so has its peer Oswal Pumps as well. Would you recommend him an exit or should he hold?
I would say continue to hold. There's a very good order book position, and I think the prospects are strong.
Okay, the next one is from Vikram. He's asking about BSC. His average buying price is 2985 and 50 is the quantity that he's been holding. Continue to hold, and what should be the target and stop loss to be expected? Kush?
Definitely a hold. 3350 is your stop loss. On the way up, look at 3775 and 4000, rounding that off as your targets.
On BLS International, Kush, Sayan from Kolkata wants to know if he can re-enter the stock and if it's the right time to do so.
I think we just discussed this. You can consider buying this. 250 is a good support zone and might face immediate headwinds at about 280, but once that is taken out, the stock could move higher.
Got it. Well, that was the last question of the first round of the rapid fire in this edition of the show. Shaina as well as Kush Theon. A lot more stock related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ओके के फायरिंग रेंज में खड़े हैं?
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire? Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are tuning in, of course, you can call us or send us your queries on the WhatsApp number that's flashing on your screen up there. A quick take as to how the markets are doing. The Nifty 50 right now is down by about 0.4% around the 24,300 levels. The Bank Nifty also in line with how the Nifty 50 is performing around the 57,600 levels. And you have your broader markets, just the small cap 250, which is doing well, up by about 0.3%, but the mid cap 150 slightly under pressure, down by about just 0.1%. So just a gist of what markets are doing. But let's take all your stock related queries next. I think we've Bharat who's calling us from Andhra Pradesh. Bharat, a very good morning to you. Go ahead, ask your question.
Good morning, madam. I am waiting for this day because of Kush Bora, sir. I am holding GE Shipping at the price of 1560. 260 shares. Fundamentals was good, but stock is underperformed. In this contest, what will we do? Can I hold or sell average?
Okay. Average, so I know Kush will say no to that. But Kush, what's the view on the charts for GE Shipping?
But that's so sweet of Bharat. Bharat, thank you so much for that lovely compliment and waiting for Thursday to get this query solved. You're awesome. There is a bit of a pressure from a technical lens as well, in the sense that the stock has seen sell-off for the last 2 days, it's also below the 200-day moving average. But I will take heart from the fact that the volumes on the way down for the last couple of sessions have been thinning, which means perhaps the selling is coming to a close. Has the next support zone at about 1175, 1200 odd levels. So if those are held on, then you can continue holding on to that stock. If that is broken, then I think you should exit. So 1150 is where you should keep your stop losses. I wouldn't suggest averaging, but maybe once again, if the stock jumps up and goes above 1300, 1350 zones, is when you can start considering adding some more.
Got it. Got that view, Kosh. But let's take the next question now. This one's from Hema, who's a regular viewer of the show. Wants to know about KEC International. She's been holding shares at almost 500 rupees per share, holding 60 of them. Shaina wants to know about what she should do with this counter. We had some weaker results from the company in this quarter, marred by geopolitical crisis, but what would your recommendation be on the stock now?
Yeah, so the numbers were disappointing, and the stock also has corrected a lot. If you even look at it, over a 1 year period or whatever, I would say at current levels, there are better stocks available. So if you're not making too much of a loss, it's better to switch at current levels because you also have a lot of competition coming in by the year end. So I would suggest a switch.
The view coming on KEC International. The next one, I think we've got Mr. Ram. I think he's asking about Vedanta Aluminium. He's got around 500 odd shares at the levels of 454 and wants to know from a long-term perspective if this is a good hold or not. China, what is your view?
Yeah, I would say it is a good hold because not only has the, I would say overall the market in terms of volumes available, that is actually likely to remain pretty healthy for the next 1 year because there are certain closures on a global basis. And I would say they have got good capacity addition plans. Valuations are slightly on the higher side, but I think if you're holding it for a year plus, I think it should give you a decent return. So I would say continue to hold Vedanta Aluminium.
Got it. Let's go across to Hyderabad now. Manohar dialing in for a stock query. Manohar, very good morning. Welcome to the show. What's your query?
Yeah, very good morning and thanks for taking the query. It is regarding ICICI and SBI. I want to enter into the stocks now. Can I know the upside and which is better looking on the charts for a short-term period of time?
Got that, Manohar, and thanks for calling in. Thanks for dialing in as well. But Kush, either of those that you like on the charts now?
Okay, so this query is like, who's better, Virat Kohli or Rohit Sharma? Both have done fabulously well.
In which format?
In which nice. In which format? See, in the medium term, near term, ICICI Bank has done well. Right now SBI is consolidating. So if I were really choosing, I would actually, I'm so divided that I would put 50-50 in both of them. Both of them, by the way, have immediate resistance. So SBI has 1100 as an immediate resistance. ICICI has 1440 as your immediate resistance. Also, the options data suggesting the same thing. But once these levels are taken out, I think the momentum could continue. So, like I said, divided between Virat Kohli and Rohit Sharma, why not be fans of both? So, I would park, half in both of them.
All right. Okay. So that's the take coming in on both SBI as well as ICICI Bank. I think we've got the next one also on bank as well. I think Sanjana is calling us from New Delhi. Sanjana, a very good morning to you. Go ahead, ask your question. Hi, Sanjana. Can you hear me? Okay, I think we've some technical issue, but I think it's on HDFC Bank and she wants to know as to what should she do with her holdings. She's got around 6,790 odd shares at the levels of 257. Between the three, which one?
Actually, you know what? This is an easier one for me.
Yeah.
First up to Sanjana.
What a price. Yeah.
Why are you asking us, right? I mean, what a stellar price, and the fact that you've held on to this, kudos to you. Stellar, investment, this one. By the way, this is easy because just this morning on the morning show, I gave a buy call on HDFC. I could not explain the rationale, but here's the thing. The stock is close to its, medium to long-term averages of about 720, 730. It's consolidating there for the last 3 sessions. Take weekly, monthly, and even the daily setup, you're seeing positive RSI divergence. divergences. Mild but very early signs of buying in this one. So for me, this is very much a hold. In fact, if anyone's looking at entering a fresh, the risk reward ratio is also very favorable. So 699, that's your stop loss on the way up, 800 plus kind of targets. So from this level onwards, I remain constructive on HDFC Bank. Might not be a momentum play, but favorable risk reward ratio, continue to hold or add.
Got it. Just a quick one, Shaina from you as well on HDFC Bank, because her buying price is so attractive. She's sitting on massive gains as well. If the need is not there for the money, would you just recommend her to continue holding?
Yeah, that is true. I would recommend continue holding. See, the major sell-off has come from FIs. The FPIs have sold HDFC Bank, if you see, in the last 1 odd year. So I would say the correction is largely technical. And of course, actually, fundamentals also, they did see some bit of consolidation rather than, if you see compared to ICICI Bank, SBI Bank, SBI, which has given much better terms, in terms of fundamental performance. But I think HDFC now with the valuation so attractive, it's less than 2 times price to book. One should continue to hold if you're a longer term investor.
All right, okay, so that's the take coming on HDFC Bank. I think we've got the next one on Jubilant Pharma. This is from Subrata Mukherjee, who's writing us from Kolkata and wants to know if this is the right time to enter into this counter from a long-term perspective. What would you recommend, Shaina?
The stock actually, the numbers also are pretty decent. I would say that if you are an investor who's looking to enter into the overall chemicals, pharmaceutical space, that looks like a decent bet to enter in as of now.
Got it. Well, the next one's coming through on Shilpa Medicare or Aarti Pharma. Either of those, Kush, that you like is what Mohan is asking from Coimbatore. We also had another question from a viewer. He wanted to invest in the pharma space. So do either of these names make the list?
Okay, this is cheating. They already know I've given Shilpa Medicare so many times, even as a weekly pick, right? So obviously I have a preference towards that. But on a very serious note, this has run up far too much. If the team can bring up, let's say, about a 2 months chart of this, Shilpa Medicare, you'll see exactly what I'm talking about. Bring up the 2 months chart for, see, there you go. So this is the kind of move that it's already made. I remain constructive on Shilpa Medicare, but not at these levels. So perhaps closer to about 675, 650 levels you can buy. Aarti Pharma is an interesting stock, but in the last 5 sessions, it's just had a wild ride upwards. So I would not consider that for sure. But like I said, Shilpa Medicare, if you do get it close to 650, 675 levels, makes a good, interesting and a favorable risk reward ratio entry point.
Okay, interesting take coming in on that one. But the next one that we have is on Fujiyama Power, and Christopher from Chandigarh is asking whether he can continue to hold the 1,530 shares that he's bought at the levels of 329. Can he maybe add more at the current market price is what he's asking. Shaina, what would you recommend? Because 329 is the buying price. The stock is currently trading at 406. Do you think it makes sense to average at the current levels?
Well, actually, after a long period of time, the stock has started giving you a decent return. And this is in line with the numbers that are expected to be pretty good. Even if you saw the March numbers were good. So I would say, yes, you can add it at current levels.
All right. Well, the next one coming through, and this one's on Power Mech. Aditya Kiran from Hyderabad holding shares at 2962. He's holding 10 shares, Shaina, and wants to know if he can still continue to hold this for the long term. It's been below his buying price now, so is it a good time to buy more, Shaina?
It's a good stock to hold, actually, fundamentally strong stock. And I would say, yes, you continue to hold it for the longer term.
Okay, all right. The next one that we have is coming in, and this is on Sedemac Mechatronics. Subhash Yadav is holding 500 shares bought at the levels of 2,000 rupees. Seeking a long-term advice on this one is what he's saying. Any view, Shaina?
Well, I don't really have an opinion on the stock.
Got it. Enough data on the charts, Kush, to give any view?
Limited, but I think the stock trend has clearly been positive. 2950 was a resistance that also being taken out, and what a fabulous entry price, right? 2,000 rupees. So I would definitely continue to hold on to this one. Trailing stop loss on this one at about 2750.
This recent listings in the auto space, they've been just on a one-way tear, and Sedemac definitely qualifies in that too. But the next question, and Kosh, actually stick with that space because Bellrise is the next one. Now, our viewer has been keeping an eye on the show. This is Venkat Krishnan Ayyar. He's mentioning, Kush, you gave a call on Bellrise, I think. And he wants to know about a 3-month target price now if he should still continue to hold.
Again, not fair. This is my weekly pick this week,
yeah.
right? 248 पे buy दिया था, 258 target 1, 268 target 2. That's been. Why would you enter at 255 if it's a recent buy, right? Why would you enter at... Oh, anyway, I'm still very constructive on the stock. Had you bought it at lower levels, I would have said 268 pe profit book kar lo, but you can still continue to hold some quantity. Since your buying price is slightly elevated, I would say yes, you can still hold on to this stock. The trend, the momentum, very positive. It's also had a profit booking dip. It's got a few things going for it. I'm sure you can figure out by now. So I would say continue to hold. Keep a stop loss at 225. The structure, for this one remains very constructive.
Okay, all right. The next one that we have is coming on a very small name, Kush. Sampath Balaji is asking about precision camshaft. He's bought it at the levels of 240 and wants to know whether he can continue to hold this one or sell. Anything on the charts that you can give him perspective for?
Hate to be bearer of the bad news, but it's not got a lot of things going for it on charts as well. I know the loss is deep. Honest answer, exit.
We did a weaker set of numbers also coming in from the company yesterday. So continues to be largely flat today. But the next question coming through, it's on Kitex Garments. Now, our viewer is holding shares at 167. This is Baby John. He wants to know if he should still continue to hold for the long term here. What would you recommend here, Shaina? Could be a beneficiary of these FTAs coming through, but since it's down from his buying price, would you recommend him to buy more?
No, I would not. One is, of course, there's so much of uncertainty in terms of tariffs. And I would, the stock has really not given you a decent return, even if you're a longer term holder. So I would say avoid. No.
Okay, all right. The next one that we have is coming in from Sumit, who's writing us from Delhi. Saying between Grow and Lenskart, which one is a better bet to make a fresh entry into from a 1-year perspective and the right price to enter? Shaina, what would your view be? Because Lenskart overall Q1 has been very strong.
Yeah, so I think in terms of valuation also, while both are expensive, Lenskart, I think I would say at current levels looks more attractive than Grow. There are other interesting stocks available in the capital market space. So, but Lenskart is unique in its overall business. So, I would say if you want to buy one of the two, I would prefer Lenskart.
Got it. Well, the next question coming through, this one's on Polycab. Our viewer holding shares at 5,500, sitting on good gains on this counter and asking if he should book profits or continue to hold. Shaina, we briefly saw, I think the stock move closer to the 10,000 mark too, but would you recommend him to continue holding if there's no need for the money right now? What would be your opinion?
Yeah, if there's no need for the money, continue to hold. I would say the numbers also are pretty strong that they're reporting. There is going to be increased competition in the overall cable business by the year end. But I would say at current levels, continue to hold. He can keep a deep stop loss close to about 8,500 and hold it for the longer term.
Okay. The next one that we have, Kush, is for you. Sansera is the counter that our viewer wants to know about. Saying it's down in trade. Let's try to pull the stock up. It's down by about 1.8%. Do you think this is the right price to make an entry or wait further?
Actually the 3,600 to about 3,450 zone was the ideal one to enter. It's already seen a massive run up. Of course, fan of strength, so you should buy, but actually not when it's so overheated. The day low today happens to be at 3,600. So if you do get it again in that range, that's when the risk reward ratio will be favorable. That's when you want to buy. Not at these levels, they're slightly elevated, not from the terms of just the price alone, even from the momentum indicators overheated. So 3,450, 3,600, that's your zone to enter.
Got it. Well, that's on Sansera. Reacting today on the back of results, which were a good set of numbers, but most certainly what a re-rating that we've seen on the stock just in this year also itself. The aerospace vertical continuing to be a very big booster. If we can pull up the year chart right now, if we can, on Sansera Engineering. And that will show you the kind of move that we've seen as well on this particular counter. And there you go, about 125% that's rallied in this year itself. So that's on Sansera. The next one is on Sunflag Iron, Kush. Our viewer Prem has actually bought it at 381. It's a stock we've not discussed too much, but he wants to know if he should still continue to hold this counter.
Yeah, again, one of the calls that we had discussed just about a week or so ago for targets of 392, and I suppose that was hit. Yeah, that was hit. Now it's just seeing some profit booking dip. I would suggest you can continue to hold. What was the buy price again, Puneet? I'm sorry.
The buying price for this one, okay, I've scrolled down.
No, not an issue. Not an issue. I would suggest
it was 381. Sorry, yeah.
381. Yeah. So slightly elevated, but not an issue. You can continue to hold. 350 or thereabouts is where you can keep your stop losses.
All right. Okay. So that's the view coming on Sunflag Iron. But I think Nishant has next query. Who's writing us from Gurugram, asking about Max Healthcare. He's holding around 50 odd shares. The levels of 1040. Shaina, a good hold.
Yeah, it's a good hold. It's very well managed, expanding fast, but it is expensive. So if you're holding it, you have to be holding it for at least a year or more. In the shorter term, I think valuations are pretty expensive. They're doing pretty well. They're it's got 5,000 plus beds, and I think the growth also is going to be good. But valuations are slightly on the higher side. So if you want to buy on dips. But if you're holding, you can hold it for the longer.
Correct. The next one question is on CG Power. Padma from Bengaluru holding shares at 895. Asking a short to medium term kind of view if she should still continue to hold on to this counter.
But if you're holding, you can hold it for the longer.
Correct. The next one question is on CG Power. Padma from Bengaluru holding shares at 895. Asking a short to medium term kind of view if she should still continue to hold on to this counter.
You can continue to hold this one. I don't see too much of a disturbance of the primary trend at the start of this year. So obviously some consolidation, some profit booking was to be expected, and now it's again resuming its upward journey. Not too far from your buying price. I would suggest continue to hold. Recent swing 825. That should act as your stop loss. If that is disturbed, then the trend goes for a toss. But up until that, continue to hold.
Interesting. Okay, so that's the view coming in on CG Power. The next one that we have is coming in on. Okay, this is already taken. The next one that we have is coming in from Mr. Bala, who's writing us from Coimbatore. Looking to enter Bharti Airtel is what he's saying, and wants to know if this is the right time to make an entry for the next 2 years. Shaina, would you recommend that?
Yeah, I would say that yes, you can add. In fact, they are structuring in terms of their plans also, and discontinuing some of their lower end plans. I think ARPUs will be better over the next 1 to 2 years. Africa business also should do better. So I would say that it's a good segment to a good sector to be in, and with a 2-year holding, 3-year holding. So I would make an entry at any dips that I get.
Correct. Let's now start the rapid fire round in this edition of the show. Kosh as well as Shaina, you know the drill. First question on GE Power, Shaina. Utkarsh holds shares at 780. It's seen a massive run up in the last year or so. Should he still continue to hold?
I would say it's a hold, yeah.
Okay, the next one is on Apar Industries. Our viewer has been holding 21 shares since the IPO price and wants to know to continue to hold or sell this one. And that was around 30 is what he's saying. I'm not sure of the price.
It's at 14,000, 17,000.
Yeah, exactly.
Right
I mean, it is crazy if that's the right buying price. But I don't know whom to come to, but Kush, what should he do?
क्या ही बोले तब से लिया हुआ है. No, you should continue to hold. Even the near-term structure is positive. Massive, decline could be below 13,000.
Got it. Well, I think the last time I can see it was in early 2004 when that price was there. But what a move, and kudos to him for continuing to hold this as well. The next one's on GE Vernova. Lunar from Chennai is holding shares at 4,700. Shaina is asking if he should still continue to hold. How do you look at the valuations now?
Valuations are expensive, very expensive. So even on EV by EBITDA basis on any parameters. But the order book position is very strong, and they continue to get orders. I would say that yes, you can hold. After this huge run up, I think it is going to go into a bit of consolidation. So you can hold, keep a stop loss close to about 4,000. If it goes below that, it is better to switch.
Right.
Okay, the next one is on Lupin. Prasad from Kolkata is holding 25 shares at the levels of 2450. Continue to hold. Sell. Kush.
There is profit booking, but till 2200 is held, you can continue to hold.
The next one's on Fortis. A viewer holding shares at 980, Shaina, and asking if he should still continue to hold.
Yeah, you should continue to hold. In terms of valuation, also is one of the attractively priced hospital stocks.
Okay, Exide Industries is the other one. Dilip Kumar Rathore is holding 100 shares at the levels of 310. Hold or sell, Kush?
Good stock, good move right now. Definitely hold. Stop loss about 450, 460 zones.
Next one's on Reliance Industries. Our viewer bought shares at 1376, and this is Raman. He wants to know, Shaina, if he should still continue to hold. What would be your view?
Yeah, Reliance, of course, you continue to hold. We are likely to see a good listing of Jio, and that could give you some liquidity. So I would say that good Reliance, some liquidity. I would say hold.
And the next one is on Axis Bank, Kush. We talked about HDFC, ICICI and SBI, but what's your view on Axis Bank?
Yeah, why not complete the circle, right? No, it slipped below that support zone of about 1220 and 1225. So I would be a little circumspect at the moment on Axis Bank.
Got it. The next one coming through, and this one's on GE Shipping actually. Shaina wants to know.
Circumspect at the moment on Axis Bank.
Got it. The next one coming through, and this one's on GE Shipping actually. Shaina wants to know about the next 2 years, if it's still a good time to buy right now.
Well, the numbers were very strong that we saw for the quarter. And I would say because freight rates are continuing to remain high, it should continue to do well during the rest of the year. So yes, you could be buying, but I would say buy it at dips.
Okay. The next one is on NCC. Shaina Sumit from Bilal wants to know whether they can continue to hold this one. He's bought it at the levels of 170.
Yeah, I would say hold. Valuations are okay, and it's one of the better stocks in the construction space. So it's a hold.
Kush, let's also complete the circle on auto ancillaries. Endurance Tech is the next one. Our viewer Sushant is actually saying that stock could have had a breakout now. Is that what you also see, and what would be a target on Endurance Tech?
Totally agree. The number for the breakout is actually 3050. If that is broken out, the stock will see a massive run. Not that it already hasn't for the last 6 months.
Yeah.
But if that happens, I think 3300, 3450 very much on the card. So good read on that.
The next one is on Vidya Wires. We get a lot of queries on this one. It's a very small company, Kush. But any view on the charts? Our viewers bought it at the levels of 92.4 is what Puneet is saying. What would you recommend?
That's not me.
Yeah, not him.
You could ask me offline if it were you. No, I don't have a read on this, so I'd give it a skip for now.
Okay. Well, the next one is on Emphasis, Kush. Sandeep holding shares at 2,500 and asking what he should do with the 50 shares. It's been an underperformer, but what's your view now?
You can continue to hold. It's holding above the 200-day moving average, and got a few things going for it volume-wise as well. 2,400 stop loss.
Okay, the next one that we have is on Laurus Labs. Madan from Hyderabad wants to know if this is the right time to make an entry for the next 2 years. Shaina?
Well, yes, you can make an entry, but do buy it at dips because the stock has run up a lot. So I would prefer to buy it at slightly lower levels. And then you can hold it for the longer term. So lower levels, I would say somewhere close to about 1,750, 1,700, those type of levels.
Got it. Okay, so that's the view coming in on Laurus Labs. But with that, completely out of time on this edition of Fast Profit. Kush and Shaina, as always, thank you so much for taking out the time and helping us navigate through all of those questions that you tried to answer. But viewers, with that, completely out of time on this edition of Fast Profit, but definitely we'll be taking more questions at 2 p.m. Do stay tuned in. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑप्शन रूल के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तुम भी कैसे? कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where I get to the hottest companies, good stories, and also have they made alpha for the investors or not. Today also I've got a very interesting company, and this time I've picked an auto ancillary company. But before that, try to guess it. And yes, there is a welcome change. It's not from Pune, it's from Gurugram. It's that Gurugram based auto ancillary company. First hint. Second hint, the company is a leader in locking systems and rear view mirror. That's where they're having a high market share as well. I'm sure you're trying to guess the company's name. The stock is already a multi-bagger 3 times in the last 3 years itself. Also, one more hint I'd like to give you, and they're targeting a 450 crore PAT in the next 3 to 4 years. You know, this is something which we are all wondering. The company's name is Sandhar Tech. This is the company which we are talking about. This is where we'll do our entire research and also talk with the management to show what lies ahead for the company. But going ahead, what are the key questions to be asked, especially on the margins front, because there has been a little bit of concern in the dip, and will that normalize going ahead? Second important question or the query is the new projects timeline and progresses. Are they coming in the right time? Is there any delay or is there any preponement? Smart locks opportunity, the company is already there in the mechanical locks. So what opportunity does that come? The TAM, which is nothing but the total addressable market value. They have a lot of JVs, especially with foreign countries, and EV segment growth outlook. That's also we are seeing a very important move. Merger acquisition opportunities is especially important for auto ancillary companies in India, the way they are expanding their product shares or even the wallet share of the existing clients. The PAT target is 450 crore rupees in the next 3 to 4 years. what will be the reasons why the company is talking about this target. That would be something we should try to understand. And rarely this management talks to media, and we are having Jayant Davar, the chairman and MD at Sandhar Tech, where he'll open up about his journey, the company's growth plans, and of course the industry, which is showing a strong tailwind. But let's understand the company. What does Sandhar Tech actually do? Largely, in both two-wheelers as well as four-wheelers, they have their key products. I'm going to give you those breakup, but you have to stay with me. The company is, of course, the Gurugram-based auto ancillary company, and they cater to the OEMs. They are leaders in the locking system and the rear view mirrors. Just look at how this is. This is nothing but, if you have a two-wheeler, this is where the locking system comes in. This is mechanical in nature. So this is important. You can take a screenshot and understand what I'm talking about. But moving on, let's also understand that the company makes analog to digital converters. These are the converters coming in for the locking system, and also the sheet metals are there. These are the products around this segment. They have 41 manufacturing facilities. So you can imagine there is always a replacement capex, be it any big amount is coming or not. They have delivered a mixed set of Q1 numbers right now, but let's get into more details about the company. And the company's consolidated debt stands at roughly 948 crore rupees. Is that going up? That's the big question. But yes, company is expanding also. 60% plus revenue comes from the two-wheeler segment, and that's why a lot of products which I mentioned are from the two-wheeler space. Also, 6 JVs with Japanese, Taiwanese and South Korean companies, and that is where the R&D angle also comes in, where they can increase their product profile as well. Also, looking at the geographical revenue breakup, it's very interesting. Export is just 14%. That means the market is so big in the Indian market, talking especially on the locks front. 86% of that revenue is just coming from that segment. So this is an important point to actually note down. But key clients, you name it, these are the bigger clients: Hero Moto, Tata Motors, M&M, Ather, JCB, to just name a few. Across the segments, they are delivering, or you could say they have exposure to the major clients, actually all of the major clients, to be honest. If you are studying the investor presentation, 8400 crore opportunity is there for Sandhar only for smart locks. They have roughly 70% of market share in this segment. So that is the calculations which we have done for Sandhar. But let's move on from smart locks, looking at the story of how things are panning out. This amount is pretty big. Look at that. 70% of all two-wheeler locks are done just by Sandhar. This is a very important, you could say, fact. But going ahead, what may work for the company? This is important. They are having a stronger return profiles. If you're even checking the ROE and ROC numbers, you'll understand, especially for an auto ancillary company. Analysts remain bullish. We are going to give you the total analyst coverage also, but that will come in KYC ratings, not now. Third reason is the market leadership they're having in the two-wheeler segment, the way they are introducing new products. That is where the street is liking it. Also, they have guided for a 450 crore of PAT in the next 3 to 4 years. There is, of course, in a conference they had mentioned, so we'll understand that. And the larger market opportunity comes in smart locks, which has not yet even scratched the surface. Let's also talk about what may not work for the company. Higher net debt equity ratio is there, so a little bit of concern definitely comes in, or pressure on the balance sheet, as we say. Second reason is the higher receivables. The collection period, especially on a consolidated basis, is definitely, you could say, some pain is there. Execution risk might be there for key projects because a lot of moving factors are there and the new initiatives are going on. Also, I would like to point out one key concern which is there, which may not work for the company, is the higher raw material costs. We already saw that in the Q1 numbers, and maybe there can be impact in the second quarter, but we'll try to get that from the management as well. So this is the entire picture for Sandhar Tech. But let's understand, what are the key KYC ratings which we generally give to a company, where we judge their overall numbers with. We have income statement, balance sheet, cash flow and return ratios as well. We'll give you all the entire picture over a period of time. How does shareholding pan out? How does the street cred pans out? That's what we try to understand, and the valuations and the analyst take also. These would be the key rating parameters where we will be judging Sandhar Tech. Let's talk about the first rating parameter, that's the income statement. And largely, The income statement has done well, both revenue, EBITDA, net profit. The CAGR numbers have been really strong. The top line numbers or even bottom line numbers, especially on a 3-year CAGR basis. But yes, Q1 numbers, there was a dip coming in the margins, but nevertheless, it was pretty decent enough. It's not that bad also, especially last 3 years. It's still maintained in that 9 to 10% band as well. So in the long-term perspective, it seems like it's business as usual. So income statement, I have given this, a strong thumbs up as well. But balance sheet, a little bit of stretch is definitely there. The borrowings, however, has come down. The net debt to equity ratio is slightly on the upside, but there's a decent cash balance also. So I'm going to give this a neutral rating as well. So we spoke about the income statement, we spoke about the balance sheet, but let's try to understand the cash flow and understand how the operating cash flows are panning out, or is there any change. But largely it's kind of neutral, but yes, there has been a dip. Actually from FY24 onwards, the dip is coming in for the last 2 years as well, but the conversion has also come down a bit. But nevertheless, it's not that alarming also. A little bit of working capital stretch is also something which we are seeing. So it's a neutral rating from my side when it comes to the cash flow segment. Let's talk about the return ratios. I had mentioned you that the company is having strong return ratios and it's growing. The ROE trend, FY22, the way situation was panning out, it was down 7%, but then the momentum started coming in. Look at that ROE numbers, look at the ROC numbers. Let's get that number as well. We're seeing a good growth coming in, and this is coming actually repeating itself for both of these categories. So return ratios is strong, thumbs up as well. But let's talk about shareholding. What's happening here in shareholding? There are some divergent trends. Promoter stake is unchanged at 70%. A slight increase for the FIs when it comes to their numbers. From 1%, it has doubled to 2%. While for DIs, it's largely similar between that 16 to 15% mark. So it's a neutral rating when it comes to the overall shareholding. Let's talk about the street cred. What are the stock moving around, from this segment, how the stocks have done well over the last 5 years, or maybe say March lows, and this has been a multi-bagger. Last 3 years, the stock is up 3 times for Sandhar Tech. If you look at the last 5 years, not so much it has done, but it's decent 128% returns. But in the short term, medium term also, they have made money for the investors, and this is what the data is suggesting. So I'm going to give this street cred a strong thumbs up as well. Let's talk about valuations and understand what's happening here. Currently, the valuations are at similar levels with their 5-year average levels. This is of course a 12-month forward PE ratio, and as compared to the industry, it is still on the cheaper side. Also remember the peak which was their valuations, that went as high as 25 times. So definitely the stock is trading, you could say, fairly priced or slightly cheaper if you compare them with the industry. So I would say the valuations are still attractive for Sandhar Tech right now. So that's why I've given this a strong thumbs up. Analyst take, totally 5 analysts are tracking this counter. Not even a single one has either a sell or a hold rating. All of them have a 100% buy rating, and from the current levels also there is a significant upside potential. Look at the 12 months target price, that's at around 866 rupees per share. So overall, from the analyst take, I'm going to give this a strong thumbs up as well. Let's do a revision of overall ratings, how things pan out for Sandhar Tech in KYC. The income statement has largely been very strong. Balance sheet and cash flows is neutral, but return ratios has been growing for the last 5 years for both ROE and ROCE. Street cred, stock has made money for medium term and short term investors as well as long term, and the valuations are still attractive even after the stock going up, especially which they are at the same levels of their 5-year average 12-month PE. And analyst take is of course going to be pretty strong. Almost 5 analysts are tracking this stock right now. Not so much of it, but a decent pick of these numbers, but all of them have a buy rating. So net the total KYC rating comes at roughly, you could say, almost 5.5 to 6 out of it. So that's the total KYC rating for Sandhar Tech. But to get in more perspective, we need to get about the speaker. What's happening with the speaker. We are having Jayant Davar, the chairman and MD and CEO at Sandhar Tech. He'll be talking with us. But remember, there are some interesting snippets about him I'd like to point about. He has over 4 decades of experience in the auto component sector. Second reason, or the second point, is he's the alumni of Harvard Business School. So of course the pedigree is very strong, and so is the company's pedigree with international clients. Also, I'd like to point out he's having cred in ACMA, CI, and also a German entity as well. So strong presence all across, but the conversation continues with him, and of course he will be giving all his details, but just shortly after a break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Welcome back to Know Your Company, and we are discussing about the entire story of Sandhar Tech and how things are changing. And now we are joined in by Jayant Davar. He's the Chairman and Managing Director and CEO at Sandhar Tech. Of course, good afternoon, sir. It's always a pleasure to have you with us. We're talking about the numbers, how things are panning out. But the Q1 numbers, there was a margin dip also. But overall, how the guidance looks and how was the quarter?
Well, let me go back to quarter one, first of all, and say that yes, the margins have dropped, and the margins dropped on account of a large amount of uncertainty that happened with the Middle East crisis. If you look at our numbers, a lot of that has been impacted by the energy costs themselves. So I think we as a company have been impacted by almost 7.5 crores, which was lost or which will be compensated, of course, going into the future by the OEMs. But in this quarter, we lost almost 7.5 crores from energy costs. There were new declarations on the minimum wages. And for that, our company just in Haryana, in the first quarter, we've been affected by almost 6 crores. If you look at our new investments, the new projects, there again, we where volumes have still to ramp up. Although the orders are there, but we are gradually ramping up. We have a 7.5 crore loss there. So if you look at that cumulative itself, that itself is about 21 odd crores that got sidelined on account of some of these challenges that we had to face in quarter one. Of course, we are very, very positive, and with the conversations on with our customers and the price lag that we typically get when we have to get compensated, we are confident that further down in the year, the losses of quarter one will get normalized, and we will get some compensation for quarter one in the balance quarters. So that's on quarter one. Going forward, and you asked me for guidance, while we don't really release guidance per se, all I have to say is that we've been growing, and we've been growing aggressively for the past several years now. We have made adequate investments to make sure that the highway that we have for growth is unencumbered, and we see no reason why the same pace of growth that we've had for several years doesn't continue into FY27 and FY28.
And Jayant sir, a lot of new projects are also coming in, and you're having JVs, with a lot of companies. What are the key timelines and, progress which is happening all on time?
Everything is as per schedule. You may or may not be aware that we are setting up the largest die casting facility in the country. In fact, in South Asia. This is a facility that goes online and in production by the third week of this month itself. In all, in the new projects that we have declared and invested money, we've invested close to 500 odd crores, out of which in the quarter one, we've only been able to generate a revenue of 148 odd crores. We need to understand that most of the projects that we employ money in typically give us an asset turn of something like 3.5 times. So we are quite confident that we will build up the revenues along the way, and this will give us the headway into the growth that we are talking about.
And Jayant sir, from mechanical locks to smart locks, how big this industry is, and the TAM, which is the total addressable market value, what does that come in?
Obviously, we've been waiting for it for the last 5 years. It hasn't been adopted by the industry on account of higher costs. But I'm glad to say that a small percentage of the two-wheelers have taken on. And last year was the first year when one of the OEMs went into mass production. In fact, two went into mass production. Our volumes in the last year were very small. We did something like maybe 70,000 odd smart locks. This year, we are looking at that number to go up by 250%, which means a shade less than 200,000. The adoption is growing, but not as rapidly as one would have liked to. Typically, this is on account of the high cost that is billed with the smart lock. Going forward, I think the prices of smart locks themselves, with the adoptability of this in a mass sense, will bring down the cost, and I think adoptability will go up.
And from, of course, the ICE segment, the internal combustion engine segment, let's remove that and let's focus on the EV segment also. How business is panning out on that side?
Yes, so we have a target of more than doubling our revenue this year from the EV segment, where we produce the chargers, we produce the converters, and we do the motor controller units. They've been well accepted in the market. The market is growing, but this is an area where we are still losing money as a company, although it's small. We are hopeful that by the next financial year, we should be able to break even and then make headway out of that.
Right, and Jayant sir, what will be the merger and acquisition opportunities coming in? Because in your industry, the way you are growing, there is a need of the hour for mergers and acquisitions also. Anything there inorganically looking at?
Yes, we as always keep looking at that. There are some which are active right now, but obviously in M&A scenarios, there is always a slip between the cup and the lip. So as and when we are ready to announce, we will. As soon as there is something to be signed on, we will keep the market informed.
Right, there's always a mystery whenever there's a merger and acquisition, but yes, if it's announced, we will be tracking that as well. But so what will be the key growth drivers for the company, and also give me the angle of the industry, also how things are panning out? A lot of tailwinds are there. If you could just point that out.
Well, if you were to look at three large verticals out of the others that we have, the three large verticals, which is casting, sheet metal, and the automotive group that you spoke about, are the ones which are growing very, very rapidly. Here, it's not just based on the growth of the entire sector. It is based on the transferability of business that we have got as substitution to other suppliers, perhaps for the OEMs. And our order books are full, in fact, more than full. So we are grappling with balancing out capacities, activating the ones which have been put at a faster rate than what we had projected. The industry itself, you're aware, is growing very, very rapidly. So at this time, I would say all guns are blazing.
Fair enough. All guns are blazing, but let's try to understand a little bit about the numbers also. There is a replacement capex, there are some capex plans for the future, and some are currently undergoing as well as we speak. So what are the capex plans earmarked? If you could just help us out with the breakup.
Well, it's difficult to put a pinpoint on every number in capex, but suffice to say that a large part of capex is behind us. However, you would realize that when we have 45 manufacturing plants, there is some maintenance capex that obviously happens. But as a target, we are saying that we would want to limit our capex on an ongoing basis to less than 5% of the revenue.
All right. Thanks a lot, Jayant sir, for giving us the views on both the company and the industry as a whole. And of course, it's expected that the margins normalize in the coming quarters as well. Pretty interesting. And of course, best of luck for the future. So, of course, we're talking about how overall the KYC numbers are looking. For these numbers, I would like to point out. And let's just get in the numbers first of all, because the KYC rating is something which I need to show you. First of all, the income statement that has been pretty strong. And just look at that. That's a good momentum coming in, especially over the last 3 years CAGR number. Balance sheet and cash flow, take it with a pinch of salt because there is some stress. That's why I've given this a neutral rating. But for the uninitiated, and if you are tuning in for the first time, the return ratios have been really strong. And over last 5 years, both ROC and ROE have done well as well. Shareholding, not much has changed. Street cred, if it's a 1 year, or you could say year-to-date basis, or even from the lows from March itself, there has been a significant upward. Last 5 years, decent returns of 130-140%. But of course, this stock has made money for a lot of people. Valuations, despite the up move, the valuations are still cheaper, and that 5-year 12-month P number is something which I'm talking about. That is just at 16 times. Compare that with the 5-year average, that's also at 16 times with the peak which was there. That had hit 25 times. So compare this company with the other auto ancillaries, it is still on the cheaper side. That's why we have given this a thumbs up. And analyst take, totally 5 analysts are tracking the stock. All of them have given a buy rating. Not a single one is having a sell or a hold rating. The 12-month target price also is something on the higher side. So let's add everything. And the management commentary also, we just discussed that in our calculation, is 6.5 out of 8. That's the final rating for Sandhar Tech. Company has come for the first time in KYC and it's on the higher side of the averages which we generally give. So do note it down, and why we have got, that's the reason on the screen itself. So for interesting stories like this and many more in the auto ancillary space, or even the mid cap, small cap, or any other sector which you feel like, you can write it to us and we'll get those companies in KYC. For that, stay tuned to NDTV Profit, and yes, again, keep watching KYC.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial.
Some mood on Dalal Street as benchmarks failed to revive optimism. The Nifty trades near 24,300, while the broader markets have seen mixed moves with Nifty Realty holding on the ground, but almost all key sectors trade under pressure. Astral gains in response to strong Q1 results. Stock sees the biggest single-day gain since April of 2021. Lenskart 2 soars on the back of a stellar Q1 performance. KRN Heat Exchangers also reports a strong quarter. Street gives them a thumbs up. Ultratech Cement slips on the back of a block deal, 25 lakh shares of almost 0.8% equity change hands, led by the promoter. Of course, the holder seeks roughly $200 million from this one. Pilani Investments, which is of course the promoter family, have sold by roughly around 0.57% stake. RBI proposes new interest rate guidelines to make loan pricing more transparent and standardized. The floating rate loans will see benchmark resets capped at 3 months, while existing loans must transition to the new framework by April of 2029. Public comments invited till the 11th of September. Good afternoon and welcome back to NDTV Profit. You're watching Markets at 12 with me, Puneet Zaveri. This is a show that gets you the key big updates for the day, the top buzzers, as well as what you should watch and keep on your radar for the rest of the day. But a quick check of how the markets are doing, because we've highlighted the fatigue that's clearly visible on the index, right? We're back again above that 24,400. So what we have actually seen just in the last hour or so, a revival yet again. It's a very similar picture that played out in the closing show and the closing one and a half hour of yesterday, where we slipped down to 24,300, broke that level too, but ended much higher given the last hour buying gash, essentially, if I can put it like that. Let's also look at the contributors for the Nifty 50 and see which one are those big names that are contributing today. Bharti Airtel, Eternal, as well as Shriram Finance is one, but you're seeing more of a broader breadth that continues to have a major impact here. ICICI Bank, Reliance, Hindalco now dragging the index, but also let's look at the Nifty 50 heat map also. We spoke about yesterday about the big movers that were dominating. SBI was definitely one of them that was in the top gainer. Today though, it has been led by buying scene yet again on Tata Motors PV. They come out with results today. It will be a crucial result to watch. Yesterday the stock was down on the back of what we had seen because of N. Chandra's resignation, as well as across the board the Tata stocks continue to be under pressure. TCS hasn't seen that buying too much today, up almost 0.7%. It's the 8th biggest gainer on the Nifty 50, but Shriram Finance and Tata Consumers are the other names buzzing on the Nifty 50. Also look at the sectoral heat map as well as the advanced decline ratio very quickly. Not a particular trend that we are seeing yet again on the sectoral heat map front, but the advanced decline ratio as well has been very crisscross. Yesterday, the declines continue to have a bigger impact compared to the advances. Today though, that has slightly reversed, but we've seen that level touch through once again. Also the mid cap, small cap will reflect this, but the individual movers is where the action is today. And let's pull out the BSE 500 too very quickly. The small caps up in the green, mid cap in the red. But you saw Apar Industries down 4.4%, but Astral we spoke about good results, and we'll discuss that more in the show. Gujarat Fluoro and Scient as well as Gujarat Gas on the back of results are some of the other names. We now have Dhruv Joshi, research analyst at Mirae Asset Sher Khan, now joining in. Dhruv, very good afternoon. Thanks so much for joining in today. Let me first start off with, as we are wrapping up, almost just a couple of days left for the quarterly results to come through. I think there has been these individual pockets that have done very well. I think auto ancillaries are one where you're seeing the sectoral growth trend come through. But what have you picked up in terms of the bigger winners of Q1, and what is the preference essentially within those the bigger sectors basically?
Hi, thanks for having me. So what we're seeing at the moment across the board is that there has been great financial discipline across companies, across sectors. India Inc. has been primarily able to manage this macro concern pretty well compared to, I would say, global peers at the moment. At the moment, where we see, overall positives, autos, auto ancillaries, some parts of the FMCGs, and along with that, also some metal names have performed pretty well compared to the entire industry. Top line growth is a given across, so 20% kind of a top line growth across companies, across industries. We've been observing that. Cost pressures, although, yeah, they do remain a concern, but they've been managed pretty well, and financial discipline has been the kind of a top of the town at the moment. So, at the moment, when we come to demand and consumption, India continues to be resilient. Be it autos, be it FMCG, be it discretionary, everything continues to be pretty solid, pretty resilient at the moment.
Got it. Well, I just want to, and Dhruv, I'll come back to you because there are some important flashes on the bottom of your screen and just want to address that. Let's put those up on our screen as well. Tata Trust has actually gotten an email from N. Chandra on August 12th is what, the big important story and clarification coming through as well. He has conveyed his decision to not get reappointed as the chairman of Tata Trust. And those are the flashes that are coming in. Now, we've gone through with what was yesterday discussed in detail as well. But and this continues to be a very important developing story as well, because this has had an impact across what we've seen on the listed entities too. There has been a lot of debate of what could have led to N. Chandra not being reappointed and coming and essentially, choosing to essentially step down. But this is just in that we are picking up and we'll also get some of my colleagues to talk a little bit more on this. But definitely a big update that's come through on this, because Tata Trust essentially, if we will just wait for that update to come through, if that is accepted. But an important update nonetheless coming through on this particular one as well. But for now, the important flashes that we are getting is that they've gotten an email from N. Chandra on August 12th. This is Tata Trust, and that N. Chandra has conveyed his decision to not get reappointed as chairman of Tata Trust. So this continues to be a big breaking story that we are tracking here at this hour. You're not seeing too much of an impact as of now on stocks like Tata Steel. Let's look at TCS also. We pulled up Tata Motors PV, continues to be all of those important ones that got hammered actually yesterday in trade. TCS is just starting to see a dip downstairs, but we'll wait for some more update coming through. But these are important stories to track, because yesterday, as we went through the whole host of market guests that we had, all of them conveyed a very important point that he's been one of the bigger names, and it has been a sincere effort from Mr. Chandra to raise the bar at Tata Group. We've seen multiple key, the revenue growth also going from 6 to almost 16 lakh crores of the entities, the market cap overall at 22 lakh crores for all 25 to 26 companies under the Tata regime. But there have been some concerns, of course, either whether it's Air India or whether it's the digital ventures or the new acquisitions that the company has done, which haven't so worked out so yet. So all of these could have been potential reasons to not get reappointed yet again. But to make more sense of this, we'll also be joined by Alex very shortly to get some more perspective as well, because yesterday we did go through a whole host of guests, the letter that N. Chandra had sent across as well, not seeking his reappointment. So definitely these are big updates coming through as to what this could mean. They have mentioned that they will be looking to set up a selection committee as soon as possible, and that's coming in from Tata Trust. But definitely the first response coming through and big updates on this ongoing story as well. Now, so Dorabji Trust respect Chandra's decision to not offer himself for reappointment. Those are the other flashes coming through. And that continues to be a very, very important update as well as we have seen ever since yesterday, because all of those stocks now come back into focus yet again today, and those are the big ones. But joined in now by Alex to get some more perspective of what this actually means. Alex, firstly, of this letter that Tata Trust has received now.
So, Puneet, I think you've summed it up, but let me go through it, right? So this is a letter that has come through, or rather it's a press release, I should say, not a letter, it's a press release that has come through just a short while back. And it is the first official response from Tata Trusts. It acknowledges that a letter was sent on the 12th of August and that the nominee directors of the Tata Trusts have received an email from N. Chandrasekaran, the chairman of Tata Sons, wherein he conveyed his decision to not offer himself for reappointment as chairman upon the expiry of his current tenure, which is in February of 2027. The Sir Dorabji Tata Trust, which is meeting today, I believe, and we'll get details from my colleague Nimit, who is on the field right now, and he'll join us in just a bit to tell us what could potentially be on the agenda there beyond, of course, Mr. Chandrasekaran's decision. The Sir Dorabji Tata Trust, and I'm reading from the press release here, respects N. Chandra's decision not to offer himself for reappointment. I'm quoting exactly, "We place on record our deepest appreciation for his contribution and stewardship of Tata Sons and the Tata Group over the past decade. We thank him for his immense contribution during a period of significant change, growth and transformation across the group." The trustees of the Sir Dorabji Tata Trust have passed a resolution to initiate the setting up of a selection committee as soon as possible in accordance with the Articles of Association of Tata Sons for the purpose of recommending a person for appointment as the new chairman of the board of directors. We extend our full support to Tata Sons in ensuring a smooth, timely and orderly transition of leadership consistent with the values and long-term interests of Tata Sons and the Tata Group. All right. So that's the sum and substance of the press release that was sent out. We're joined now by Sriram Subramanian, who is founder and managing director of InGovern Research Services. Sriram, thanks so much for taking the time and for joining us on short notice. I hope that you heard what I just described from the press release. And nobody really would be surprised by the letter and the way that they have worded this. The fact is that a selection committee has been...
Yes,
good afternoon.
I think it was to be expected that the trusts would accept and the board of Tata Sons would also accept that N. Chandra's tenure of February 2027 will be end and that there wouldn't be any reappointment. I would think that the trust as well as the board now wants a candidate who is aligned to the vision of the trust as well. So N. Chandra, the only positive is that N. Chandra left on his own terms or is leaving on his own terms. Beyond that, I think now the onus is on the board to figure out a candidate who is aligned to the values of the trust.
Good. Also joined by H.P. Ranina, a corporate lawyer. And Mr. Ranina, we spoke yesterday when the decision came to light. It was not something that many people had anticipated. But your initial thoughts on the fact that a selection committee is going to be put in place, and this is something that they've voted on, the Sir Dorabji Tata Trust.
Yeah, good morning. What I told you was that this is a requirement of the Articles of Association of Tata Sons Limited, and therefore this is mandatory that they have to appoint a selection committee. Selection committee will now see who are the persons both in and outside India who are capable of running the entire Tata Group. You see, apart from being in line with the Tata Trust vision, we also need a competent man. The most important thing is the competence. The entire group is at stake. You just can't go by the fact that somebody sees eye to eye with another Tata trustee or not. The question is whether he's competent enough to lead the whole group, because the group is facing tremendous challenges in terms of huge losses which are made by certain companies, which are beyond his control. So we have to find a competent guy, and I hope that this selection committee will succeed in finding a competent guy who will be able to lead the Tata Trust, because we are concerned with thousands and millions of investors and stakeholders. And the Tata Group is a multinational group of India. So if anything goes wrong with the Tata Group, it will have an adverse effect on the Indian image and the Indian economy. So I hope they find the right person to lead the group and make sure that the group succeeds.
Indeed. Mr. Rania, I've got my colleague Nimit, who is on the ground and in fact who's aware of some of the developments that we're speaking about right now, as well as certain contexts which I'd love for you to comment on. So let me first go across to Nimit, who is at Bombay House right now. where the meeting has just concluded. The Sir Dorabji Trust has met, and I just told you about what they've done and the resolution therein. But Nimit, give us a little bit of context. This is not the only trust, of course, but this is the trust that has met. There is the second trust, which is the Sir Ratan Tata Trust, which has not been able to meet. So what is the context as you see it right now?
Yeah, so both these trusts together comprise the Tata Trust Group, and they control Tata Sons, and they have to together decide who will be the succession plan essentially after the stepping down of N. Chandrasekaran yesterday. So while the Sir Ratan Tata Trust cannot meet because of the restrictions placed by the Charity Commissioner earlier this year, the Charity Commissioner said that ongoing their investigation, no board meetings can take place for the Ratan Tata Trust. Now the Ratan Tata Trust has two options here. They can write to the Charity Commissioner, which I'm sure they will do, to lift this now that the succession planning needs to be done before the AGM on the 18th of August. But the second option, which was laid out in the Charity Commissioner's order itself, was that they can move the Bombay High Court against the order. So both options are now available to the Ratan Tata Trust, but as of now they cannot meet. The other trust here is the Sir Dorabji Tata Trust. Now the Sir Dorabji Tata Trust has of course met today, and their office is not here at Bombay House. It's at Cuff Parade, the One Trade Center, I'm sure. And they've come out with a statement, firstly thanking Mr. Chandrasekaran for his tenure and everything he's done for the group. But more importantly, at this meeting, they have passed a resolution to initiate the setting up of a selection committee as soon as possible in accordance with the governing documents of the trust, for the purpose of recommending a person for appointment as the new chairman.
Because I'm joined by Mr. Suhail Seth, who's author and someone that you will recognize from his work in the film space as well as in marketing. Suhail, thanks so much for taking the time. The latest development, of course, is that a selection committee is set to be appointed. This is something that the Sir Dorabji Trust has voted on. What do you make of everything that's occurred from yesterday to today and the course that is likely to take, the impact that it has for the Tata Group?
So as I said to your colleague Vikram Oza last evening, I think it is perfectly seamless and as one would expect from the House of Tata. It's very clear that the trustees have placed on record their deepest appreciation of Chandra's work, his contribution, and the time at which he took over. So that's been parked. There's absolutely no acrimony. I mean, it's very, very seamless. It is what any respectable group would do, which has the cultural DNA that the House of Tata has. So I think we don't need to, be anguished about it, because it's also very clear in the statement that you've read out that the board of trustees, means the Tata trustees of the Dorab Tata Trust, have very clearly indicated that they will support and wish to have some level of alacrity in which the selection committee should be formed, which will choose Chandra's successor. And Chandra also has said that, till his tenure is over, he will look for mentoring or look towards mentoring a successor. So I think it's all fine. I mean, there's no interpretative layering that you need to, glean over. I think it's very clear, it's in simple English, and it's plain. It's very respectful, very graceful, and tells you exactly how the House of Tata works.
This decision will be made with that kind of alacrity, though, and you anticipate that.
Well, I hope.
Yeah.
I hope.
As soon as the 18th, Suhail?
Uh-huh.
As soon as the 18th, you think, or you think it'll take longer than that?
I don't think the decision of the successor will be made on the 18th, and neither does the statement say that. The statement says on August the 18th, the AGM is supposed to be held if it isn't deferred. And on August 18th, perhaps what might happen is the selection committee's contours may be known. But to have a successor between today, which is the 13th of August, and the 18th of August, I doubt if that's going to happen. In the sense, you're not going to name Chandra's successor on August the 18th. What has happened very clearly is that Noel Tata and the other trustees of the Tata Trust have put in motion the process of continuity, which will therefore guarantee stability. That has happened, and that is very clear from the statement. It's a respectful and respectable statement, a statement which parks the gratitude that the trustees have expressed towards Chandra. And I think everyone needs to move on in the spirit, in the manner in which the House of Tata is run and governed.
Last point, which is that in the past, we've seen that Ratan Tata has taken over as an interim chairman while ensuring that continuity was maintained. Do you anticipate that Noel might do the same in the absence of a chair?
I don't think so. No. I'm not privy to Noel's conscience, but I don't think Noel has ever suggested that or even wants it. I was there on October 24, 2016, and at that point in time, I mean, I wasn't in the meeting, obviously, but I was there. And I remember it was the Tata Sons board which weighed down on Mr. Tata, on Ratan Tata, and said that you have to step in. And I still remember Mr. Tata saying, I will, but only for a period of 6 months. Because even he realized that 6 months to 12 months is an adequate time to find a successor. And when he stepped in on October 24, 2016, you remember by January, they had made the announcement that Chandra would take over, and Chandra took over in February. So, even the 6-month period was curtailed because Mr. Tata did not want the executive responsibility. That was forced upon him, and he took it because he wanted to ensure stability and continuity. And you've seen the result. They had Chandra's had a decade. So, this house of Tata is run differently. Its DNA is different. And I don't foresee any issues whatsoever at all.
And so just in conclusion, Suhail, there is the very real possibility that Chandra continues till the end of his term, and there's an easy glide path for someone new to come through and a mentorship to happen or a handover to happen. And as you say, this will be seamless.
Yeah.
Okay. Suhail, thanks so much for taking the time. Pleasure speaking with you.
Thank you so much.
Mr. Ranina, just your view on the point that was raised by my colleague, and that had to do with the meeting of the Sir Ratan Tata Trust, which is one of the two trusts that will ultimately weigh in on the decision. There is a legal aspect to this, and the possibility that they will have to approach the Bombay High Court. What is your opinion?
No, he's right. Either you appeal to the charity commissioner and ask him to give permission to hold a meeting, or if he refuses, then go to the Bombay High Court on a writ petition and ask the Bombay High Court to issue a writ of mandamus allowing the trust to have a meeting, because this is an essential item. So they can have a meeting just for this one item. I'm sure even the charity commissioner will agree. There should be no difficulty. Absolutely no difficulty. And they have to move. They have to move in the matter immediately.
They have to move in the matter immediately. Yes, it's a matter that it needs to be resolved quickly. Just a quick follow up to that, just so that everyone understands, Mr. Ranina, how this will follow through. The Sir Dorabji Trust has voted on this, and they have said that a selection committee will be formulated. If effectively, the second trust will also have to do that. And so therefore, what you're saying is that there will likely have to be a writ petition for that to take place. Once that happens, what happens?
Well, it will happen, and they have to move. I'm sure the Bombay High Court will agree immediately. I don't see any difficulty in this, because this is in the interest of the group. So nobody can have any excuse for not holding the meeting. So they will go ahead, but they have to act in the matter. They have to move the High Court today itself in the afternoon and see what if they listed tomorrow. Matter is listed tomorrow, then the matter will be decided on the spot. I don't see any difficulty.
I have a couple more questions about the process. My colleague Shrimi is joining in. She's bureau chief in New Delhi. Mr. Ranina, do stay with us for a few minutes more. Shrimi, what are you picking up? You're hearing something from your sources.
Yeah, completely. So, as we all know, the two important, trustees here, the Dorabji Tata, Sir Dorabji Tata and the Ratan Tata, both are the majority shareholder in Tata Sons, and both, representation in the upcoming AGM is equally important, and that is why the entire, the story which is there first, of course, that the Ratan Tata trustee has reached out to Mumbai Charity Commissioner. seeking some sort of immediate relief or at least the interim relief. And that is, they are trying to sort of secure that note from the charity commissioner. Whether that will happen or not, we need to see it. Since till August 12th, there was no word from the Mumbai charity commissioner. So that's one. So they perhaps exploring to move to court as well. And perhaps like all the experts saying that it's very important and crucial for both the representation to be part of AGM, they may perhaps get that, restraint order lifted. So that's one. Another point is that in today's meeting, what we are picking up, that beside the selection panel, which of course putting and everything set the motion for the succession planning, they're also kind of nominated one representative from the Rabji Tata, who will represent in the AGM on August 18th. Same from the Ratan Tata, but for Ratan Tata, they kept it ready because they can't do anything until they get the order in favor. And then accordingly, both the representative will attend the AGM. Now, apart from the succession planning, because that's of course the center of the entire thing, they're also looking at all the dividends, the amount, the accounting, and everything to be cleared in the AGM. And that is why it's important for both the trustee to be the part of AGM. So that's what we are learning so far, Alex.
Important updates that you're picking up. Thanks, Shrimi, for that. Mr. Ranina, what I would love to hear from you is your understanding of how this process will take place from this point on, assuming that everything follows due course, right? So the first thing, of course, as you pointed out, you've already explained why it's important for the Ratan Tata Trust to get that writ from the Bombay High Court. What happens from this point on to the selection of a new chairman?
So what will happen is that they will get an order to allow one of the representatives to attend the meeting on the 18th of August at the AGM. Then, according to the articles, it is mandatory to have a selection committee. So selection committee will be there, will be appointed. Then the third step would be to select the people, because selection committee, we do not know whether they're actually found out the members of the committee who will be on the selection committee. That will have to be decided. I'm told that according to the articles that there should be some 2 from the trust and 2 from both the trusts each and 1 from Tata Sons board. So they will be on the selection committee. And then the selection committee will take its own agenda, have its own agenda to invite people to see who is most suitable to lead the group. That should take about a couple of months. I don't think it can be done immediately. It may take 2 to 3 months. They will have to be interviewed. Those persons selected will have to agree to be appointed. If they agree to be appointed, then are they free to join the Tata Sons as CEO? All that will have to be decided. So it will take another 2 to 3 months for that new person to join. And after that new person joins, he will have to be briefed by Chandra, because the new man who takes charge cannot simply just walk in and start running the group. Sure. He will have to be briefed. He will have to go through all the issues involved. Yeah. So I think Chandra may be asked to continue even after February for a couple of months.
Interesting.
In order to brief the new incumbent.
Interesting.
So that he takes charge in an effective manner.
Very well.
It's going to be a 6 to 8 month process.
Very well described, Mr. Ranina, and appreciate your time, and indeed Shriram's time as well. Thank you so much for taking the time this afternoon. Shrimi as well, thank you so much for joining in, and everybody who participated in this. I think you held fort very well, Puneet, and it's an interesting development. Yeah. But there's lots to talk about, of course, over the course of this afternoon. We'll be talking about markets next, so stay tuned for that. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
Hello and welcome to Trending Stocks with me, Sharad Dubey, and joining in shortly will be Hiral as well. But looking at the markets, initially we had seen a gap down opening coming in, but now the volatility comes back, a sharp recovery coming in. Let's just get in the Nifty chart to show you how things have panned out. Initially a gap down opening, then you could see a long period of consolidation, but the moves in the last 15 to 20 minutes, we're seeing a good recovery coming in for Nifty. Let's see what Nifty Bank has in store for us. Of course, it's a lackluster day of trade as well, but no major recovery is happening for Nifty Bank. But nevertheless, the chart setup looks like there is a volatility at play. Let's pull out the Nifty Small Cap Index also to show you what are the stocks which should be on your radar, where the momentum is still strong. It is still in the green, a good strength coming in. So a little bit of value buying is definitely happening on the charts. Also, apart from this, let's look at the key sectors where the actions are happening. Let's pull in the sectoral indices also, where we see the most amount of momentum is coming in. Especially look at the realty space, little bit of buying is coming in, but most of them are in a range. A little bit of sell-off has intensified in the metals, commodities and the oil and gas. Also, let's pull out the advanced decline ratio to show you how things are moving in the broader scheme of the things. It's largely even Stevens, but almost 3:2 ratio in the favors of bulls. So that means there is a good strength overall coming in the markets as well. Now speaking of that, of course, Q1 numbers will also be at the fag end of it, and we'll be tracking a lot of important earnings as well. But just moving on, we are with our guests also right now, and we'll be talking about the technicals for both Nifty and Nifty Bank. And Rupesh Solanki will be joining us. Rupesh, hi, good afternoon. Always a pleasure to have you. Seems like a little bit of Nifty and Nifty Bank. I just wanted to get your view before we start the rapid fire round on the recovery in the markets. Do you think this will sustain?
Yeah, definitely. It seems the pullback will sustain as you have spoken. The index today took support around its 20 DMA, which is around 24,300 for the second consecutive day. This is a very good support. So I do have a view that as long as the Nifty sustains above its 20 DMA, that's about 24,300 on a closing basis, then we have a possibility that we may restart the new upswing and may test around 24,600 in the coming next few sessions.
Rupesh, let's start our rapid fire round. First stock is Sarda Energy. Your views on it and which technical level should we be tracking?
Yeah, Sarda Energy, we are seeing a good momentum today. Almost 1.50 crore shares are already traded, and a strong bullish candle is in the formation. Technically, the stock has formed a double bottom around 490 and has just started a new upswing. So I do expect in the short to medium term around 600 levels, and we must keep a stop loss of around 490 for the entire position.
And Rupesh, the next stocks, Black Box, of course, corporate developments coming in. Is there any trade to be made here in this counter?
Yeah, definitely there is a trade to be made. In yesterday's session, the stock had formed a good bullish reversal around the swing support of 720 and has started a new upswing. Definitely one can enter long positions around current levels, keeping a positional stop loss of around 730, and I expect targets of around 960 to 1000 in the medium term.
And Rupesh, if you can get the charts of Astral, very strong set of numbers and one of the best performance if you compare that with the peers as well. A good time to take a little bit of profit off the table from this counter?
I don't think so. Looking at the derivatives data, yesterday we have seen a very huge long build-up on the counter, and as of now the stock has formed a strong bullish candle, and it's just testing the 61.80% retracement of the entire fall from 1,760 to 1,320. There may be some intraday profit booking possible, but I have a bullish view on the counter, and one should stay invested in the Astral for a more medium to long term perspective.
Stay invested in Astral, that's the call coming in. But of course, apart from Astral also, let's talk about the next stock which would be in focus. That is NetWeb Tech. I want to get that stock as well on the screen. Is there any trade to be made here?
Yeah, definitely. NetWeb is one of the outperforming stocks in the IT space, and as we speak, the stock is just 100 points away from the all-time high of 5,230. The stock is in a good momentum, and I would advise to stay invested in the stock, and do expect a new all-time high in the next 1 to 2 trading sessions.
Right, and the next stock is Thyrocare. I wanted to get your views on it. Of course, the volumes are also moving, but is there a trade to be made here, Rupesh?
Yeah, technically, Thyrocare seems that today we are seeing a day of profit booking, and as we speak, technically it is forming a bearish engulfing pattern, which indicates profit booking at higher levels. We can buy the stock a bit after some correction, maybe around 570 would be a good level to watch out.
Right, and Rajesh, your views on Godavari Power?
Godavari Power, technical speaking, it's an intermediate downtrend, continuously falling from the high of around 315, and as we speak, the stock is trading around 240. It is falling within a descending channel pattern. As of now, there is no trade in the counter.
Right, so that's the end of the rapid fire round. But over to you, Hiral.
Okay, thank you so much for that. In fact, let's move to the management of IndiGrid, which has seen an interesting set of numbers. If you talk about the operational revenue, 18 to 19% is the kind of growth, 23% growth in terms of EBITDA, and they've maintained their FY27 DPU guidance of almost 16.48. Now, the NDCF reserves, they have dipped this quarter for distribution. However, they've also won, the grid that they've won has lifted acquisition pipeline as well. To talk to us, Meghna Pandit, CFO at IndiGrid, joins. And Meghna, welcome to the show. Always a pleasure to speak to you. Overall, if you have to look at the quarter gone by, operational revenues, EBITDA, DPU guidance seems to be okay, and you've won 2 new transmission projects involving almost a 5,800 crore capex through EnerGrid. What does this actually tell you in terms of FY27 as a year?
Sure. I think first quarter has been again seeing strong financial performance, which is showcased in the numbers and the growth on revenue as well as EBITDA, basis which the guidance for DPU, distribution per unit, for the quarter of 4.12 continues. EnerGrid is actually the development company which we formed along with BII and Norfund, and it's EnerGrid which has won 2 projects on the transmission side with a cumulative capex of around 5,800 odd crores. For IndiGrid, what it basically means is the pipeline of projects which we will be acquiring from EnerGrid. It has now gone up to a cumulative number of about 13,500 crores, which means it's a good pipeline of identified projects that IndiGrid will be acquiring over the next couple of years. For FY27 particularly, we will look to acquire at least 2,000 crore of assets from EnerGrid as and when they become operational during this year. So that again bodes well from a growth standpoint for IndiGrid.
We're running short of time, so I'm just going to take one more question with you. Renewable energy and BESS opportunity, how big is that going to become? And what kind of returns can investors actually expect from BESS projects as compared with the traditional transmission assets?
Well, renewable and BESS, they go very hand in hand in terms of the growth opportunity. It is a humongous opportunity considering the kind of peak demand that we have witnessed in this quarter, 270 gigawatt of peak demand that we saw. On the BESS side, there is a requirement of 80 gigawatts of storage capacity that needs to come up by FY 35-36, which bodes really well. And looking at the intermittency of power from renewable generation, storage is the one which will address it. Similarly, from a return standpoint, I would say that battery energy projects, standalone battery energy projects, contracts are very, very similar to transmission projects, where we get paid on an annuity basis, and fixed tariff projects for a contract life of about 12 to 15 years. So from a return standpoint, once the projects become operational, I would say more or less in line with what transmission projects deliver on the returns front.
It's going to be interesting as we speak. Stock not doing too much, but thank you, Meghna, for joining in. It's always a pleasure to speak to you. Let's quickly just address the flashes at the bottom of your screens in terms of anti-dumping duty, which has come in. Now, China has added Sterlite Technologies to the anti-dumping list, is what we're picking up so far. Let's see what the other lines that are coming in. The US government is extending ADD on R32 imports from China as well. Apart from that, they continue the anti-dumping duty on India optical fibers. Let's pull up the counters on the screens. If you can just have a Sterlite Technologies and see what the counter is doing in trade, because the company has been added to their anti-dumping list. If you can just have an intraday chart of Sterlite Technologies, no major movement, that mild dip coming in, but the stock continues to trade in the positive. But Sharad, over to you to talk about what next are we looking at.
This is, of course, a very important development coming in. It's expected to be a bit positive, and we are joined in by Varsha to actually understand what is this anti-dumping duty and whom does it actually benefit.
it's about R32 gas, which are used in your ACs. Now, this is positive for SRF and Navin Fluorine. Now, what's the news? The news is that the US has continued, anti-dumping duties on R32 gas, which is being imported from China. Now, why? Because US believes that the Chinese companies, were selling this gas in US at a very cheap prices, and if those extra duties are removed, then the Chinese import could become very cheap again, and the US manufacturing could lose business, and US could suffer losses. Now overall, so overall, this is positive for SRF and Navin Fluorine. Why do I say that? Because they have huge capacity and they are also expanding their capacities. And we have recently seen these companies giving good set of numbers also. And everyone is bullish when it comes to R32 gas because everyone is putting up the capacity. So hence, if anti-dumping is being extended for China, Indian companies will have a benefit when it comes to SRF and Navin Fluorine.
Thanks a lot, Varsha, for that. Rupesh, a quick view for SRF, Navin Fluorine, which we are discussing. Varsha just mentioned. Anything on the technicals?
Yeah, definitely. Navin Fluorine looks better than SRF. As you can see, the stock is in a steady uptrend, Navin Fluorine, and last week the stock had registered a new all-time high, which was around 8,730, and we have seen a decent correction. And the stock is also holding the last week's bullish gap around 7,800. So this is really a very good trending stock, and I would advise to stay invested in the current stock, keeping a stop loss of around 7,700, and we may yet again see a new all-time high soon.
Okay. Thank you so much for joining in, and always a pleasure to speak to you as well. So that's the view coming in on individual stocks. But SKF India, an interesting quarter that we're looking at over here as well, because this is the first full quarter post the demerger. Stocks seeing gains of nearly 4%. Let's get in the management to talk to us about this as well. We have with us Mayank Holani, CFO at SKF India. Mayank, welcome to the show, and always a pleasure to speak to you. Help us understand, overall, this is the first full quarter, if I'm not mistaken, reflecting the new structure post the demerger. So if someone has to now assess the standalone automotive focused business, what is that trajectory going to look like if you have to take cues from here with regards to FY27 as a whole?
Hi, good afternoon. Pleasure talking to you. See, this is not the first quarter post demerger was October to December 2025, right? But yeah, this is the first full financial year post demerger. And we have seen a good growth in revenue of about 27% increase in revenue from operations versus previous year. While if you look at quarter on quarter, it's almost flat from last quarter, because obviously it was a very high growth number. And EBITDA also sees a recovery from the previous quarter, which was again impacted by the demerger related items, which are one-off costs. So that EBITDA comes to a normal level now, I would say. And if you compare it with the previous year, it's like marginally higher than the previous year same quarter when we compare only the standalone numbers, but it's in the normal shape. And revenue, obviously, for the automotive standalone business, we are at about 27% growth versus previous year.
Okay, you've indicated a near-term PBT margin of target of around 11 to 12%. How quickly can you achieve that? And is that number going to be sustainable going ahead?
So see, we are, if you look at the quarter, we are at 14% PBT, 14.3%, which is close to 60 basis points higher than the previous year, while EBITDA is about 17.1%. So we expect this level of margin and profit to sustain for the year as well.
If you have to look at 3 years from now, will SKF be known as a bearings company or increasingly as a technology and mobility solutions company? Where are you moving towards now?
Yeah, I think our focus is on moving towards more technological advancement and bringing new products to the market. And also in case of our distribution business, we look at providing more solutions to the industry instead of just plain bearings. And we draw a lot of strength from the group's cutting edge technology and the R&D facilities, which help us bring new products and working alongside our OEM customers to bring solutions for their new requirements. As you see, automotive market keeps on evolving and new vehicles, new products keep coming. So we also keep working along with our customers to bring products suitable for their new vehicles and new items.
Right, Mayank. This is Sharad here. I just wanted to understand the capex amounts, which you have allocated. Will there be a replacement capex also, and what could be the numbers in the coming years?
The capex which we announced a couple of quarters back was about 500 crores over till year 2028, and we are on track on that. And that capex is primarily going towards adding new capacity across our three plants, Haridwar, Bangalore, and Pune. We are adding new production lines, which already this year also we will be investing close to 200 crores in capex in the current fiscal, which is primarily going towards increasing the capacity. And by probably by 2028 fiscal, we will have the capacity, the current capex cycle completed.
Okay, lots to watch out for. Thank you, Mayank, for joining in. Always a pleasure to speak to you. The stock up seeing gains of nearly 4% as we speak. But moving on to the cement and the metal pack. Now, the Parliament has passed the MMDR Amendment Bill 2026 with an aim to boost the critical mineral exploration and development across India. And a lot of developments that are happening in these two sectors. Who better than Rakesh Arora, founder at Go India Stocks, to talk about this? Rakesh, good afternoon and welcome to the show. It's always a pleasure to speak to you. My question coming to you over here is, we're talking about the MMDR bill. Now, if you have to look at the impact, the way we've looked at it is, there will be an impact in terms of cement companies, there will be an impact in terms of metal companies as well. If you could just lay down the foundation for us in terms of how big an impact this could be and how do you see it translating moving ahead?
Okay, so thank you for having me on the show. There is a little bit of ambiguity that state government have right to tax anything which is connected to land. And since mining is also connected to land, there was a little bit of an extension. So this new amendment is supposed to clarify and put a limit to what the state governments can charge. Now the numbers are very huge. The numbers were from retrospective 2005 onwards. And the absolute amount which the states would have gained would be between 1 to 2 lakh crore. So a huge number. So this is a big relief for the companies. But nobody was expecting that it will come through. So not a direct impact on the stock prices, but obviously an overhang is removed. Now, what kind of benefit these companies will have in future will depend on what kind of limits the central government sets up. So currently, state governments are charging a little bit. If the central government sets a limit which is higher than that or around that, maybe there may not be too much of gain. But what it does is it does remove all the uncertainty, and that is kind of welcome. So as you rightly mentioned, the companies which benefit would be like NMDC or the cement companies or Coal India. All these guys were on old royalty regime, and they were seeing a sharp increase. So these are the companies which would benefit out of it.
This reform ultimately will be margin accretive for cement companies, or do you think that the benefits that everyone is talking about are overstated by the market right now?
So as I mentioned, it's difficult to quantify till we know what the central government actually puts the limit at. So central government is just reserving its right to put the limit. There are no limits in this act. They have to be notified separately.
And would you expect, say, in terms of value chain, which are the metal value chains that will gain? Will it be iron ore, coal, aluminium, zinc, or copper, if you have to give it in chronology?
So iron ore is, one of the most talked about. So definitely iron ore is the top of the peg. Coal is another one because Coal India was, paying a little bit of per ton basis, but it was getting passed on to, I think the power companies and eventually to consumers. So, that value chain would benefit the power companies and the state electricity boards and all that if that comes down. Coming to other metal or cement, the value is not that much as a percentage to the finished product. So it doesn't really matter, as much as it would for, say, coal or anode.
Okay, so that's with regards to the MMDR bill. Rakesh, the other thing is with regards to Aditya Birla Group's decision to go ahead and charge brand royalty across group companies. How significant do you think is a step like this, and what is the kind of impact that you're looking at?
So currently the number being talked about is small, but this is an unnecessary distraction for investors. We also need to know what kind of value they're getting from this royalty payment. So, but this is an international trend. International companies charge, and now the Indian companies are also waking up to it. Vedanta is already doing that. So it's a common trend. But let's hope that the number remains small. Till time it is small, I think people might ignore it. But if they try to increase it next time, there would be sharp derating for these companies.
Okay, so help me understand on this now. How should investors look at it? One, is the value shifting from the listed entities to the promoter holding company, or as a legitimate payment for brand equity? That's one aspect of it. And two, you're talking about a royalty, as you mentioned, which is a very small number of revenue, and it's capped in some cases as well. So is the concern going to be about principle than the absolute cost?
Yeah, so meaning if it is fair, I mean, obviously, these group companies gain from their parent. Meaning, if you take the name of Birla or Tata, obviously they have a brand value, and these companies benefit out of that. So there's a little bit of payment is probably justifiable, and so that 0.25% that they're talking about seems okay. But if the intention is to, shift the value, that is where, investors will have a problem. So at the moment, I don't think that seems to be the intention. And so it's kind of a non-event, I would say. But we have to wait and see in the next few years how things pan out.
My last question to you is in terms of, Rakesh, what's happening in the metals and the cement space. Now, cement, everyone's watching out for what are the kind of price hikes that could come in, when, and whether the markets will be able to absorb it, and what that FY27 will look like. And likewise, metals have seen a good run as well. What would you advise investors to do in both these segments?
So cement sector has been out of favor for some time, and because we had two giants who were fighting it out for market share, and Ultratech, is saying that the main rival Adani is not able to really get its act together, and they are pushing for market share gains, and that's why the price rise is not sticking. There was some price hikes taken, the previous quarter, but that was largely to offset the sharp increase in cost, both petcoke and diesel prices. And we are currently to lean season, so probably September, October would be the time to reevaluate. How the things are shipping out. Normally, cement stocks bottom out around October, November, before the busy season. But as I said, till the time Ultratech is looking to gain market share, we'll have to, see that EBITDA per ton is stuck at the levels which has been for last 3-4 years now, and that is what is holding back the re-rating of the companies.
Okay.
Coming to metal stocks, it's playing as per the book that we thought. Metal prices went up quite sharply. They have corrected, around between 15 to 20%. Now we're seeing a tactical rally. Nothing much here. It's unlikely that they'll go to their previous highs back. So investors who are stuck in these stock, probably should look at these relief rallies which are coming because of good results and a small rebound in commodity prices to exit. Probably wait for better entry points. Steel looks slightly better than base metals. Aluminum, I'll wait for $2,600 aluminum price to really get into.
Interesting, so that, thank you, Rakesh, so much for joining in. I mean, a whole host of things that we've discussed and good clarity coming in there as well. So that's Rakesh Arora talking to us about the MMDR bill and what's happening in the metal and the cement space. But moving on. Work hard is in focus as well. In fact, a sharp turnaround is what the company has delivered in the first quarter. The stock has cooled off from the day's highs, but still trading in the positive 2.5% up move is what we are seeing. If you talk about the revenue, a 26% growth, EBITDA has actually jumped 2.6 times on a year-on-year basis. So strong numbers there. Joining us, Habil Khorakiwala, founder and chairman at Walkard. Welcome to the show, Mr. Khorakiwala. Always a pleasure to speak to you. A 26% revenue growth, good EBITDA growth as well, and good amount of margin expansion. What have been the key drivers behind this sharp operating leverage, and what is that medium-term outlook looking like?
See, our performance both on top line and operating results and bottom line has been consistently good in last several quarters, and that is being continued. The major reason is that we have overall top line growth of about 26%, and our EBITDA, which was negative last year, is in a positive space this year at 107 crore rupees. Yes.
Okay, so that's overall growth. And what about the biotech revenue? That has more than doubled. Now, how much of this growth has come in from insulin, and how sustainable is this momentum going to be, Dr. Khorakiwala?
The major part of revenue, as you would have noticed, has come out from our international business. And that is being the important focus area for future growth. And that higher level of growth will continue during the year.
Okay. You've also in the past spoken about opportunities in biologics and new molecules. So how should one actually think about the revenue ramp up, the capex that will be required, and the growth trajectory over the next 12 to 18 months?
Our other normal business will continue to grow at least 20% plus over the next 12 18 months. And our new molecule like Zenix would be additional one as far as the revenue is concerned. And as far as because there is an initial investment in creating organization. So we would be either at a break-even point or little plus or minus.
Okay. So, the next question that I have for you, Mr. Khorakiwala, is that all of this will start to play out now. When do you see normalization? And there is going to be a point in time where you will see that hockey stick kind of growth coming in. Will it be 28? Will it be 29? Which years will we see that?
Definitely 28, FY 28 would see a very beginning of a rapid growth. At 29 onwards, you will see our growth like a hockey stick.
Okay. With regards to the R&D spends as well, they've been relatively controlled. But now, with the pipeline that you have, which is advancing towards commercialization, will those spends actually increase?
I think our R&D spend would remain at 10 to 12% of our revenue for next 3 to 5 years, because we intend to take these products which we have now introduced in India, that is MROC and MICNEF, over a period of time as a global clinical trial and go in the Western market. Similarly, our 6777, which is a unique once-a-day antibiotic, will be entering phase 2 clinical trial and phase 3. So the next 4 years, 5 years, we have R&D expenses, which will remain more or less based on the top line. So it will increase.
Okay. And what is the kind of impact it will have in terms of margins? Because if your R&D spends are going to increase, margins and bottom line to some extent will be impacted.
I must tell you that our margin will continue to improve year on year. And it will improve significantly once after FY29.
Okay. Let's also talk about, Zenix in the US and in India. What are the timelines in terms of commercial launch? And you will enter US with this one. You also have Audrate and Foviscu that will follow at some point in time. So how does the strategy take care, of you going to work on all the drugs simultaneously? And second part is, in terms of the peak revenue target that you have, you've said $1.5 to $2 billion of Zenic. What is the expected timeline to achieve this peak?
When we talk of a peak sale, it always means during the life of patent. So it is quite possible that we reach this peak sale little earlier also. But definitely during the life of patent, that would be our peak sale as far as Zenic is concerned. We might do better actually, the feeling and perception as we are getting. But I think we stay with those numbers. And the other molecules we will be introducing over a period of years actually. And at a given point in time, we cannot introduce too many products because the new molecule, I have the same customer group by and large. So there's a lot of medical and scientific communication requires for them to understand a new molecule. So we need a reasonable gap between the molecules, and that is how we are monitoring our research program, so that based on the potential and the priorities from the business point of view and scientific point of view, we will go on introducing various other products over a period of time.
Okay, that's going to be interesting. My last question, the Antibiotic Academy, what is the strategy there? Because, the scientific education platform, now how will this directly convert into commercial adoption and hospital formulary listings for Zenic in India? I mean, what's the strategy there?
See, yesterday we had our first session of WOCAT Antibiotic Academy. And we had some of the leading doctors from India who participated in a panel discussion. And also they shared various case studies that actually had during our compassionate use. And we had more than 1,000 participants yesterday. And that was our first meeting. And our fundamental objective is that we want to create a position in the doctor's mind and in the society how to use the antibiotic in the right way, for the right patient, in the right conditions, and at the right time. So I think the new sciences are emerging in management, scientific management of anti-infective drugs. And our idea is purely academic to do that. But the benefit we get, or the country will get over the years, because this is an initiative we want to extend on a global basis over a period of time, is we create a presence of India worldwide as a more scientific and academic organization. So I think it benefits in the background, not directly to a specific product A, B, or C. That is, our business organization will take care. So we will keep the focus of this academy, scientific and medical primarily, and sharing of experiences with the doctors. So it is really a dialogue amongst them and between the different part of the science who's involved in finding a new drug or using the new drug. So that is what the academy is trying to achieve. And that is where we create a position of acceptance, credibility, not only in India, which we have, but on a global basis. And India is the first thing where we are trying to fine-tune the model.
Okay, so lots to watch out for on this front as well. But Dr. Korakiwala, thank you so much for joining in. Always a pleasure to speak to you and get insights. Stock at the day's highest levels as we speak, seeing gains of nearly 3% in trade. But we'll quickly slip into a short break. On the other side, we'll be right back with lunchtime trades from the NDTV Profit studio. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on
Hello and welcome. You are watching Lunchtime Trades, the show that gets you a roundup of everything that is happening in the world of commodities, news and updates, and of course on the top buzzers at this hour while you grab your lunch. But now let's take a quick look at the markets. What's happening here? There was a bound of recovery for both Nifty and a little bit of Nifty Bank. But it seems like those gains are coming off. So there is volatility at play. Let's just get in your top gainers also in the Nifty. What's happening in the entire picture? Of course, a little bit of volatility is there for your benchmark indices, but largely we see the momentum is there, especially on the Tata Group stocks. That's where the buying is happening. Select IT is also there, but what's not working are the banking names, especially ICICI Bank. There's a drag coming in from Hindalco as well, but it sounds even Stevens right now, and there's no clear trend as such. And remember, today is Sensex expiry also. Let's just look at the sectors also, what's happening, and most of the sectors are technically in a normal range right now. Nothing much to look at. Of course, the defense FMCG buying is there, but the sell-off has definitely intensified when we talk about the metal pack. But speaking of metals and commodities, we are joined in by Pranav Mer. He's the Senior Vice President of Commodity and Currency Research at JM Financial Services. Good afternoon, Pranav. It's always a pleasure to have you with us at NDTV Profit, and I'd like to talk especially on gold. Now, that has started to ease after hitting more than almost 2-month high levels. But yesterday was an important event, softer US inflation data coming in. How do you see this actually pointing out? And of course, the July CPI data is something I'm talking about. Pranav.
Yeah, good afternoon. Hi. The data was mostly in line with expectations. We were expecting the inflation to ease out around 3.4 to 3.5% on a year-on-year basis, while the core inflation could inch further lower since the oil prices had already taken a bit of a correction from after hitting from around 102. It had come down close to 75. So the data was mostly in line with expectations. So what this data has done with it, and that it has not trimmed down the expectation that the Fed could go in for a rate hike when they meet in the month of September. So the probability is just around 42%, and that is what we've seen supportive to the gold and silver prices. But definitely, we have already seen a good recovery in gold prices from around $4,000. Prices have risen close to $4,400. So a little bit of the data was also priced in, but some profit taking we have seen coming in into yesterday's session. Today's session also prices are trading slightly lower. However, the trajectory for gold is likely to remain a little bit on the positive side that we see in the coming sessions. We may see prices scaling up close to 4,500 and towards 4,600 levels as well, but we don't expect prices to go beyond that, since we have the festive season also as well upcoming in the domestic markets. So that should give some support to the gold prices. The ETF investors have been adding long positions over the past 3 weeks. So this is giving some additional boost to the up move into the gold prices. However, if somebody is looking to go long, I feel we should wait for a correction of at least 3 to 4% before starting to go long in gold again. And possibly the support that we see in gold around 4,000 to 3,950 levels on the downside, which is in the dollar terms.
Exactly, and of course the global and the domestic, there might be a little bit of aberrations also because of the demand which comes in during the festive season for India as well. But moving on our conversation, there was a major oil spill, that has spread across Oman's coastline. Tanker which was carrying roughly 800,000 barrels of Russian crude. This spill is of course going to be an issue in the marine life, but along with that, fresh vessel attacks have also started coming in. We had thought that these attacks would come down, but this has maintained over the last, say, 10 trading sessions. How do you see this, Pranav, and this elevated levels of crude? Do you think will they remain above that $85-86 mark at least till the weekend gets over?
For crude, we don't expect a bigger correction in crude prices, even if there the news of any news that comes in from the US-Iran side, or whether they are going in for negotiations, or mediators say they are going for negotiations. But we maintain that the oil prices have found the range. With, if we see the WTI crude finding a bottom around $75, $78, while upside the Brent crude have found resistance around $98 to 100. So this is the range where we see oil prices remaining. We don't expect a bigger correction in crude prices. Neither we expect a runaway rally where crude prices can go past 120 or 140 in the near term. But if we look at this weekend also, we expect prices may see some correction close to $82 in the Brent crude, while the WTI may come down close to $77. But overall, if we see the broad range that we expect for the Brent would be between $75, 78 on the downside to 9,800 on the upside. While for the WTI crude also, we expect the prices to range between 70, 72 on the downside to 92 on the upside. So this is the new range where we can expect oil prices to trade with in the coming months, until we get a complete clarity on what is happening on the US-Iran front, or whether the Strait of Hormuz is getting opened. The vessels have started passing in safely. So everything remains a little bit on the surprise side. When will this conflict end, and or whose patience will be run out first? Will it be US or Iran to make the deal? And finally we could see the Strait of Hormuz getting opened.
Nicely said, Pranav, but a lot of reactions are coming in the metal space also, especially the copper, which we spoke about. Some shortage issues are there, and where the volatility coming in the aluminum segment also. So which of these places, in this metal space, do you think the action is there and maybe a trade can be made as well?
If you're looking to really going for a trade, look for trades going into the copper price. Copper has been looking positive. There has been reports of supply tightness happening outside the US because most of these stocks that are on the exchange counter on LME or SHFE have been shifting to US because of the Trump US president's tariffs when they were on refined copper. So when these tariffs are going to come, nobody knows. But this arbitrage opportunity is pushing the stock levels outside the US into the US, and that is what is creating the supply tightness. For copper, if somebody is looking in for a positional trade, I feel this levels are ideal to start accumulating. If we get a further dip, it should be added. Prices have a potential to go further up of 8 to 10% even from current levels.
Right, Pranav. Thanks a lot for your views on the commodities. It's always a pleasure to have you with us at NDTV Profit, and best of luck for the future.
Thank you.
Let's move on from the commodities to the primary markets. The action is back. Gaja Alternative Asset Management IPO is in focus as the company is set to open on August 19. My colleague Nimit spoke to Gopal Jain, the Managing Director and CEO at Gaja Alternative Asset Management, talking about how investors should value Gaja and what it holds for the subscribers. Listen in.
Mr. Jain, thank you for taking the time, and congratulations on a marquee listing for the Indian market. First of its kind private equity AIF firm that you are actually going to market. I'd like you to put on your investment manager hat on for a bit before you look at yourself as a promoter today, and understand what category should people and investors, retail space especially, value you against in the current market, and how should they judge the company that you are? Should they do based on earnings, based on management fee, based on NAV? How should people, or AUM, how should people be judging you, and what category should they compare you against?
Sure. Thank you so much, Nimit. Well, we are following a proven global playbook, a proven global playbook that's been established over 60 years. So we are a private equity AMC. The fund is not going public, the AMC is going public. And it depends on where you want to compare us to. If you want to compare us on a global basis, we are comparable with other listed private equity AMCs. In India, we are, the closest that comes to us are other AMCs, an asset management company that manages funds. So the Gaja Capital's business is to manage funds, is to derive income through the management of these funds, which is management fee, carried interest, sponsor gain. We're a mature firm. This is a 27-year-old entity. It's a 22-year-old business. So it's no longer about vanity metrics. It's about hardcore elements such as profits, book value per share, earnings per share growth, and the addressable market, the growth of the addressable market. So you can pretty much value our share like a proper, script as a proper entity based on profits, profit growth, addressable market, your own impression of the future trajectory.
Okay, perfect. Fair enough answer. That speaking about your earnings, like you mentioned, if that's one of the measurable factors also, right? So in your FY 2026, you reported your carried income at about 75 crores, which is close to half of your total income. Now, can you explain why carried income was so much higher than the management income? And management income also over the last 2 years has come down a little bit. So what should investors expect in terms of when they look at the future earnings that the company will bring in? Should they expect carried income to sustain in this way? Because that seems a little unsustainable and it has a little risk. But management income is where your sustainability comes. So what is the message you have for investors when you talk about your carried income being higher than your management income?
So we are a 22-year-old firm. Carried interest is not lumpy, it is back-ended, but in our case it becomes front-ended. We derive income from multiple funds, and from each fund we derive management fee, we derive carried interest, which is, let me simplify it for the viewers, it is a share of the profits, and we derive sponsor gain. So our performance fee, which is combination of sponsor gain and carried interest, is always likely to be more than 50%. But given where we are, a 22-year-old firm, deriving income from multiple funds, mature funds, it becomes increasingly predictable and stable. We shouldn't be making a statement about the future, but if you look at our past, you will see a steady trend in how our income has grown, total income has grown, our total profits have grown, our net worth has grown, And if you have such long data, 22 years of data, then you're in a good position to say, conjecture about the future. I also want to say share of profits is calculated on a fund as a whole, not on deal by deal basis. It's a European waterfall. First, we have to deliver the fund back to investors. Then we have to deliver a hurdle. So it becomes increasingly predictable and less prone to clawbacks. We applied a certain test to ourselves, the same test we apply to our portfolio companies before they go public. That are we confident of our total income profile, our profitability profile, and can we ourselves predict it? And based on these metrics is when the decision was taken by our board that yes, we're ready to go public.
Well, that's the interesting conversation with Gaja Capital Asset Management. But that's all, folks, we have now for the show. Do stay tuned to NDTV Profit. Up next is the Small Cap Show.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
लंबी कैसे? कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Well, welcome back. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. Well, we are going to focus on one counter called RVNL. The company has reported a stellar set of numbers. Revenues were up nearly 10%, but the EBITDA jumped nearly 3.3 times. And margins came in at close to 4.3%. Now, my colleague Parth spoke with the management of RVNL. Let's go across to Parth for that.
Well, interesting set of numbers have been posted by RVNL, and we spoke with the management of the company. We are joined by Mr. Salim Ahmed, CMD at RVNL. So to start off, you had guided for a revenue growth of 15 to 20% in FY27. So after Q1, are you still on track to deliver this guidance?
Thank you, Parth, for giving me this opportunity to interact with you and your viewers. No, definitely we are on the track. As you rightly said, our targets are revenue top line growth of 15%, and we are expecting and hopeful that our profits will grow by 15 to 20%. As you have seen in the quarter one, our performance has started on a good note. We have achieved almost 11% rise in the top line compared year to year, and the bottom line has also increased by 19%. And as you know, quarter one is slightly weak and sluggish compared to other quarters. So we are hopeful in next 3 quarters we will improve and better our margins.
And what is the current status of your order book? Are we expecting any big orders to come in the coming months?
Yeah. Presently, our order book is almost 93,000 crores. And if you see in this quarter, we have got orders of almost 5,500 crores in this quarter. So we are expecting that we will get more orders in the coming quarters. And, you know, we are focusing more on PMC works also. We are focusing on overseas, and we are focusing on the new sectors like hydro. We are focusing on the port sector, and we are focusing heavily on the overseas, especially the Africa continent.
So with the current order book of 93,000 crores, like you mentioned, so how does that mix will look like? Is it an equal contribution between the railway and non-railway projects, or we are seeing an increased contribution from the non-railway projects at this time?
Definitely, railway is a core sector for us. You know, almost our 40% of our order book is with the signed works of the railways, and 20% work we have got from the bidding. So almost 60% of our order book is with railway works. But we are diversifying into new sectors, as I briefed you, that we are focusing heavily on ports, hydro, clean energy, and overseas. So we are expecting that, you know, our order book will be 60-40 this time. But definitely in next 3 years, we are hoping that it will be 50-50%. 50% from the railway works and 50% from the non-railway infrastructure works.
So once that railway to non-railway mix becomes 50-50, how does that impact our margins going forward?
So definitely, you know, in railway works, where the works are given to on management basis, we are getting better margins. But when we go to the market and pick up work from the bidding works, the margins are slightly less. So that's why our focus is on the new sectors like overseas, where we can get 15 to 20% margins. And in other sectors like hydro, port, and clean energy, margins are better. So we are trying to diversify our order book and balance it, like with the good margins works and some less margin. So like it's a balance. And we are hopeful that whatever margin of 15 to 20% we are expecting in the bottom line can be achieved.
Understood. And how much of that current 93,000 crore order book is executable within FY27 and also FY28 and beyond that as well?
We are expecting a increase of 15% in our top line. So last financial year it was 20,000. So we are expecting a revenue of around 23,000 top line. So accordingly, I think our order book will be executed. But parallelly, we are getting good works, on a quarterly basis. As I told you, 5,500 works we have got in Q1, and discussions and talks are going on with various state government, public sector units to get the works on the PMC basis. So we are hopeful that our order book will continue growing on a regular basis.
And also, sir, the BharatNet project was quite a big one. It was expected to contribute a lot towards both revenue and profitability as well. So has that execution reached the pace that we were expecting in the initial point?
The BharatNet is a quite challenging project of BSNL, providing connectivity. And we are doing work for UP East and West. So work was slightly sluggish and slow in the initial phases, but now it is picking up. So definitely a good contribution will come from BharatNet for the top line. And the margins are also good here. Around 6 to 7% margins are there. So we are expecting good revenue stream from BharatNet in this financial year, including the profitability.
Well, thank you, Mr. Salim. That was the management of RVNL speaking and giving guidance for the future ahead. Well, back to you, Somit.
Well, thank you, Parth, for that. Moving on from RVNL to RK Swamy, that company has also reported its Q1 numbers. To understand more about the quarter gone by, we are joined by the management. We are joined by the management of RK Swamy. Rajiv Newer, the CFO of the company, is joining us. Sir, firstly, to start off with, when you look at the margins, the EBITDA margins have increased by around 200 basis points on a YOY basis. Is this number sustainable for the full financial year, or there is a room for further expansion when it comes to the EBITDA margins?
So thank you firstly for having me on the show. Before I answer this question, let's take a step back and look at how our performance has been for the last couple of years, last year and last quarter, because the answer actually lies therein. So if you look at this quarter, obviously the EBITDA has gone is higher by 32%. Higher by 24%. If I was to look at last full year, which is FY26, the EBITDA was higher by 32%. Let's take a step. Let's look at it from another lens. If I was to look at the revenue, last year the revenue was up by 15% year on year. But more importantly, I always believe that we should not look quarter on quarter. We should look at over a longer period of time, because that really what gives you a true perspective. So if you were to look at the last 5 years per se, then in the last 5 years, the revenue has grown at a CAGR of almost 14%. And therefore, what is very important is that if you look at our brand strategy, that's we have been continuously investing in infrastructure. We have been continuously investing in onboarding high quality talent. And we have been constantly working on building scalable processes. And what you see essentially is an outcome. So, this is a comma and not a full stop, because the show continues. We continue to do this because all the initiatives that we have taken in the last 1 year have started yielding results. Last year, we added a lot of infrastructure to our CX business, to our CATI business. As we speak, the occupancy is hovering close to about 80% plus on the expanded capacity. We are in the process of setting up a new digital video studio, which should further augment our capacity to build content at scale. More importantly, if you would look at this quarter alone, we did the Padma projects, which basically where we did a lot of videos, and that's basically, and that too in multiple languages. So the fact is that we have been investing, and what you see in terms of result is an outcome of what we have been doing so.
Talking about the digital studio expansion, if you could give us more information on that front, what could be the incremental revenue, what is that basically, and how will it benefit your financials on that front, if you could share some details?
So, digital video studio is one of the elements that is going to contribute to our growth. That's not the only element. Now, if you first of all understand our business, the business is basically an integrated marketing services. So when we talk about integrated marketing services, it's where we bring together strategy, creative, media, research, and customer data analytics, all under a unified framework. So instead of working in silos, all these disciplines collaborate from the very start of a client engagement. And what this leads to is better decision making, sharper targeting, basically making sharper targeting, basically improves our execution and stronger accountability for outcomes. For us, integration is about scale. It's not about alignment. Now, where does a studio fit into all of this? When one of the elements that is a part of the integrated marketing services offering is creating content. And we have a studio, but we have been creating content at scale. And what we have realized is that the studio has served its purpose, but we really need to expand the capacity to be able to create more content at a faster pace. And therefore, the need to create another studio. We have signed an LOI for a certain location. We are in the process of diligence. And hopefully, if all goes well, by the end of the year, we should have the studio in place.
If you could just tell me, how are you looking to expand your marketing infrastructure? How are you looking to add talents here? Because I believe that's the core for your business.
No, absolutely. Talent is fundamental to our business. Talent is core to our business. And we have been onboarding talent over the last couple of years because without talent, we don't exist. Honestly, this is not a factory setting. We need talent here. And so what we are doing is that we have been, as we add more disciplines to our business, we are adding specific talent to those disciplines. For example, if you look at our sectors that we cater to, BFSI accounts for almost 1/5 of our total business. FMCG accounts for almost 1/5 of our total business. Automotives account for 1/5 of our business. The other interesting space that we have and identified is the pharma and the healthcare space. And that's one space where we have been onboarding a lot of talent and we have been trying to grow our presence, improve our talent pool in that space. Apart from that, we have also created a new discipline, which is called brand and marketing consulting. Now, brand and marketing consulting is basically a value accretive business for us, which basically harnesses all our capabilities, whether it is creative content, whether it's media, whether it's research, whether it's analytics, and gives a very holistic solution to the client. So we have been onboarding talent in this brand and marketing consulting space.
Right, sir.
Apart from that, as businesses grow, we continuously are onboarding talent across our disciplines.
Okay. Well, thank you, sir. Thank you for joining us and giving us the way forward for R.K. Swamy. Moving on to our fundamental guest, Avinash Gorakshakar. Avinash, you heard the management. At the current valuations, what would be your recommendation on this stock?
No, I think Sawmill, after a long period, R.K. Swamy has reported a decent set of numbers. I think the profit growth has been quite good, 26% compared to a 7% top line growth. I think the market would like to see consistency in numbers because, for the last 2 years, I remember after the IPO, the stock has not done that well. So I think markets will like to see what is the consistency in these numbers. But the good part is the company is a free cash flow generating company. They don't have any debt on the book. So hopefully, I think this year should be a good year for them. And at these levels, I think one could definitely look at accumulating a small quantity because they are definitely very old players in the advertising market. And overall, the management seems to be confident, from the commentary mentioned now. So we have a positive view, but we like to wait for another quarter or two to actually take a final call. But yes, the valuations now are very attractive since the stock has completely bottomed out.
Okay, and sir, just wanted to discuss one more counter with you. Azad India Mobility, in the last 1 month, the stock has seen quite a traction. What are you picking up here? What's your view on this counter?
I think, Somit, today the company is going to post its numbers. Today is the board meeting. So we like to wait for the numbers, but this is a bus manufacturing company and basically, again, not very highly leveraged. So we like to see, what kind of numbers are thrown up in the first quarter. But typically, I think what the stock is actually being interested from our side is because it's a very interesting business. They make complete bus bodies for, basically transporters as well as for private, kind of players. And this is a large growing business. So we are hopeful that the business will turn around in the current year. But we like to see the numbers after the board meeting is announced. That is today.
Well, with that, let's slip into a short break and we'll be back with more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused?
Welcome back. You're watching Small Cap Buzzers. Now, HLE Glasscoat is a company that we need to focus on. The stock has fallen nearly 35% in the last couple of trading sessions. Right now, it's trading up around 3% What has led to this fall of more than 30% in the share prices in the last 3 trading sessions? Let's get in Shivam to understand more on this.
Yes, so actually Glasscoat has snapped 2 session losing streak. In fact, in previous 2 sessions, firstly the stock has fallen around 20%, and then yesterday it had fallen around 10 to 11%, and today we are seeing this slight peak in this stock, and the volumes of in this stock has also gone up by around 2 times. So let's look at the what were the key factors that have affected the stock. So first one is the weak quarter 1 performance. The revenue of the company has remained modest despite there has been a healthy demand environment. In terms of profitability, that was impacted by the delayed delivery acceptance of certain key orders, and that has been witnessed in the heat transfer segment, on which the revenue has also declined by around 72% on YY basis, and that's why we are seeing a EBITDA loss. In terms of order book, that has remained healthy, which has increased to around 713 crores as of July 31. Also, in terms of segmental highlights, if you look at the glass line products, the revenue has seen a robust growth of around 49%, while the filtration, drying and other equipment and the heat transfer segment has seen a decline in the revenue growth. In terms of outlook, the company has said that the demand recovery is visible across the end user industries, and in terms of demand recovery, it will take place in the second quarter. In terms of opportunity pipeline, that has remained healthy, and the company is diversifying its presence to support the future growth too. In terms of order book, that has momentum has remained very improved, and in coming quarters, and in management remains positive in the recovery in the industrial capex activity. So overall, the weak results has made the stock fall so much, but today it is seeing a uptake of around 2 to 3%.
Avinash, HLE Glasscoat, poor set of numbers, the stock has been punished around 30% odd. After that, is it in the value buy zone now?
I think the stock needs to correct a little bit further, Somit. But one interesting part is that the operating cash flows for this company has been very solid. Like for 26, I think they did a EBITDA of around 140 odd crores. Operating cash flow. So basically, the operating cash flow conversion to EBITDA has been very solid, almost 80 to 85%. So these kind of companies, whenever there's a bad quarter, and I think if the order book is pretty solid, bounce back is also equally good. So I would say that it's better to observe the company's numbers for another quarter. They are in a very specialized business, especially the glass-lined kind of reactors, which I think largely go to the pharma sector. So I would say that those investors who have should hold on, and fresh buying can be considered on maybe some more market decline, but definitely worth tracking and having into your portfolio for a long-term kind of time.
The next stock that we'll be talking about is Suraksha Diagnostic. Now, if you look at this stock, after reporting its numbers, it's gained around 13 odd percent. It has been buzzing for the last couple of sessions, also on the back of the new IPO that had come in, Mobilo Diagnostic. But let's get in Varsha to understand in detail what has played out for Suraksha Diagnostic in the first quarter of FY27.
Well, overall a strong set of numbers, I would say. Revenue was up almost 21%. There's a good margin expansion as well, at 34% versus 33%, and if you see, net profit is up 44%. Now, talking about volumes which remain strong for the company, patient footfalls increased to 0.38 million. You have 2.1 million tests which has been performed. Network expanded to 72 centers, and B2C business remains core or dominant at 91% of the overall revenue. Talking about realization, so the growth is not only coming from volume but from realizations also. Revenue per patient increased to rupees 2,321. EBITDA per patient also rose to 835, and the growth is just not coming from volumes but from better monetization. Genomics, which is actually emerging a next growth lever for every diagnostic company, and this is also true for Suraksha, which grew. The genomics revenue grew almost 136% year on year. They also reported 5 consecutive quarters of sequential growth when it comes to this segment. Management sees genomics becoming a core or meaningful business over the next few quarters. Well, margin story, if I were to talk about, centers older than 2 years reported 40% of EBITDA margin, and the younger centers reported almost 6.5% of EBITDA margin, as scale benefits are actually starting to flow through the network. So overall, you have volume growth, you have realization growth, and also the margin has also seen a good spike.
A solid set of numbers coming in from Suraksha Diagnostic. Is the valuations now expensive or still in the buy zone?
I think it's a hold. Best part is Suraksha Diagnostic is largely a B2C player, Somit, and I think most of these companies, if you look at Thyrocare, you look at Vijay Diagnostic, and now Suraksha Diagnostic, one good thing is that the market has now turned favorable. There are very few price cutting news flows in this industry, so I think the momentum should continue, and if that happens, then I think definitely Suraksha is definitely a reasonably good bet, considering that it's directly catering to the B2C segment. Typically, B2C diagnostic players get a better valuation kind of matrix. So we have a constructive kind of position. We have a hold on the stock. Any dip should be used to buy the stock. I think today the stock is up by 10-11%. So once the stock cools off to reasonably good level, then I think one could accumulate.
Well, thank you, sir. Thank you for joining us and giving us your perspectives on the stocks that we discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑप्शन बुल के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. Over the next half an hour or so, we'll try and get to all your stock-related queries as well. Before we do that, you start sending in your queries on the numbers that are flashing on the top of your screen. Also, give us a call on the landline number and speak to our guests directly on those queries as well. But a very quick check of how the markets are doing, because you've seen, we spoke about a recovery that was seen in the middle of the day, and that, while getting sold into, has again picked up steam at the fag end. So we are very close to that 24,400 mark, and important to track those moves. Let's look at the contributors for the Nifty 50 as well, because we've highlighted that there haven't been runway moves on a lot of names today. So it's been largely broader base. So L&T, Eternal are some of those. ICICI Bank continues to have a hampering on that stock today, and on the Nifty as well, along with Reliance Industries and Hindalco. That's also putting some pressure. Also pull up the advanced decline ratio very quickly as well, because it's been a day of broader markets, and it has been so over the last couple of weeks as well. So almost 1250 odd declines, advances at 1395 right now, but also the BSE 500 as well, because that's the other important index that we continue to monitor. Today you're seeing moves on Astral, which has essentially gained through the day on the back of good earnings. It was up almost 5% at the start, and then at the start of the day, of course, and still continues to do well right now. You also are seeing good moves on Midani as well, now up 9%. Restaurant Brands Asia finding another buyers and takers right now after those stellar numbers. Sterlite as well as Cyient are some of the other ones. Gujarat Gas on the back of course, results reacting to those numbers too. Of course, we are seeing some pressure also on Eureka Forbes that came out with earnings, and you are also seeing some pressure on PNC Infratech, the other one that I wanted to mark as well. But let me welcome in our guests now, who will start taking your stock-related queries. Jatin Gedia, he's the VP Technical at Teji Mandi, and Jash Shah, Fundamental Research Analyst at Latin Manhala Securities. Well, gentlemen, both of you, thanks so much for joining in today. The first question, coming your way, Jatin. Ramesh, who's from Bengaluru, holding IDFC First Bank. He's holding shares at 74, so sitting on some good gains right now. Asking if you should still continue to hold. Would that be your recommendation, Jatin? Good afternoon.
Yes. So, my recommendation would be to hold on to IDFC First Bank. The overall short-term trend has been positive, making highs and higher lows on the daily charts. So on the upside, we are expecting a rally towards 91 to 93 on the upside. Support level is placed at 84.
84, got it. The next one coming through, it's on All Cargo. Our viewer wants to actually buy into this counter, and he wants to invest 1 lakh rupees. Now, Jash, good afternoon. Welcome to the show. What would you recommend here on All Cargo? Because again, not a clear winner in that sense over the last few quarters as earnings have come through. But would your recommendation be for him to buy?
First of all, thank you for having me on the show. All Cargo, I think it's a buy because logistics is going to keep on doing well, and it will increase. Now we have to see if the market share increases or not. So I think there should be a staggered buy.
The next one coming through, it's on Motilal Oswal. Dilip from Kolkata has bought 100 shares of the counter at 933. So close, not too close, but close to the current market price as well. He wants to know if he can add more at the current price, Josh. Here again, how are you looking at this counter?
I am positive on Motilal Oswal. I think you should buy and average it right now. We can definitely see some good gains in the next 1 year because the next 1 year belongs to the capital markets.
Fair point. That's on Motilal Oswal. But let's also continue taking your stock-related queries as well. You can also, viewers, call us for the same. Amara Raja is the other one. Sriram from Visakhapatnam has bought into this stock at 935. He's asking if you should still continue to hold as well. Let's look at the 1 week chart if we can, because you had the results come through this week. You had a normal reaction, but over the next couple of days when we had the con call as well, you saw big buying coming through from the Tuesday lows, as you can see, and that continues as well. So it's been an interesting move for this counter. But what would you recommend here, Josh? Because I don't know if you had a chance to look at the results, get to the commentary also, but largely there are some concerns still on the growth that's visible in the lead acid battery. I think this time around the street's cheering on the OEM side of the business. But what would you recommend Sriram to do?
I think you should continue to hold because if you compare it with its competitor Exide, it has not moved up that much. But of course, Exide is on a different level altogether. But Amara Raja, their battery business is doing well, and I feel the OEMs will continue to give good business. And there's very good growth opportunity, even export-led growth I can see over here. So I think they should hold or even average.
Got it. The next one coming through, this is from Shankar from Bengaluru. He wants to know about Tata Motors CV, which is of course Tata Motors Limited. He's holding shares at almost 440, but he exited the counter at 481 and wants to buy again. I'll actually get both views here. Jatin, you want to start off because he's of course had the demerger way back last year in October and November. So not too much historical evidence, Jatin, but still on the technicals, would you recommend a buy?
Yes, my suggestion would be to continue to hold and even buy if possible because the overall trend is positive and we are expecting levels of 508 to 525 from a short-term perspective. Support level is placed at 450. So risk reward is positive and hence continue to hold and add more if possible.
Would you also agree with that, Josh? Because in just the last month, we've seen a 12% move, but a good set of numbers.
Completely agree with Jatin on this because Tata Motors CV has been performing well. It's completely led by the domestic and the export also. So we see a lot of growth in the commercial vehicle segment in India itself. So I think it's a definite hold.
Got it. And most certainly streets liking this one too. But let's go across and take a caller from Hyderabad now. Kiran is dialing in for a stock query. Kiran, very good afternoon. Welcome back to Ask Profit. What's your query?
Good afternoon, Puneet, and good afternoon to the panelists also. I have JNK Bank with 1637 shares with 182 rupees.
Okay.
So
and this is a long-term bet,
Kiran? Will be like almost 42,000 I'm in loss. So what is the next future of this, result or bank or short-term? Actually, I thought to buy for short-term, but suddenly when I took it, went to 182, suddenly all of a sudden the Q1 results have come and it has dropped to 160s.
Right, most certainly, and visible on the pain, visible on the charts too. But what would you recommend here, Josh? There was, of course, anticipation of better earnings performance, but would you recommend Kiran to continue holding, wait back for his buying price, and if averaging is an option?
I like the public sector bank space, especially now all these smaller banks, even the JNK Bank ought to perform better in the coming quarters, so he can also average it. I'm not very worried about the counter actually.
Oh, got it. Hopefully, Kiran, that answers your question. The next one's from Rakesh from Hyderabad. Wants to know about Geofinance. He's been holding, if it's actually a good buy, so he wants to get into this counter right now. We actually had the news flow on the counter, that agreement with BOFA, and hence the counter wasn't focused, not reacting so much though. But Jatin, his question is on the technicals. How are they looking and if it's a good time to buy?
Yeah, see, technically, we believe that this stock is in the process of trend reversal. Yesterday, it did close above the 200-day moving average, and today it is just consolidating around that average. So my sense is that the trend reversal is around the corner, and I suggest to hold on to this counter. In terms of levels, we are expecting levels of 290 to even 300 on the upside, and the support level is placed at 245.
Support level plays at 245. Got it. Well, the next question coming through, and this one's from Gautam, who's dialing in actually from Andhra Pradesh. Gautam, very good afternoon. Thanks for calling in. What's your query?
Yeah, I want to buy long-term purpose EBB India. Can you tell me the exit entry levels and exit levels and target also?
And this is a long-term bet, basically, right? More than 12 months?
Yeah, correct. Yeah, correct.
Got it.
Like 2 years.
2 years. Okay, got it. So it is good long-term that you're wanting. All right. Josh, on ABB India, what could be, if it's a good time to buy as well? I know it's difficult to give out a 2-year out target price, but what should he expect?
I agree it's difficult to give a target price for 2 years, but there has been a lot of structural news flows for the company, and it's a buy for at least 12 to 24 months. It's a definite buy. I think you should hold on, and you can average it on more also. You can buy on dips as well.
Buy on dips as well. Got it. The next question coming through, and this one's on from Venkat from Bengaluru on PG Electroplast. Asking actually that if his 300 shares bought at 550 are a correct decision. Josh, we've actually seen very clear winners in the EMS space. You had Sirma Dixon perform well, not so much in terms of momentum also for PG Electroplast, Keynes Tech as well as the rest. What's your pick for PG specifically? What should Venkat do?
For me, the whole EMS sector is bound for a good re-rating. So it doesn't matter what company you have in that, because we are seeing the numbers for export for all the mobile phones and televisions and everything. So there's a lot of contribution coming in from there. So I think you can hold on to the counter.
So you like all of them basically within that space, Josh?
It is very good.
Okay, got it. Let's go across to and actually stay here in Mumbai because Dilip is dialing in for a stock query. Dilip, good afternoon. What's your query?
I got Exide Industries 100 shares. So average rate of 310 per share.
Okay.
Should I keep it or hold it or sell it?
Got it. Well, Josh, actually, you're just talking about Amara Raja, and you did make that distinction between the two players. But for Exide, would you recommend Dilip to hold? He's holding at 310, so seems like a good attractive price. Should he continue?
I think you should continue because the whole Exide story is unfolding. Exciting things are coming up, and we will see a lot of earnings upgrade over there. So I think Exide is a very good stock, and you should hold it to do a battery play with the whole lithium-ion batteries and everything. So I think it's definitely a hold. It's a long-term story.
Got it. Well, the next question's on coming through actually on tourism finance. It's a stock we haven't discussed about too much, Jatin. But Murli from Hyderabad holds it at 73. So he's sitting on good gains actually right now. Wants to know if he should still continue to hold here, Jatin?
Yeah, I think the overall structure is still positive, considering that it has rallied pretty significantly of around 50% in the last 1 month. So my suggestion would be to book partial profits at current levels, and if he wants to continue to hold, then keep a trailing stop loss at 110. On the upside, the immediate resistance is at 127, 130.
Okay, got it. Also, Jatin, on HCL Tech as well, because our viewer has bought these shares at 1222. So probably post in this fall, she, Lalita from Bengaluru might have gotten it. Asking if it's a good time to book out, or what could be a target in the near term.
See, overall, we are positive on the IT space, and HCL Tech is one of the outperforming stocks in this last up move that we have seen from the lows. In terms of levels, we are expecting levels of 1425 on the upside, and the support level is placed at 1325. So my suggestion would be to continue to hold with a trailing stop loss at 1325.
25, got it. Axis Bank is the next one, and we're going through queries quick and fast. So, viewers, if you haven't already done so, send in your query, give us a call. Devon is actually holding on to Axis Bank at 1279. So, and has been holding 100 shares of the counter. So, he's currently sitting on the loss. How did you view the earnings, Josh, for this one? Because we had some disappointments, of course, for HDFC Bank on one side, but good ones for ICICI. But how did you feel? Which boat did Axis fare in?
So as far as the banks are concerned, the private banks, there are some structural challenges. Even if ICICI was applauded and HDFC wasn't, I think Axis comes on the category where it did disappoint to a certain extent. And as of now, I'm not bullish on the private banking space. Of course, the valuations are pretty attractive, but we don't know where we can see a re-rating over there. So as of now, I would say avoid private sector banks as a whole, because there's a kind of an uncertainty over here. So that's my take on this.
Interesting one, because that because you mentioned about your preference for public sector banks. So most certainly that's a point taken. Let's go across to Mysuru now. Mohan has a stock query for us. Mohan, very good afternoon. What's your query?
Good. Can I buy Tangamal jewelry at this rate for a long-term perspective?
For a long-term perspective, okay. Josh, coming back to you, because we saw massive, almost a 3x run-up and then that big correction on Thangamayal. Is this a good price to buy?
I think you can buy it. The story is still good. Eventually, for the long term, you will make money, but you should be cautious on buying. I think you should buy in a staggered way.
Got it. So this current price point you're mentioning is a good time to buy, but it has to be staggered. Is that the correct view?
That's right. That's right.
Okay, got it. Also, Josh, let me stick with you on Vedanta Oil and Gas as well, because Bindu's taken a big position on this one. 40,000 shares bought at 41. What's the long-term view here?
The value unlocking is proving to be, doing well for most of the Vedanta-led companies. And oil and gas sector as a whole, I think with the global uncertainties, it will pick up, and I think you should hold on to it. We can see a 20-25% upside from here as well.
Got it. Well, let's now start the rapid fire round in the afternoon edition of Ask Profit. Jatin as well as Josh, keep your answers as short as possible. First one from Ram Iyer on LIC. If it's a good time to enter, would you recommend that, Jatin?
Good time to enter. Stop loss should be placed at 403, upside target at 430.
Also on PTC India, E. Venkatraman wants to buy 200 shares, Jatin. If this is a good time to do so?
I'll skip this.
Okay, you'll skip this. Okay, any view here, Josh, that you might have on PTC India?
I'm not covering the stock.
Not covering the stock, okay. Next one is on Anantraj, bought by at 650 actually. By a viewer, wants to know about what he should do with his 100 shares here, Jatin.
Continue to hold with the trailing stop loss at 605, upside target 445.
Also on L&T Finance, Jatin, what's the short-term target is what Vijay is asking.
On L&T Finance, the short-term target is 330. Support level is placed at 307.
Got it. Joseph, who's from Kochi, actually is holding on to HDFC Bank at 768. Wants to know if he should sell out, Jatin, right now. Would you recommend that?
My suggestion would be to hold, extremely oversold. Expect a counter trend rally to begin anytime soon. 760 upside target.
The next one's from Shyam from Bengaluru on Rallis. He's bought at 225. Would you recommend a hold or an average down as well, Josh?
Hold.
Next question, which is from Shaunak Kulkarni from Mumbai on UPL, holding shares at 575. Should he still hold and continue, Josh?
I think you should buy.
You should buy. And this is a 1 to 2 year view?
Yeah.
Next one's on Jyoti Labs. A viewer who's from Tirupur wants to know if it's the right time to buy. Josh, we've actually seen, that partnership with Henkel which got broken on and then the stock just ranked. Should he still buy right now or wait for some more time?
I think you should wait for some more time, let it stabilize.
Okay. Next one's on Midani actually. The stock's up 9% today. Our viewer holding shares at 90. Jatin, is it a good time to take money off, or should she continue to hold Mishra Dhatu?
Continue to hold with a trailing stop loss at 430. Upside target is expected till 478, 485.
485, got it. She's almost up 5x actually, Josh. Do you also have any opinion on Midani?
With today's news flow, I don't think you should sell at all for now.
Okay,
Because
got it.
It's very positive.
Very positive, got it. Antonio, who's from UAE, and thank you for writing to us, Antonio. He's holding 100 shares of Welspun Corp at 790. Wants a technical view here, Jatin. What could be basically the target price, if any?
Yeah, see, upside target is 2000 and the support level is placed at 1820.
1820, got it. The next one's, coming in on Deep Industries. Jatin, sticking with you. Vani wants to know a 3 to 6 month view on the stock.
For Deep Industries, my sense is that book profit at current levels. Upside, limited upside, negative divergence on the momentum indicator. Book profit is the suggestion.
Afcons is the next one. Navpreet holding shares at 361. Josh, this has been a very underperformer, right, in terms of earnings. Should she exit?
I think you should hold on to such stocks right now, especially this team.
And is this led by earnings or just the valuation, since the correction is
Valuation.
Okay, got it. Tata Tech is the other one. Vara Prasad is holding for the last 2 years and he's still in a loss, so might have bought it at elevated levels. But Jatin, should he still continue to hold based on the current move?
Yes, definitely continue to hold. Last week we got a breakout from a consolidation. Upside, we are expecting a rally towards 1000 and even 1100 on the upside. From a medium term perspective, support is placed at 780.
Got it. Well, that was the last question of the rapid fire. Jatin as well as Josh, thank you so much for joining in, helping us solve a lot of queries in the last half an hour. We've actually jumped from 56 to 93 from the morning to the afternoon edition. So appreciate both of you and your inputs here. But viewers, out of time on this edition of the show. Thanks so much for watching. As always, India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे? ओले ओले ओले।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Mahima Vachajani. We're coming to you live from the NDTV Profit Suzlon studio, and this is India Market Close. Another day, another extremely narrow and dull session, because from the bottom to the top, and we're not too far away from the top at this moment, at 24,369 or 70 or thereabouts, it's just a range of 120 points. And this is true for the broader markets as well.
Yeah.
In fact, pull up the mid-cap index and the small-cap index intraday charts, and it's just about narrow. Right here for the mid-cap index, still trading in the green for the small-cap index, but we've come off the high point of the day. It's a very narrow range across the board.
Yeah, but there is some recovery in the mid cap 150, but the small cap 250 has seen a reversal because it's come down from the day's high point. But let's try to pull up the Nifty 50 heat map and see as to what are the counters that are doing well and which are the ones that continue to be under pressure. You have something like a Tata Consumer, which continues to climb slowly and steadily, now up by about 2.8%, almost 3% in fact. Tech Mahindra is also doing very well. You have Tata Motors PV also doing fairly well. But on the flip side, you have something like a Hindalco, which is taking, seeing profit taking coming in. Grasim, which is also profit taking, because overall Birla Opus has done well, but it's run up quite a bit in the last 1 week, and that's why it's down by about 1.7%. You also have Ultratech, of course, down by about 1.8%. ICICI Bank, Reliance. So heavyweights are the reason as to why we have that range bound trade and why Nifty continues to be under pressure. So that's with regards to where the Nifty 50.
We should take a look at the contribution chart as well, because this will be borne out when you look at the contributions from an ICICI Bank on top, followed by Reliance Industries, and then Hindalco and Axis Bank. But you know, the one factor and the one data point that you would look at that describes this mood and the way that markets are behaving perfectly, and that is the India VIX. If you pull up the India VIX, it's actually slipped below the 12 mark, and it's currently at 11.4. And we'll check the data, but it's actually at pretty much the lowest that you've seen it in several weeks. And a lack of volatility is what is causing the market to be extremely range bound at this point.
Absolutely. And let's try to pull up the advanced decline ratio, because that will give us a picture of how the broader end of spectrum is looking like. And like the mid cap 150 and small cap 250 indicated, we've managed to diverge to that even Stevens mark, and slightly have expanded from there, but still around 1354 odd advances versus that of 1294 odd decline. So there's a tug of war going on between both the bulls and bears exactly right now, and both are winning in fact.
There certainly is, and therefore it's even Stevens on this front as well. A quick look at the sectoral picture, because for the Nifty 50 you have a rough split between the winners and the gainers, between the winners and the losers. Here too you have not a very dramatic slide on this end. Look at this. The worst performer is the metal index, and it's down about 1% or thereabouts, likely on account of Hindalco. Private banks down about 0.6%. Not too much in the way of big losers, and certainly not too much in the way of big gainers either sectorally. You have the India Defence Pack on account of the new tenders that are coming through, up about 1% or so. Realty so too. is that pack gaining about 1% or so, 0.6% for the FMCG index. Certainly above the low point of the day, but nothing to write home about.
Exactly. And quickly, the BSE 500 before we go on to our guests and see as to what specific names are seeing action in the broad end of spectrum. You have Astral topping that chart, up 9%, strong set of numbers. And like Alex was pointing out, on account of defense names, you have Mishra Dhatu up 9% as well. Something like a Prince Pipe Restaurant Brands back in the green today after seeing good amount of profit taking coming in. But on the flip side, you have something like an Apar Industries down 4%, Eureka Forbes, Easy Trip, Minda Corp, etc. that continue to be under pressure. So that's how the BSE 500 looks like. But there was Jubilant Foodworks numbers also flashing on your screen down there, and we'll try to decode that numbers quickly. But over to you, Alex, till we do that.
Yeah, absolutely. So why don't you come back here and then we can take a look at those numbers. And meanwhile, let's bring on board Rajesh Palvia, a Senior Vice President, Technical and Derivative Research at Axis Securities, as well as Radha Raman Agarwal, who is Managing Director and Chief Executive Officer of Swayam Advisors. Gentlemen, thanks so much for taking the time and pleasure speaking to the both of you. Good afternoon to you. Rajesh, I'll come to you first. Specifically on the VIX, which is, you probably be able to tell me based on the data that you're seeing on your screen, it's probably at a multi-week low, isn't it? And the fact is that we're seeing very little action at the benchmark level, and that's across the board. Does that change in the near term, or are we likely to see this continue for some time?
So looking at the VIX, yes, it's at the lower band of this overall range, and yes, we may see range bound activity for indices for couple of days further, as VIX has already cooled down, and Nifty is also behaving in the same manner, and we are seeing that very selected stock specific action is taking place. So maybe we could see very range bound, tight range would be there for market, and volatility will likely to subside further until any decisive breakout or breakdown not takes place on the indices front. So we may see a range bound activity for a couple of days further.
Absolutely. Some numbers coming through, and we will talk about, of course, Jubilant Foodworks that has come through. But before we do, just a quick mention of Solar Industries. Keep an eye on the bottom of your screen, because that is where the news breaks first. A 93% increase in the PAT on the back of a significant expansion in the top line as well. This is one of the players in the space that has done incredibly well on the earnings front. The EBITDA increasing by as much as 90%. Margins expanding to 27.7% as well, compared with 24.8%. Pull up the intraday chart for Solar Industries. This is not a cheap stock by any stretch of the imagination. It is trading on a trailing basis at very close to 99 times. And so therefore, even if you look forward and it is to more than double from this point, it is still trading pretty expensive on the price to earnings front. So bear that in mind. Of course, the stock is reacting sharply. It's up as much as 4% in trade. But how does Jubilant Foodworks look?
It looks like a strong set, because the main number that everybody keeps an eye out for is the like-for-like growth.
Same store sales growth.
Same store sales growth. That's coming at that 11.6% mark, and this is despite of the LPG, CNG disruptions that we've seen, plus the geopolitical disruption that we've seen. Plus, on top of that, you have Popeyes, which has continued to see a very good momentum this quarter as well. A good revenue growth of 97%, of course, on the back of small base. But the like-for-like growth also for this one has been at 40% for the third consecutive quarter. So it's been a good one in terms of numbers. Revenue has seen an uptick of around 14%. EBITDA an uptick of around 14%. If you take a look at the margins as well, margins have come in at 19.6% versus that of 19.5%. So largely where they were, same quarter last year. And lastly, in terms of where the net profit number goes, let's also try to pull that up and see as to what is the uptick that we've seen in terms of where the net profit number is, a 5.7%. But all in all, I think Jubilant Foodworks in the last so many quarters has continued to be the outperformer in the QSR space, and it continues to do so this quarter as well. And that's why you're seeing that significant amount of spike coming in the counter. Radharman, I'll quickly come to you on this one. A very good afternoon to you. Any quick take on Jubilant Foodworks? QSR as a pack, as a whole, has done very well this quarter. There has been recovery in Westlife, in Restaurant Brands, etc. But Jubilant is the one, torchbearer, has continued to outperform its peers. Do you think that this outperformance will continue?
So first of all, good afternoon to you. So if you look at Jubilant results, one thing very sparkly which is coming out is more in terms of the way it has performed. If you look at same store growth has been quite good, double-digit growth. And one has to also look at what is the backdrop of the quarter. We had a high gas prices. Everybody thought that there will be washout in this sector. But I think they have maintained the leadership, and quarter on quarter, I think they have been improving quite well. And the numbers, if you look at it, the backdrop of what has gone in the West Asia crisis and in fact the gas crisis and all, the numbers looks quite good. In fact, we have to get into details and maybe understand the fine prints, understand in detail. But time on the face of it, the number looks quite good, and in fact, they have delivered not only in top line, even bottom line remains good in terms of moving ahead. So they were able to absorb cost, manage the crisis well, and I think they have been doing it continuously. I think quarter on quarter, multiple times now.
Point. Any view, rather on solar industries? Because I'm taking a look at this, and it depends on which metric you look at, right? So if I look at 7,540 crore of revenue in the financial year gone by, and so based on what they've reported, if you annualize that and you take a look at the growth therein, can we pull up the revenue number for the first quarter? Just to take a look at that. The stock is up as much as 5%. So the revenue for the first quarter stands at about 3,700 crore rupees. So it's a substantial jump, right? They're doing effectively half of the revenue that they did in FY25. So actually FY26 was close to 9,838. So therefore, one would assume that they're going to grow at that 25-30% mark, right? Rather, if you assume that, and if you look at price to sales, would you still say that it's expensive?
There are two things one has to look at. One is in terms of the growth continues, it does not even look expensive. In fact, they have been doing both top line and bottom line growth. They are getting newer areas. But if you look at from an historical perspective, obviously the P's look very stretched, maybe a 90 to 100 kind of a thing. But the growths have been quite good. In fact, so from that perspective, the P seems justified more in terms of because they have been continuously delivering good numbers, good set of deliverables, both on top line and bottom line. I think they have been very consistent. The margins have been improving. So one has to look at it in both lights. One is in terms of the way things have gone by historically, and one is in terms of what growth looks like. So for me, I would not call it very expensive given the growths are getting delivered quarter on quarter. So it does not look very expensive to me.
Look very expensive, particularly if it maintains that 30+ % growth in top line that it's been displaying in the recent past. 24% growth in FY25, 30% growth in FY26, and a stellar set of numbers in the first quarter for solar industries. Let's talk about the stock of the day, in fact, and Astral is surging in trade among quite a few stocks from the broader markets that are doing incredibly well. This is on the back of a pretty strong performance in the first quarter with volumes and margins outperforming peers. Puneet joining in to tell you about what stands out about these numbers and whether it can be extrapolated for the rest of FY27 as well. Puneet?
Well, most certainly, I think it's the commentary as well that's driving in. But as you mentioned, very importantly, that compared to its peers, where the outperformance is, and hence I think there's a larger reaction of stock that's not cheap, by the way. But we'll get to that in just a bit. 15.9% growth in revenue. EBITDA was down. Net profit was up. But the important factor is on what they have mentioned in the commentary, as well as when they spoke to NDTV Profit this morning, as well as on the guidance going forward. So when you look at what's actually worked for the company, there has been volatility because of key raw material, which is polymer as well as PVC prices. Let's actually go to what worked first. We'll get to the guidance in just a bit. But they had mentioned that the industry actually degrew by 10% in this quarter. They have remained flat in terms of volume. So they've actually had market share gains. And this volume will be very important for the company going forward. They will also see value growth according to the management because the prices have increased. And you have to know, the last 3 to 4 years, there has been no price increase essentially that the players could take, only volume growth. So now both of those coming in at a difficult time, but this will help the company going forward. The plumbing business also recovered very sharply in the month of July. They've seen a 40% jump because quarter one was destocking. They're now restocking as well, and hence Astral will be a big beneficiary of that according to the company. And the EBITDA per ton also is higher than the estimate, which is also the highest in the industry at almost 35.3 rupees per ton. Finally, on guidance also, 16 to 18% margins will be maintained. The company did 18.9. but has confirmed that that will be the upper range. But also importantly that they've guided for good margins in the adhesive business too, which was, if you know, the chemical business was getting demerged, not so anymore. And finally, what the brokerage radar also looks like for the company, because almost 24 buy calls for Astrals in this still post this result. You've seen a couple of upgrades from JP Morgan as well as Nuvama, but the 77 buy calls essentially for this counter, 4 brokerages have a target price of over 1900 rupees per share, and these are all reputed names as you can see on your screen. But when the valuation conversation starts, it's trading at 47 times price to earnings. Closest peer Supreme is at 33, so therein lies it. But Street's clearly liking the growth that they've seen in this quarter, and hence, despite an expensive stock, which we were just talking about the previous one as well, growth is getting rewarded in today's market.
That's absolutely the point. And by the way, in case you missed it, have a look at what Neeraj talked about this morning with regard to the fact that there are several stocks from varied industries that have displayed the ability to grow and grow very quickly, consistently so. They might be very expensive when you look back at the trailing numbers, but then some might argue that the price is justified because of the kind of potential that they're showing. One of them, of course, is Astral. But if I look at the last few years, in FY26, they had a top line growth of about 13%. Rather, the question is, are you convinced enough to say that this is a stock to buy at these values? Because just as the screen suggests, if you look at the last 5 years, it's done precious little because it's hit that peak and come off quite substantially. Is this an opportunity, in your opinion?
I think it can be a good opportunity right now to enter the current levels. There were 2 reasons. One, I think consistency from a performance point of view is coming back. And slowly, if you look at the guidance and I think the way they have outperformed their peers, I think these 2 things stand out in terms of what they can deliver. And obviously, the corrections and valuations are more in terms of which the numbers will follow. And then we'll also see in terms of how, if you look at the markets, have also positively reacted to the outlook. And the outlook looks quite bright. And in fact, they have, in tough times also, they were able to pull through. Because obviously, there's a lot of dependence on the raw material cost, which takes a beating. But at the end of the day, they're able to manage their margins and growth. So given these 2 reasons, I think we should be looking at the particular counter to enter at the current levels.
Rajesh, what about the technicals? Because it's seen a good gap up today and is taking support around that 200 EMA. What do you make of this? Do you think that this upward momentum should continue from here on? I think you're on mute, Rajesh.
Yes, sorry. So after a long consolidation and correction, stock has shown a very strong buying action, especially in today's session. And if you look at the near-term structure, stock managed to give breakout of falling trend line on daily chart. So at daily as well as on the weekly chart, and stock able to surpass its near-term, short-term moving averages. So looking at the near-term structure, yes, we do believe that furthermore upside we could see in the coming days. 1650 to 1680 would be the next target for the stock. Strong bullish candle is taking place on the weekly chart. So at this juncture, 1550 needs to keep as a stop loss, trailing stop loss to ride this rally. And maybe in next couple of days, we could see another 5 to 6% up move in this counter.
5 to 6% up move is possible from this stage. Keep those stop losses on the radar though for a stock that has gained very substantially. In fact, that is true for a whole host of stocks. Remember to keep your stop losses in place. Max Health is a stock that has just posted its, or a company just posted its numbers. By the way, Page Industries also posted its numbers. We see that at the bottom of the screen. Maybe you should have a look at that while we talk about Max Health. So we'll come back for Page Industries of Max Health. Let's go across to Varsha. Varsha, steady as she goes seemingly, because you have a double-digit revenue growth, margins have been maintained, the PAT number is not much higher. What stood out to you?
Overall, I would say, revenue growth, which was expected at like 7%, came out to be 15%. So overall, over here, it's a beat. A margin was I would say, a miss, but not by a huge margin. But ARPOB, if I were to talk about, ARPOB grew almost 5% year on year. Bed occupancy for the quarter was almost at 75%. Now, with additional beds, becoming operational during Q2 at Saket, Nanavati, companies well positioned for FY27 and thereafter. But also wanted to talk about the growth. If you see, was considerably lower than the peers. This is one of because of the drug discontinuation, oncology drug discontinuation, which we also saw in Q4 FY26. That is one of the reason why you're seeing that maybe a little bit margin miss, and of course that lower growth as compared to peers. Now, discontinuation of select chemotherapy drug for institutional patients led to a drop in sharp oncology IPD revenues to 22% from 26% in last year, that is Q1 FY26. Excluding oncology, gross revenue grew by almost 20% year on year. So overall, I would say a good set of numbers, not that bad, but oncology share is one of the key concern that investor might have in coming future quarters.
All right. Thanks so much for that. What do you make of the numbers that we've just spoken about, and Varsha spoke about Max Health just now, Radha? Is it a company that you track? Seemingly the revenue picture is better than expected. If it was expected to post just 7% growth, at 15% it is better than expected. What do you make of it?
So on the face of it, the numbers look okay in terms of maybe slight beat or more in terms of the top line, and maybe a flat kind of a thing on the bottom line. But effectively, if you look at the growths are not coming. Unlike other hospital companies which are delivering numbers, the counter has been slightly weak in terms of giving growth and things moving forward. And that's reflecting on the stock prices as well. If you look at over a period of time, it is not giving returns to shareholders. So maybe we will have other options in terms of healthcare to look at, which are delivering far better numbers, both in terms of earnings as well as more in terms of the top line. So we might look at other better options available in the sector rather than maybe going for Max Health.
Right, Page Industries is the other one. It's raining earnings, but this stock is under pressure on the back of the volume number. Like I said, for Jubilant, the most important metric that investors generally track is like-for-like growth or same-store sales growth. For this one, it's volumes, and that's coming at 5.7% versus that of 10.9% in the last quarter. So sequentially, the volumes have come down, but on a year-on-year basis, volumes have improved. But I think the sequential, volume that's been hurt is probably the reason why we saw that sharp downfall. But it just in terms of, but it's also recovered, by the way, the stock from the day's low point. But in terms of where the numbers go, overall net profit is down by about 3.5%. Revenues saw an uptick of around 8%. EBITDA is also down by about 2%. This is largely on account of the West Asia conflict and the supply chain disruption that they would have faced and the cost pressures, and that's causing the pressure on EBITDA. And the margins have also come in at 20.3% versus that of 22.4%. Radharaman, a quick take on Page Industries, if at all, if you've gotten the chance to take a look at the numbers.
Initial take is the numbers are slightly weaker. If you look at the quarter-on-quarter dip also, and overall the growth are missing. So if you look at from an investment perspective, or maybe as of now we should avoid the stock. But at the same time, if numbers are not at that, and given the crisis will be short-lived and they will be able to overcome it, we'll anyways get to hear more on the understanding from the management in terms of what exactly is gone by. On the face of it, it's a flat to negative kind of a setup which is coming.
Some commentary coming through from, I believe, whatever literature has been sent to the exchanges, and we'll get that up on your screen. You should have seen that at the bottom of the screen, but that is the reason why the stock is rebounding from the low point. The numbers may be a little worse than expected, but the commentary seems to be taking it off that low point of the day. If we can have those lines of what the management has said or what the company has said in the commentary. Okay, so there you go. So they're saying that the new units have enhanced the long-term growth for Page Industries. The company is focusing on digitalization across value streams. You also have consumer demand that is expected to remain strong this year as well. So some aspects coming through in the commentary that is easing the tensions or worries about volume going forward.
Correct. In fact, they've said that encouraging consumer demand trends, positive acceptance of product enhancements and new product lines is what is going to be their focus from here on in terms of the operational excellence as well. And that gives them the confidence as they look ahead for the rest of the year. And like you mentioned, they've mentioned the consumer demand is expected to remain strong throughout the year, and possibly, you're right, it's because of that commentary that we've seen some recovery in the stock, but it's again down by about 1.6%. So that's with regards to where Page Industries go. But let's also now try to get in Somit Sarkar and give us all the perspective and everything that he is hearing on in the dealing room, and try to get us what he's found today. Somit?
Well, firstly, is the defense stocks that have been buzzing in trade: Bharat Electronics, Mazgaon Dock, and Bharat Dynamics. Now, there are buy flows on the large HNI desk, and there's a buzz of some defense orders coming through for these companies, and hence we are seeing these stocks trading in green in trade today. When it comes to Kalyan Jewellers, that stock was largely flat, but has moved up. At one point of time, it was up as much as 3% in trade, and the buzz on the street is that there could be a positive report that could come in from a foreign broking firm. A potential initiating note on Kalyan Jewellers is what the street is expecting. For BHEL, there are sell flows on the hedge fund desk. Dealers indicate a potential OFS that could come in for BHEL. For Max Financial, there are buy flows on the large HNI and the PMS desk. Dealers are expecting strong Q1 numbers. The company will be reporting its numbers today, most likely post-market. For Biocon and Laurus Labs, there are some sell flows on the hedge fund desk, and this is largely post the MSCI announcement has come in. Now, Street was expecting Biocon to be part of the MSCI, but that has not come through, so hence some selling on the hedge fund desk. And Laurus Labs was widely expected, and given the fact that this news has already come in, some sell on news is something that we are seeing for Laurus Labs. Then there is Tilaknagar Industries, Sarda Energy, and Aarti Industries. Strong buy flows coming in these cash counters. A large prominent HNI has been accumulating these stocks in trade is what dealing rooms are indicating. And lastly, when it comes to Ashok Leyland, there are buy flows on the institutional desk in this counter specifically. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes are expected to be on the higher side for Ashok Leyland.
Interesting. All right. Thanks so much, Somit, for that. Commercial vehicles is a space that you should watch very closely. Of course, you saw Tata Motors CV numbers come through, and they were positive. The stock was up as much as 4%. It's actually off the low point of, up off the high point of the day. Not too far though. Ashok Leyland is a different picture though. Pull up Ashok Leyland as well while we're speaking about it. It's up about 1/3% at 177 or thereabouts. Radha, what's a view on the CV space, and specifically on Ashok Leyland versus Tata Motors CV?
I think between the two, Tata Motors CV have an edge, but I think both were expected to do well. So there is a lot of demand. If you look at that piece is coming back, the numbers have started reflecting in the first 4 months as well. And both obviously Tata Motors CV has been quite ahead. So that's a piece which I would, between the two, that is a more of a liking. But between, I think the demand is going to come back to both. So that piece is clearly reflecting in the current year numbers as well. So Ashok Leyland and Tata Motors series both look good, but Tata Motors have an edge in terms of between the two.
Let's get a quick technical check as well. Rajesh, what's the view on Tata Motors CV versus Ashok Leyland here?
So here in Tata Motors CV, there is a breakout of inverse head and shoulder kind of formation, and looking at the breakout, we believe that if a stock able to sustain above 460 level for next couple of days, there could be further more follow-up buying action may trigger in this counter, and a possible up move towards 500 to 510 would be the next target on the higher side. So at this juncture, yes, one can hold on the position. Stop loss are slightly deeper, but 460-65 needs to follow as a stop loss. Again, Ashok Leyland is also showing sign of recovery from after a correction. Looking at the near-term, short-term structure, we do hold a bullish view for near-term structure as 173 is the important level to watch for. If it's hold these level, possible extension of this pullback towards 185, 188, we may see in the near-term perspective.
Radha, I want to talk about why. So early on in the conversation, we were talking about slightly expensive stocks, and one of the stocks of the day today is KRN Heat. And if it wasn't for that circuit, I'm pretty sure that it would be trading high at this point, because it has been stuck in that upper circuit, a stellar set of numbers. And we spoke to the management earlier today, and they say that they expect that the revenues could well double based on the Neemrana plant capacity addition, the fact that they've completely commissioned that unit. They expect that at the end of FY27, they will end with a capacity utilization of 50%. And they're likely going to be adding additional capacity in certain other jurisdictions or geographies as well. So if I look at the price to sales at 1,200 crore for the full year FY27 and the current market capitalization, it's at what, 7.5 times or thereabouts, or 8 times. is it still an opportune time to pick this up?
I think one should not only look at only the price to numbers, so one should also look at the growth and the potential to move forward. So a lot of times, if you look at, there'll be a lot of stocks available at a higher numbers, but given the potential to grow and given they can multiply, I think that piece cannot be ignored. So in fact, I'm not commenting on a particular stock here, but more in terms of to understand that effectively what we can look at is the growths are there and the potential in terms of growth is there. One should not look at maybe a 6 to 7 sales, because once the number starts getting delivered, the number starts coming down, and effectively that makes events out the whole arrangement. So if you look at this stock, the year gain is about 60 odd percent. Effectively, one needs to look at the growth potential in the stock, and given the circuit, I think otherwise it could have been higher from here as well. So one should not be looking at more in terms of only looking at from a price to sale perspective, but we should also factor in the growth potential.
I agree with you. What I'm saying is, I was implying that at 7.5 times price to sale 1 year forward, it does not look too expensive. When you look at certain other companies that are trading at higher than that value. That is the point that I was making. So my question was more from the perspective of, if you had the opportunity, would you buy at these levels?
Yeah, one would enter at these levels given the growth potential what is available, and one should enter at the current levels.
What is the possibility on the charts, though, based on what you've seen, Rajesh, on the charts for KRN Heat? Obviously, there's no possibility of buying right now.
Yeah, so stock has already moved up, and looking at the near-term, short-term structure, I think still, stock is negotiating with its immediate supply zone, which is placed at around 1400 kind of zone. So 1400, 1410 would be immediate challenging level for the stock. If at all stock crosses 1410, then I think we could see further more upside, as weekly charts are showing a strong bullish candle at this moment. So we need to watch whether it's able to take out this immediate supply zone of 1410 or not. But again, if any cool off action comes around 1350, 1340 zone, would be again, level to enter in this counter, as overall structure on the long term chart is also showing a sign of strength. So dip should be used as a buying opportunity. So 1340, 1350 would be the level where one can, look to buy again in the decline.
All right, so that's the technical view coming in on KRN heat exchangers. But, the other one that we're putting spotlight on is Marathon Next Gen Realty. Let's try to pull up the stock and see as to what it's doing. Today, of course, not much of an action, but the company did, of course, announce its quarterly numbers, and the revenue did see a multi-quarter high. But we'll try to also understand as to how pre-sales, collection, etc. have panned out for this one. But Puneet joins us with more details, as to how things have panned out for this counter. And, of course, he did have a conversation with the management as well.
Well, most certainly, and thank you for that. We did see some impact in this particular quarter. Of course, revenue was good, but there was some impact that came through for the company as well. And, Kevaliya Shah now joining in to speak to us as well as what the counter was. Mr. Shah, very good afternoon. Thanks so much for joining in. We've seen, macro factors actually have an impact, right? Because labor shortages were a key, which was across the industry, but also on real estate. If you can quantify what was that impact going through, and have things gotten better going into Q2 for you?
So yes, there was labor shortage, and there was issue in terms of material as well. But in terms of the impact on our industry, if you look at it, the construction cost as a cost of the project cost is around 30%. And in terms of the increase in cost or timeline from that matter would impact around 10% of additional cost. Essentially, from the project point of view, it's only 3% change here and there. So it's not a large impact. It's an impact that can be manageable.
Also, Mr. Shah, if we talk about, of course, the collections as well, because, your pre-sales growth has been strong. Collections did on a YOY basis dip. So was this particular reason that you saw because of the other geopolitical concerns have an impact on buyers, or was this just business as normal that you saw and the collections will recover going in the next few quarters?
So no, collection has nothing to do with geopolitics. So collection is a factor of the ready to move in inventory vis-a-vis under construction inventory. So based on every year, if we sell higher ready or nearing ready inventory, the collection number kind of goes high. As we see in this year, we have completed quite a few of our inventories. For example, Monte South as a project in Baikala, Tower A has been completed, and Tower B also we have received OC up till 47 floors. So that is in Monte South, we have completed that. In Panvel, this quarter specifically, we have received occupation certificate of 2 towers. And again, throughout this year, you will see a lot of occupation certificates that we shall be receiving, a few in Bhandup as well. Having said that, the collection of ready to move in inventory actually will increase in the next few quarters, considering our ready to move in inventory is around 1,000 crores. So essentially on sale with a TAT of 45 days, the collection is completely realized. So that's how in the next few quarters the trends would be flowing.
And just one final quick question as well on your GTV as well, almost 20,000 crores that you mentioned, and given across projects in your presentation too, almost 13,000 crore of that continues to be unsold. So just wanted to understand which particular projects have done well, which are still yet to see, go from that number to pre-sales. If you can give us some qualitative aspects on those.
So the projects that we have, and you mentioned around 13,000 crores, all of them are in markets, for example, Baikala, Bhandup, Panvel, and also commercial, which is in Low Parel, and some in Mulund. So these are the projects that we currently have in our portfolio. All these micro markets are actually doing really, really well. Now, if you look at commercial portfolio, grade A spaces in Bombay are actually very deficient, especially if you look at South Bombay, Low Parel area. You would have seen the recent acquisition of a developer where he paid top rupees for just the acquisition of a land for commercial grade A space. So grade A space of commercial is in high demand. So that's where we see great sales. Talking about high value residential, the demand is really good. It's the project that we have is Monte South, again, 4 residential towers of 64 floors. When I mentioned about the ready to move in will be around 400 odd crores of ready to move in inventory in that. And ready to move in moves at slightly more premium as compared to under construction. So in the next few quarters, I think our realizations are also going to go up. And if you look at the whole government infrastructure, where Bhandup is the GMLR, which is Goregaon Mulund Link Road, is abutting our land. And that's where the whole geography changes of the city, where GMLR impacts our Bhandup project. The whole Atal Setu impacts our Panvel project. All of these government infrastructure projects are changing the way sales are happening, and we are seeing a huge demand in all these areas, and also the rate increase.
Very interesting. Well, thank you so much, Mr. Shah, for joining in, giving us your perspective on the quarter gone by. But Alex, most certainly, I think it's the public infrastructure development in Mumbai leading to big gains for all builders, including Marathon.
Yeah, absolutely. And redevelopment has been the name of the game, hasn't it, Puneet? Well, there you have it. So that's the view on Marathon next developer. But we've got lots to talk about on the other side, including the top buy today, sell tomorrow picks, and then we'll head into the cash session that you all know and love. Stay tuned for that.
केसरिया से मन
पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching India Market Close here at NDTV Profit, and on this side of the show, we're joined by Nagaraj Shetty, Senior Technical Research Analyst at HDFC Securities, and G. Chokalingam, Founder and MD of Economics Research, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. Nagaraj, I'll quickly come to you on your take on the indices and also give your BTST.
Yes, good afternoon, Mahima. Yes, market has been in a downward correction over the last 7-8 sessions. We have seen sliding down consistently, nearing the support around 24,200 Nifty. I'm expecting to bounce back from the lower levels. There is a strong support place around 24,200 odd levels. And the overall chart pattern is long-term, medium-term chart pattern is looking positive. Short-term is weak, of course, with the choppy trend. And I'm expecting a bounce back from the lower levels. On that front, I have two stocks from the long side. First one is IFCI. Chartically, IFCI, after moving into a consolidation phase, moved up very well. Recently shifted into a range-bound action, making an attempt of breaking above the range. Currently trading around 76.65. One can look to buy at current market. The immediate target would be around 71. One can place a stop loss at 74.50. Second one is Container Corporation. This stock has been in a downward correction recently from the higher levels, formed a higher bottom somewhere around 500 levels and bounced back very well in today's session. The overall chart pattern is looking positive. Volume has expanded during upside breakout in the stock price. One can look to buy at current market, currently trading around 534. The immediate target would be around 565. One can place a stop loss at 520.
Okay, all right. I've had glasses for some time. I can see without them. But I have a colleague who hasn't been wearing glasses and who decided to wear glasses today because it took him till today to realize that I'm the most good-looking and charming person that he's ever met. And that person is Sharad Dubey. Sharad?
Well, interesting. And of course, this is my reading glasses, and Lenskart has come to the focus. Why? 1 lakh crore market capitalization, all-time high levels. Let's look at the key reasons why Lenskart is buzzing in trade, and a lot of that specs is definitely there. Strong Q1 numbers, guidance is good. The volume-based buying is something which we are looking at. Brokerages have turned bullish, and also institutions are buying here. But let's look at the other side, the prices. Now the all-time high price is 627, but the starting price of the spectacles is just 499 for Lenskart. The highest target price is from UBS at 800 rupees, and the lowest target comes in for Ambit at 496 rupees. So this is the pricing story for Lenskart. But moving ahead, what's the conversation looking like? Piyush Bansal, the co-founder and CEO, has stated that it took them very long to crack this 500 rupees pair concept. Now that customer is ready, their costs were not. Second important portion he spoke about is they have underestimated how fast their own customers have gone into premiumization. Of course, they won't repeat these two mistakes, as they say. And also they say that Meller could be the Ray-Ban of the future. That's what they're expecting, right? Also, the brokerages have turned bullish. Let's talk about them also. Let's get in the foreign brokerages to show you what they have been talking about. Goldman Sachs has been bullish on the international expansion. If you look at the other key brokerages, what they have been talking about, Citi expects growth momentum to be strong. Going ahead, we also have Macquarie, especially an EPS upgrade coming in. And lastly, I'd like to point out Jefferies. They have stated that there is a big premiumization story as well. But there are some risks also. Both of them, you should have that in mind. Higher valuations and the base in the second half of last year is high. So yes, concerns are there, but yes, right now Lenskart is flying high.
Thank you so much for putting that into perspective, and in a very creative way, I must say. Thank you so much for that. Mr. Oklingam, a very good afternoon to you. I'll come to you on Lenskart. Somebody in the office today was saying that the stock is currently at around 600 odd rupees. Let's try to pull that up and see as to where it's trading at currently, the exact number. There you go, 599, and the basic frame costs around 499. The stock is a little more expensive than that. So what do you make of the earnings one, because it's been a good quarter for them, and would you be a buyer in something like Lenskart?
Personally, I would not be a buyer because the valuation comfort is not there, but of course, these kind of stocks, they keep maintaining the premium in the market, and they maintain the very high, rich valuation in the market. One has to accept that also. There has been a massive change in the market structure. So therefore, little risk-taking investors can continue to hold, and in case it corrects, around 5%, then one can consider buying it.
So that's the view coming in on Lenskart. Shalimar Paints is the other one, that remains in focus. And of course, it's a very small company of 750 odd crores, but it's gone ahead and acquired something like an Infra Market. So Hela Infra Market, which is a parent of B2B commerce of Infra Market, is reverse merging with listed Shalimar Paints. So an interesting transaction has taken place here. Hela is backed by investors like Tiger Global. It owns around 53% stake and is a part of the promoter group as well. And so what will happen is that eventually Shalimar will issue shares or CCPS to Infra Market investors, and in return Shalimar will get equity or CCPS of Hela Infra Market. Now the transaction is structured in such a way that there's going to be a swap and no immediate cash consideration is being involved, and Shalimar also has plans to raise around 1,000 crore via QIP. So this potentially creates a listed building material platform for Shalimar, and hence it gives access to the scale and business that Infra Market has, diversification of course beyond paints for the company, and potential access to much larger audience. So the transaction size basically will have preferential equity of around 3,500 odd crore, preferential CCPS of around 6,800 odd crore, and like I said, a QIP of 1,000 crore to help grow that business is going to happen. Why is this 1,000 crore crore QIP that Shalimar is doing, they've stated that this acquisition creates much larger building material platform for them, and to kind of strengthen their presence, to invest in the same, they're raising this 1,000 crore. And why this has stood out and why the stock is locked in upper circuit, because there were some significant names that came up in this QIP, something like Nitin Kamath, who has acquired around 4.4% stake, Ashish Kacholia around 3% as well. So that's the whole story of why Shalimar Paints has been in focus today and why it's locked in upper circuit. Mr. Oaklingam, a quick take on this entire transaction of reverse acquisition, the QIP. Do you think this is one of that? Because it's the smallest company in the paint space per se. What do you make of this acquisition that they've made? Because it was potentially one of the acquisitions that one of the biggest paint companies could have done, right? But they've gone ahead and done a reverse acquisition. So what do you make of that?
Yeah, I mean, it might help the company, but normally I would say that this stock is suitable for speculative investors, because in the last 10 years, only 3 years it made profit, and in fact, it is one of the oldest paint companies in the country. But many new entrants have built a big scale. So therefore, I am not very confident whether the management would be able to build the scale through all these, reorganizing the company. Even in the last 15 quarters, I don't think it has made any profit at all. I would suggest all for speculative investors to consider this stock.
Okay, all right. You heard the bell ringing. This is the first toll, of course. The second toll will come at around 3:30 or thereabouts. But the Nifty 50 is settled at a level of 24,353. Remember, yesterday during the cash session, there was a bit of a pop that you did not see in the past few sessions of as much as 74, 75 points. So it was an interesting end to trade yesterday. You're seeing cuts of about 1/3% for the benchmark Nifty 50. Pull up the Nifty Bank as well to see where it's settled, and it is at 57,591 or thereabout. The Sensex at 77,844 with cuts of about 0.2%. Keep these numbers in mind. And just to give you a sense of the top gainers and losers on the benchmark Nifty 50 as well at this time, you have the likes of Hindalco, the likes of Ultratech Cement, Grasim and ICICI Bank, which are the top losers on the benchmark Nifty 50. And gains are led by Tata Consumer Products, which is gaining about 3%, and that's where it's closed out, or rather its last tick is at 315. Tata Motors, Eternal, Hindustan Unilever and Shriram Finance doing okay as well. While we're on the subject of top losers, actually, Hindalco losing ground along with Nalco. Both of those stocks again quite considerably in trade yesterday on account of the alumina update that you probably remember. There is expected to be a bit of a shortage of alumina on the global stage, which is good news for these two companies. But Nagaraj, on the charts, would you take money off the table at this level for Hindalco and Nalco?
Nalco is still looking positive. We have seen some sharp upside momentum over the last few weeks and showing some healthy correction from the higher levels. I'm not expecting any bigger decline from here onwards. And 380, 382 is going to be a strong support for the stock price. Any dip down to that support is expected to be an opportunity to enter into this stock. And the overall trend looking positive, and this downward correction could be short-lived.
Right, so that's the view coming in on Nalco and as well as Hindalco, the two metal names that remain under pressure today. But let's also talk about something like an HT Infra, which is down by about 5% and this is on the back of the numbers. Of course, there was a one-off present there. But Nagaraj, what do you make of HT Infra on the charts right now?
Is showing some underperformance at this point of time. After a range-bound action, the stock has witnessed sharp decline. It has failed to sustain the breakout in the yesterday's session. Overall chart pattern is looking at this point of time. After a range-bound action, the stock has witnessed sharp decline. It has failed to sustain the breakout in the yesterday's session. Overall chart pattern is looking negative at this point of time. I'm expecting more weakness down to the next support of 500.
Something like a Mishra Dhatu, because it's seen a significant amount of gain today, up by about 8.5%. Do you think this momentum could sustain from here on?
Yes, Midani is looking positive. After a decline, it has bounced back, almost erased the loss of last session and closed at the higher levels. The chart pattern is looking positive, no doubt, and I'm expecting more upside in the, at least in the near term, down to up to around 465, 470 levels, where the next resistance could set in.
One stock that has actually taken a turn for the worse, and we spoke about it just a while back, Page Industries. After that initial recovery, there's been quite a bit of selling that came through towards the end of trade, and it's ended at the low point of the day with cuts of 5%. Clearly, the street is uncertain and not buying into the expectation that the volumes will be unaffected and that the demand will remain robust.
Yeah, and possibly also the fact that there would be still high cost inventory that they would have. Even in terms of raw material pricing, they would have probably gone ahead and bought inventory, raw material inventory at a higher price, which could impact margins and profitability going ahead. That could also be one of the factors.
Why don't we check with Mr. Chokalingam what he thinks about Page Industries? In the list of stocks, Mr. Chokalingam, that has in the past proved to be promising, this is definitely something that ranks in that list. But of late, it's not really done too much. Would you say that it's an opportunity to get in at these levels when the chips are down?
Yeah, one can definitely consider buying for a couple of reasons. The stock has corrected quite significantly, and secondly, in the last 3 years, it has started improving, the profit. And 3 years CAGR also quite decent at around 11%. I think, the depreciation of rupee should also, improve the outlook for the rating. So I would, be a buyer, but I don't think the June result is out. One can perhaps wait for the result and then consider buying the stock.
After that, we've seen this slide coming in despite of positive commentary from the management. But I think the volume growth was also not very impressive on a sequential basis because it came in at 5.7% versus that of a 10.9% in the last quarter. But, on the flip side, along with Page Industries, Solar Industries is something that came in with the numbers, right? The press release has come out, Alex, and defense business has seen a growth of 123%. International explosive a 65% growth. Domestic explosives a 52% growth. Strong order book of over 21,000 crore is going to support future growth, and they've set an ambitious revenue target for FY26 to 27 of 14,000 crore, and this is one of the reasons as to why the stock has spiked above at 5% since we last spoke.
8.5% is where it shut at 315. Mr. Chokalingam, if you have coverage on Solar Industries, and if not on the rest of the defense pack, if I were to push you to make a choice from the list right now, what would it be? Would it be solar or something else?
It would be Hindustan Aeronautics. It's a fabulous stock. 80% of the revenues are from maintenance business, and order book also very high. Of course, to be fair, one can consider solar also, though it is trading at around 100 PE. Maintaining 27% CAGR in profit growth for last 10 years, almost consistently, it's really fabulous. So one can consider solar as well.
Subject, Nagaraj, why don't you weigh in on a couple of these names, right? We spoke about Hindustan Aeronautics. Let me toss in Bharat Electronics as well. This is something that a lot of fundamental focused analysts and investors tend to put their money, that is BEL, and Solar Industries, which is arguably the stock of the day from the pack. How do these stocks look?
I think BL was underperformer recently, shown some promising bounce from the lower levels. The chart pattern is looking positive for the BL. I'm expecting some more upside. It has bounced back very well, currently placed at the edge of moving about 200-day EMA. I think once it sustains above, the next hurdle would be around 425, 430 levels for the BL in the near term.
I also want to get a check on the banking pack with you, Nagaraj, because in trade yesterday, you had the PSU banking pack that caught fire, and the index as a whole gained by as much as 2%. State Bank of India was one of the stocks from the large cap counters, or the very large cap counters, that was gaining ground. Would you be more positive on the PSU banking pack or the private banking pack at this point? And between the Nifty 50 and the other large caps and the bank Nifty, where would your preference be?
I think I would prefer PSU banking still, because though it is showing some consolidation in today's session, the PSU banking has bounced back very well from the lower levels. It has more room for the upside for the near term. Frontline PSU banking stocks like SBI, Canara Bank, Union, PNB are looking very positive at this point of time. I think more upside is likely in PSU banking in the short term.
Nagaraj, what do you make of something like a Dodla Dairy? It's up 6.5% today. Anything on the charts that you're liking in this particular name, or anything in the space that you're liking?
I think it has moved up very well from the lower levels, shown some breakout, promising breakout from the lows. I don't think that bigger upside is likely in this top price at 1150. There is a strong resistance. I'm expecting some more consolidation to be set in from the higher levels.
Got it. Okay. Let me ask Mr. Choklingam about Bharti Airtel. Pull up the intraday chart for Bharti Airtel, and what you'll notice is that it saw a bit of a pop at the start, but then it's failed to hold on to that. Of course, there was an expectation that would react to the change that it has undertaken with regard to its tariff structure. It's discontinued certain plans, and the bottommost plan, that 299 plan, I believe, has been discontinued, or 249, one of them. And the minimum plan now starts at 350. Estimates, Mr. Choklingam, of anywhere between 2 to 4% of an improvement in the average revenue per user on account of this. But it's also being seen as a precursor to more tariff hikes down the line. Would you be a buyer in Bharti Airtel based on the update that you saw?
Certainly, any investor who is little conservative, want to protect the portfolio from massive volatility, should consider Bharti Airtel. Whatever you mentioned, they are going to be positive in the short term, but the bigger story is for the medium to long term. The market structure is favorable. Only 3-4 players are there, and the most important is that even the government would be a beneficiary of rising telecom tariffs in the country, because they get the share of the revenue. And since non-tax revenues under always pressure for the government, I think it would be a mutual benefit to both corporate world and government to allow a very stable, steady rise in the tariff. And therefore, the biggest story is that it is going to be perennially a growth story. So therefore, I would recommend a strong buy, within the large cap basket.
Mr. Choklingam, what about Apollo hospitals? Because, they've given tall targets, in their presentation. They've said that they want to reach bed capacity at around that 14,100 mark by FY31. They're also, planning to fund hospital expansion majorly via internal accruals and not, via equity or debt. What do you make of this from the hospital space? Is it Apollo Hospital that you like in the space, or is there something else?
It's a great stock, no doubt about it. And, a lot of FDI is coming into hospital. That is also helping the hospital industry to get the better valuation multiple. And this company has been doing very well in the last 10 years. But just a couple of days back, we closed the call after reaching our target price, because the one single most concern in the short term is that, in the parliament, we read in the media that there was a concern about, the room tariff for the hospitals. There was a proposal to benchmark it with, 3-star hotels in the same locations. So I believe there can be little pressure to make all these big hospitals to, tone down the rate of rise in the tariff. So therefore, considering the valuation, considering also the recent run-up in the stock, I would sell at this level. In case it corrects, 5 to 10%, then I would consider buying Apollo Hospital.
Okay. What about from the pharmaceutical space, a company called Bliss GVS Pharma? It's not the largest company, just about 5,500 crore market capitalization. Stock is ended at the upper circuit. Mr. Choklingam, it reported a substantial improvement in the margin. If you have coverage on the stock, what would you do with it?
I have not studied it recent times, so.
Okay, so let me ask Nagaraj what the view is on the charts then for Bliss GVS.
Bliss GVS has been in a continuous up move recently after a downward correction, bounced back very well, and I think placed at the consolidation higher levels. Overall chart pattern is looking positive. More upside is likely up to around 550 level, where the next resistance could come in.
Okay, all right. So that's the view coming in on Bliss GVS. The other one, that continues to be under pressure today is something like a FM Industries. Nagaraj, anything on the charts for this one? It's taken a knock of almost 9% in trade.
Can you spell it out?
FIEM Industries.
FIEM Industries, yes. PM, declined from the higher levels. I think some more weakness is likely. We have seen some sharp up move. After that, it has failed to sustain at the higher levels around 2650 and declined to the lower levels, lower supports. I think trend is weak and some more weakness is likely for the short term.
Okay, so we're still waiting for the rates to settle, by the way. It would happen anytime soon. It's 328. In case you're wondering when that usually happens, remember that the order matching happens starting randomly between 325 and 330, and so the random close takes place, following which the order matching takes place, and then once that is done, the closing price settles for individual counters that form a part of the F&O list, and then you have the close for the indices as well. So we'll get you those data points. Remember, it's also Sensex expiry today, and so there could be a little bit of volatility that creeps in at the end today. Yesterday in trade, of course, you had a gap of about 74 points for the benchmark Nifty on the upside. That's where it closed. It closed off the low point of the day. It closed in the red, but it closed off the low point of the day. Still trading, or still at that 24,353 mark. Not yet seen that close. Okay, I think it's come in. It's just about come in right now. 395, 24,395 is where it is closed at this moment. Just about 42 points or thereabouts. And the Sensex is actually moved into the green. If you pull up the close for the Sensex, it's moved into the green at the end with a gain of about 0.2%. It was at 77,844 and it's closed well higher at over 78,080, very close to that mark. So the difference for the Sensex is quite substantial, and it's moved into the green. Remember, it is also Sensex expiry today, and so that might have had a bit of a bearing. But let's head across to Sharad joining in right now to give you a sense of how much of a difference there has been in the closing prices and what the F&O space is indicating. Sharad?
Well, Alex, you're right. There's a good move coming in Sensex towards the positive side, and we have seen that happening. Remember, this is the second expiry under CS. Largely, the changes are, we could say on a lower side, especially for Nifty Bank, only 40 point odd difference coming in. But let's look at the stock specific moves also amongst the cash, which are the top gainers. Of course, we are having IRCTC and Canfin Homes. That's where the action is shifting. Also, the top losers also, let's get you in that also to give you the entire picture of what's happening. City Union Bank, Aarti Industries comes in. Two important options call before Alex comes in. That's, of course, the 24,400 and the 24,300. That's where the at the money call options are moving around. And, of course, we'll get you the call and put options both for that. This is the 24,400 level. This is where the action is there. Open interest numbers also you can see over here. Let's just get in the 24,300 call and put also to show you the picture, and the action is definitely there in the open interest. So this is where we are seeing the volumes actually moving around, and the highest number of OI operation, you could say the operating interest change is also coming in. But Mahima, what else is there?
Right. So, Tushar, of course, thank you so much for getting us those details on some stock-specific action as well as how the derivative space looks like. Nagaraj, any quick take in terms of where the derivative space stands? Because that's still open till 340, right? So, any particular trades that you would give our derivative traders?
Nothing significant. Market has been in a correction mode. We have seen some uptick during the CS session. And I don't think that any significance is there. Market is still consolidating. And last 3-4 sessions, we have seen recovery towards the end during the session option, and the next day market opening lower. So this consolidation is likely to continue at least for the short term. And I'm expecting a strong support somewhere around 24,200 odd levels. Once it dropped down to that level, good upside bounce is likely from the lows.
All right. On that note, gentlemen, thanks so much for taking the time today. Pleasure speaking to the both of you, and have a great evening. Where are we closing shop today? We're closing shop at 24,395, just shy of that 24,400 mark. We're off the low point of the day for the benchmark Nifty 50. Another day of extremely narrow ranges, both for the Nifty 50 as well as for the broader markets. In fact, we should pull up the mid-cap index and the small-cap index just to see where we've closed out. The mid-cap index actually moving back into the green, so recovering quite a bit of lost ground. So too the small cap index staying in the green through the session and recovering a little bit of ground towards the end of the session, ending with gains of about 0.2%.
Yeah, but the bank Nifty has not seen that recovery, right? It still closes with downtick of around 250 odd points, and largely PSU banks is what is putting the pressure there. But the Nifty 50 heat map quickly if we can, and see as to where we're ending at. Tata Consumer still topping that chart, followed by Tata Motors PV, NTPC, HUL back in the green, up 1.4%. Eternal also doing fairly well, but you have Hindalco that continues to be under pressure, ICICI Bank, Ultratech, Grasim. So like Alex mentioned in the start as well, there are heavyweights that are putting that kind of pressure on the Nifty, but there has been recovery, of course, in the last session. But in terms of where the advance decline ratio goes, and that will be an interesting one to see.
It's improved at the end of the session, actually. There's a bit of a gap at the end, or at least, well, there was. I was looking at, is there the metric that you have, the graphic that you have for the Nifty 50 as well as for the broader markets? We can pull that up just in graphical format. We can actually talk about that. If you can pull that up, that would be fine. But essentially, it's improved over the course of the session so far. Go to the first page, right? Go to the first page where we talking about the close, and you see the advance decline at the bottom of the screen. You will see advances have pipped declines at the end, right? So 1298 versus 1062, the advances have actually pipped the declines at the end of trade. But the last thing that I will talk about is where the VIX closed today. So if you can pull up the VIX, the fact is that it's below that 12 mark, and it continues to remain very, very benign at this point, which is not necessarily indicative of sharp moves in the benchmark Nifty 50. So don't be surprised if we see that narrow range continuing till you see a major move on the upside for the VIX, at least in the near term. But I think that brings us to the end of this edition of India Market Close. From Mahima and myself and the team that put this show together from the NDTV Profit Suzlon studio, thank you so much for watching. Stay tuned. This is NDTV Profit.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by Coin Switch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the $64,000 mark on selling pressure. SEC to weigh exemption for 24/7 tokenized stock trading. Jordi Visser's top bet becomes Bitcoin. And Fidelity adds staking payments to Ethereum ETF. Let's get into a few things which is beginner should be keeping in mind before starting the crypto investment journey. Now let's understand how to choose a registered platform. Now remember, choosing a crypto platform is an important decision because the platform you use determines how easily you can buy, sell, and even manage your crypto. Now for an Indian retail investor, there are few things worth checking before signing up. Look at the platform's regulatory registration, security practices, payment options, trading costs, and the range of crypto available. Now here are the key steps to actually consider. First, check whether the platform is registered with the Financial Intelligence Unit of India or not. FIU registration means the platform is required to comply with India's anti-money laundering framework and reporting requirements. Now this gives investors an important regulatory signal when evaluating a platform. Next, look at the platform's security measures, factors such as two-factor authentication, cold storage, and strong account protection, which can help safeguard your crypto. It is also worth looking at how transparently the platform communicates its security practices. Now the payment options matter too. Check whether you can deposit and withdraw Indian rupees through familiar options such as UPI, IMPS, or even bank transfers. Now the convenient payment rails can make investing simpler, particularly for the first-time investors. Now look at the costs. The platforms can charge fees whether you buy, sell, or withdraw crypto. Compare this trading and withdrawal charges to understand what you will actually pay for each transaction. And finally, look at the crypto available on the platform. A platform should offer the crypto which you are interested or investing in, whether that is about the Bitcoin and Ethereum or a broader selection. CoinSwitch, for example, offers access to a wide range of crypto for Indian investors. Now let's take an example. Rohan has roughly 5,000 rupees to invest. He compares two platforms. Platform A has lower trading fees but does not support UPI, making deposits less convenient. Platform B supports UPI, is FIU registered and has a clear security measures as well. Rohan chooses platform B because it offers the combination of accessibility, regulatory compliance and security that suits his needs. Now in conclusion, choosing a crypto platform is one of the first decisions an investor makes. Checking registration, security, payment options, costs and available crypto can help you choose a platform that fits the way you plan to invest. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in market.
Let's get in Hirar and Savlani and ask him about what worked in this particular quarter as well. Mr. Savlani, thanks so much for joining in. My first question to you: we've seen the plumbing demand largely remain weak in this quarter. The industry volumes are down 10%. However, for Astral, the volumes are flat. So you've actually had market share gains in this particular quarter. What was the one defining factor for you in this quarter which led to market share gains?
I think we have communicated in the past also that Astral has spent a sizable money into the capex. So last 4 or 5 years, we have spent close to about 1,500 crore. And that benefit have started coming now because we have decentralized our plant. So now wherever the new plants have started functioning, we are getting the market share of that particular geography. Because in the piping industry, logistic costs play a very important role. So if you are near to the market, then the more and more distributor will join. And today that is what exactly happened. Many competitor distributors are also joining Astral. And that is contributing a good growth to the company.
But how has plumbing volume essentially, has that recovered in the month of July? Because generally when we see a quarter where you're seeing destocking, the next one in the initial month itself, we start seeing that recovery. Has that played out in the month of July? As well as, in your newer regions of Kanpur, Hyderabad, how is the utilization levels increased since you've commenced these plants very recently?
Yes, you are right that it has sharply rebounded in the month of July and first 12 days of the August. In the month of July, we were close to about 40% volume growth. So if I add that 40%, then the first 4 months our volume is double digit. So it's a robust bounce back, I can say, and the new plant contribution is continuously increasing. In fact, Kanpur plant we are sold out. Whatever we are producing, most of the product we are able to sell. So that plant is giving us a good number. Similarly, Hyderabad is also picking up very fast. So I think as and when the dealer and distributor will get the confidence that now plant is functioning very well, we are getting the regular supply. So definitely a lot of competitor distributor will join Astral. And that is what we are expecting. That was in mind and that is why we have put up the plants over there.
So Mr. Savlani, and got that point, because if Kanpur is sold out, that's a great thing to hear, sir. But when you look at the overall volume growth, you mentioned generally a 15% in the past. This time around, you're mentioning a 10 to 15% kind of volume growth. But you've also seen raw material price impact. That will help the value growth, I feel, as well, right? So what is the kind of revenue growth that we should anticipate for Astral for FY27?
So I think beginning of the year, there was a lot of volatility in the polymer price. So because of that, we were little bit shying away to give the higher volume guidance. So we don't want to unnecessarily misguide any of our investors. So that's why we have given the range of 10 to 15%. But there is a lot of change has taken place in the industry from the government side. Government has implemented MIP, minimum import price. So because of that, now the polymer price is going to be stabilized and there is very, very low risk on the downside particularly. So because of that, I think industry will be having more confidence as far as the growth is concerned. And even dealer and distributor will keep inventory because they also know that the downside is protected. So there is no worry to hold the inventory. So because of that, we are expecting that industry is going to perform very well. In fact, we have given the guidance of 10 to 15% volume growth. And once we will complete Q2, we will look into that whether we want to revise, upgrade, upside. So that decision we will take at the end of the Q2 number. Regarding your second question of value, you have absolutely banged out the real point of the industry pain. That last 3-4 years, the industry was having the volume, but there was no value growth. So that was denting our margin as well as the top line growth. This is after 3-4 years, first time we are seeing that the value growth is much, much faster than the volume growth. So today the gap is 10%. So now hypothetically next year, this full year we grow at 15%, then the 10% value growth will be there. So the top line growth will be 25%. So then the EBITDA and all will be much, much better than what we are seeing.
And just one more question on the piping business to wrap up that conversation, because you've guided for the piping business to have roughly 16 to 18% kind of margins for this year. Do you think that there is an upside risk to this, because you've reported 18.9% in quarter one? You'll also have the value growth aspect as well, or will you largely pass it on once you reach that higher end of the range? So is there any upside risk for this year?
I don't think that will be there, because last 3 years, if you can see our number, we are into that zone. We are always on the upper side of the curve. So this time also, in the first quarter also, we are in the similar 18% plus kind of zone. So I don't think that is going to end. Secondly, if the top line will grow, then your overheads are going to remain same. So that is going to give you the extra EBITDA in terms of percentage. So we don't see that is going to be a risk to the company. And on the contrary, polymer prices are going on the upward journey. So that is also going to directly or indirectly going to contribute to your inventory gain. I don't want to give the number of inventory gain that is we are counting, but at least that some benefit will be available if the polymer prices are going to be on upward journey. So I don't see there is a high risk on the margin side.
You did preempt my question on inventory gain, Mrs. Savlani, but nevertheless, let me ask you on the chemical business. Now, it was a demerger that you announced in the last few months. You have called off the demerger now based on what you put out as investor feedback. Any particular rationale that you have put out, the reason for the chemical business being called off now from the earlier demerger plan?
See, rationale is very clear that we both thought that it is good in the interest of the organization. But end of the day, we are the trustee of shareholders' money. If our shareholders or public at large or the analyst community all are not happy with your decision, then I think we should respect. We are not having any kind of ego or something like that we can't just change our decision. If it is not in the interest of shareholder, we are always open-minded people. We always want to respect that decision. And considering that in mind, we decided that we should postpone this decision. Because end of the day, everyone was of the view that is your size is still low. So at this stage, it is not advisable to do the demerger. You pick up the scale. At that point of time, you can rethink. But at this stage, at least it is not in the interest of shareholders. That's why board took. And we took the independent opinion also from the Big Four. And they also suggested the similar kind of view that it is not a good thing at this stage. Better you gain some scale and then you can do.
Just to wrap up, Mr. Savlani, we've seen, the adhesive business, especially in India, continue to do very well, 12.2% margins that you've done. For the UK business, though, that's been a laggard last year. You are at, I think, 4.9% margins there. Do you feel that you could look at that business in a different lens in this year? Do you want to divest that business because you absorbed the technology, use that in India, and the numbers are clearly visible for this business? But for the UK business, has there been any thought process at this point of time as to the future of the same?
Because you see the history, last couple of quarters, adhesive business of UK was not giving us the number which we required to do. Otherwise, we were able to grow at a double-digit margin in last 7-8 years. So, absolutely, we were not having any concern relating to the UK business. And we are forgetting one good fact about the UK, that today Astral Adhesive India business is growing so fast with the higher margin. That is thanks to UK only. Because UK has given us the technology and all this thing support in our product. That is why we are able to fight with the market player in India. Otherwise, growing so fast in India was also not possible. I think UK has not only contributed on this side of absolute number side, but indirectly also we are getting a good support from the UK. So I think divesting UK business at this stage doesn't make any sense, because now we are already coming back to the revival. We already said that this year we are going to deliver 8% kind of to 10% kind of EBITDA margin. We are already reached at 5-6% and with a very hefty growth of 26%. So I don't see any problem into that business. Slowly and gradually that business also will come back to the normalcy, and then everybody will respect that our decision was good.
Is the FMCG recovery finally real, or are we, mistaking a rural catch-up and a favorable base for a broad-based consumer recovery? What is the latest data telling you?
So I would actually not use the word recovery at all, because the FMCG market is definitely growing in the sense that it is anywhere between 4.5% and 5% growth rate is there. So that's been consistent for a while. But the last quarter may have shown some good results in some of the organizations, etc. What needs to be borne in mind is that there are some headwinds that we should keep in mind. The first one being the war, as a result of which fuel prices and resulted inflation. Second one being the monsoons, which everybody is calling out as 90% at this stage. In the face of these headwinds, whether this will hold on this growth is what something we need to be careful about. We believe that there could, depending upon the intensity of each of these things, the growth rate projections will change.
Right. You also spoke about the war-led rising cost pressure. But having said that, what would be your outlook for the Indian FMCG sector this year? And, given that the urban slowdown continues and it has been there for quite some time now, what is actually holding back urban growth? And, what do you think needs to change for urban demand to actually come back more decisively?
Yeah, so it's a very difficult question to answer, so to speak, because nobody can predict how the war is going or how it is going to end or if it is going to end at all. And nobody is clear about the impact that the monsoon might have in different parts of India and therefore the consumption. Now, monsoon has a direct relation to rural consumption, and the war has a bigger relationship to urban consumption because of fuel usage and things like that in urban India. It is perhaps because of this fuel usage that there is tightness. But having said that there is tightness, if you see urban consumption being slower, it is by and large only for the listed players and only for those kind of businesses. In our tracking, we look at listed players, unlisted players, unbranded players, local players, all of them put together. If you look at that as a whole, urban doesn't seem to be having that kind of a tightness in terms of consumption. It is just that they are trading a little bit here and there, sometimes unbranded, sometimes cheaper brands. That mix is what is happening. So from that point of view, there isn't that much tightness in urban. Having said that, if the war deepens, the situation could be different. And if the monsoon gets worse and major parts of India get affected because of the 90% prediction, rural can have an impact. So therefore, from a point of view of currently being 4.5% to 5%, we believe it can be anywhere closer to 4 by the end of the year. That's the kind of number that we think is likely to happen in terms of growth for FMCG.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Market ends in the mild red for the third straight session as investors hold their breath for a US-Iran deal. Nifty ends just below the 24,400 mark with a difference of around 40 points between indicative closing and the level at 3:15 p.m. Hindalco and Ultratech Cement are the top losers. Tata Trust began Tata Sons succession process after N. Chandrasekharan's decision not to seek another term. So Dorabji Tata Trust sets up a panel to choose Chandra's successor. RBI proposes new interest rate guidelines to make loan pricing more transparent and standardized. Floating rate loans will see benchmark resets capped at 3 months, while existing loans must transition to the new framework by April 2029. Public comments are invited until the 11th of September. The Lok Sabha passes the Mines and Minerals Development and Regulation Amendment Bill, which aims to restrict state governments from imposing taxes on minerals rights and mineral-bearing lands amid opposition protests. India's merchandise exports hits a record $44.24 billion for July. The trade deficit declined to 26.5% in July 2026 from 29.1% in July 2024. The April-July data has seen a record exports of $236.28 billion. Auto industry posts the strongest ever July wholesale sales, with overall volumes jumping 24.3% year-on-year. Two-wheelers led the growth with a 48.6% rise. Oil prices fall after International Energy Agency said global oil demand is set to fall further than previously expected this year, while Trump continues his claim over the Strait of Hormuz. Google unveils its all-new Pixel 11 Fold series with Gemini Intelligence. This latest premium book-style foldable smartphone is almost 10% lighter and about 1 mm thinner than the Pixel 10 Pro Fold. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Gargi Shetty. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Starting up, we have earnings coming in from Tata Motors PV. The Q1 fine print says that the net profit is down 80.3% at 775 crores versus 3,924 crores on a year-on-year basis. The revenue is up 9.3% at 95,799 crore rupees versus 87,677 crore rupees year-on-year. The EBITDA is down 17.2% at 6,326 crore rupees versus 7,639 crore rupees year on year. The EBITDA margin is at 6.6% versus 8.7% YOY. Let's go through the numbers one more time. As we saw, the net profit was down 80.3% at 775 crore rupees versus 3,924 crore rupees. Let's take this over to Puneet for a complete breakdown. Puneet, tell us what you're getting from these numbers.
Well, thank you for that. It is a weaker set of numbers for the company. You had in this particular quarter the volumes for Jaguar and Land Rover down by 9%, and hence that's led to a bigger miss in terms of the overall numbers as well. But the EBIT margins have actually been quite subdued, both for Jaguar Land Rover, but for the India business has been quite positive. But in terms of proportion, JLR is almost 80% of the company's revenues as well as EBIT margins, and hence a bigger impact there. Tata Motors has mentioned that there were supply constraints in this particular quarter, and hence that was a bigger miss on Jaguar and Land Rover, hence. But even that 9% kind of a fall that they've seen in overall sales has led to a bigger impact on the EBIT margins for the company. It's coming at almost 2.8 to 2.9%, but it is the lower number as well. Apart from that, they've also mentioned that looking ahead, they are mentioning in terms of outlook, this is important to know, that the global geopolitical developments as well as the luxury segment continues to be a key monitorable, because we've seen even in China, the weaker sales have had a bigger impact on the JLR business for the company as well. For JLR, they mentioned that specifically it is a year which is exciting because of multiple launches. Jaguar will be launched yet again in an electric avatar, but there are still a lot more monitorables for the company, especially in the global markets where you've seen geopolitical uncertainty as well. Apart from that, they will be expanding in the portfolio in battery electric vehicles. I spoke about Jaguar as well, but even the Range Rover will get an electric model this year. So there is a lot to watch out for. But the India business, it has continued to do well. We've seen in April to June, all months have actually had a 50% growth on a YY basis in sales, but when you look at the consolidated financial numbers, there is that miss coming through, and hence EBITDA margins at 6.6% are lower compared to the same time last year.
Right, thanks for breaking that down, Puneet. But let's stay on that earnings momentum. Jubilant FoodWorks has reported a healthy set of first quarter numbers. The consolidated revenue grew 14.1% year-on-year to 2,570 crore rupees, while EBITDA rose 14.3%. Net profit came in at nearly 97 crore rupees, up nearly 6%, with EBITDA margins remaining stable at 19.6% compared to the same period last year. And moving on, Walk Hard is in focus as the company delivered a sharp turnaround in the first quarter, with revenue rising 26% and EBITDA jumping 2.6 times year-on-year. Speaking to NDTV Profit, Habil Khurakiwala, founder and chairman at Walk Hard, said that both top line and bottom line growth have been consistently good for several quarters. Listen in to more of his comments.
Our performance both on top line and operating results and bottom line has been consistently good in last several quarters, and that is being continued. The major reason is that we have overall top line growth of about 26%, and our EBITDA, which was negative last year, is in a positive space this year at 107 crore rupees.
And Gaja Alternative Asset Management IPO is in focus as the company is set to open on August 19th. My colleague Nimit spoke to Gopal Jain, Managing Director and Chief Executive Officer at Gaja Alternative Asset Management, talking about how investors should value Gaja and their FY26 earnings. Listen into a snippet of that conversation.
In your FY 2026, you reported your carried income at about 75 crores, which is close to half of your total income. Now, can you explain why carried income was so much higher than the management income? And management income also over the last 2 years has come down a little bit. So what should investors expect in terms of when they look at the future earnings that the company will bring in? Should they expect carried income to sustain in this way? Because that seems a little unsustainable and it has a little risk. But management income is where your sustainability comes. So what is the message you have for investors when you talk about your carried income being higher than your management income?
So we are a 22-year-old firm. Carried interest is not lumpy, it is back-ended, but in our case it becomes front-ended. we derive income from multiple funds. And from each fund, we derive management fee, we derive carried interest, which is, let me simplify it for the viewers, it is a share of the profits, and we derive sponsor gain. So our performance fee, which is combination of sponsor gain and carried interest, is always likely to be more than 50%. But given where we are, a 22-year-old firm, deriving income from multiple funds, mature funds, it becomes increasingly predictable and stable. We shouldn't be making a statement about the future, but if you look at our past, you will see a steady trend in how our income has grown, total income has grown, our total profits have grown, our net worth has grown. And if you have such long data, 22 years of data, then you're in a good position to say, conjecture about the future. I also want to say share of profits is calculated on a fund as a whole, not on deal by deal basis. It's a European waterfall. First we have to deliver the fund back to investors, then we have to deliver a hurdle. So it becomes increasingly predictable and less prone to clawbacks.
Let's also have a look at how the market ended today. The market ends in the mild red for the third straight session as investors hold their breath for a US-Iran deal. The Nifty ended just below 24,400 with a difference of around 40 points between the indicative closing and level at 3:15 p.m. Hindalco Industries and Ultratech Cement were the top losers today, while Nifty Realty was up for the second consecutive day. Let's take this over to Parth for a complete roundup of how the market ended.
In the closing auction session today, both Nifty and Bank Nifty saw a similar spike of 43 to 44 points. But if we come back to the market performance, the Nifty has closed in red, down over 0.1%. Hindalco and Ultratech Cement were the top losers of the index. Hindalco down almost 3%, and Ultratech also seeing a downtick of over 1.5% today. On the broader market side, they have outperformed the benchmark with Nifty Mid Cap 150 closing in green, up almost 0.1%. Astral being the top gainer of the index, seeing an uptick of over 8.7% today. On the other side, Nifty Small Cap 250 closed in green, up over 0.1%. Netweb Technologies and Godavari Power were the top gainers in the index. Godavari Power gaining over 6.2%, while Netweb also saw an uptick of over 7% today. Sectors have closed on a mixed note. Nifty Realty was the top gaining sector, up almost 1%. Oberoi Realty and Lodha Developers led this gain, both gaining over 2% today. On the other side, Nifty Metal was the top losing sector, down over 1%. National Aluminium and SAIL were the top losers. Nalco down over 4.5% today, while SAIL also saw a downtick of over 3%. On the trend side, Nifty Realty has closed in green for the second day in a row. Nifty FMCG and Nifty Auto have snapped their 3-day losing streak. Nifty Pharma, Nifty PSU Bank and Nifty Oil and Gas have snapped their 2-day gaining streak, and also Nifty Financial Services has closed in red for the third consecutive day.
Thanks for breaking that down, Parth. And today we also spoke to Matt Orton from Raymond James Investment Management on the outlook for the Indian market. He says he's bullish on M&M, saying that the valuations are cheaper, while adding that financials could lead the market and potentially improve sentiment among foreign institutional investors. Listen in.
Coming out of, at least when the initial MOU was signed back in May, owning financials was a key part of my 3-point plan for India. It was owning financials, owning some real assets, and then looking for those underappreciated long-term secular growth opportunities, like a Mahindra, something that was just totally undervalued. But financials, I would argue, still are very reasonably valued despite the comeback that they've had. And it reflects strength in the overall system. You can't have a bull market unless it's confirmed by financials. And so I think it's helpful that we're seeing financials maybe lead India out, because these are names I think more international investors are familiar with. They're part of some of the larger indices, and I think that can give foreign investors more confidence.
Viewers, we're getting a very important update coming in. The government is set to fast-track the preliminary report on the Phuket-Delhi flight incident, and top government sources are telling this to NDTV Profit. For more on this, I'm now being joined by Danish. Danish, can you please tell us what we're gathering on this?
Well, that's correct. Top government sources told NDTV Profit that's a preliminary report which is supposed to come out within 30 days as per the ICAO guidelines. It is now expected to come out in the next few days, and this update is coming at that point in time when we are seeing the AIB investigation is underway. And today, sources have confirmed that they would really want to expedite this particular preliminary report, because Once this prelim report is out, then there's a lot of questions which are unanswered as of now. So we will be getting a closure to those particular questions, whether it was a technical fault, if there was a technical fault, how deep was it? And we all know, as per initial reports, that the PIC samples, when they were tested, certain traces of marijuana were also found. So considering this, the government really wants to put an end to all of this issue as soon as possible. So sources are telling us that in the next few days, the prelim report in the Air India Phuket Delhi flight incident is supposed to come.
Danish, just stay with us. We also know that according to sources, Air India has ordered mandatory banned substance screening for its pilot. The airline is set to begin a comprehensive testing exercise from today, which will cover the group pilots. So the screening, we know, will check for any substances or medications that are not permitted under the prevailing regulations. Can you tell us a little more about this?
Well, that's correct. The NDTV Profit reviewed the internal emails that was written by the high authorities of Air India towards group pilots. So Air India has now made it mandatory that starting today, all group pilots will be tested and they will be screened for certain banned substances as well as for banned medications. And this test will be conducted also at the Air India headquarters and the Air India Training Academy. Besides this, the pilots that will be soon landing at the different places, even those will be tested. And this is a step that Air India has taken on a voluntary basis. And let me remind you that there has been no update from the DGCA or from the Ministry of Civil Aviation directing all airlines to do so. But we are seeing that Air India has taken this major step, this major voluntary step, in which all the group pilots, and by that I mean all Air India pilots as well as the Air India Express pilots, they all will be screened for banned substances and banned medications.
Right, thanks so much for breaking that down for us, Danish. We'll have all our attention on this story and we'll bring you more details as we get them. But moving on, Tata Sons has formally accepted N. Chandrasekhar's decision to not seek another term when his tenure ends in February 2027, setting the stage for one of the most closely watched succession processes in India Inc. The trustees of the Sir Dorabji Tata Trust have passed a resolution to initiate the formation of a selection committee which will recommend the next chairman of Tata Sons in line with the company's articles of association. For more on this, let's take this over to Nimit, who's outside Tata House right now.
Yeah, so both these trusts together comprise the Tata Trust Group, and they control Tata Sons, and they have to together decide who will be the succession plan essentially after the stepping down of N. Chandrasekharan yesterday. So while the Sir Ratan Tata Trust cannot meet because of the restrictions placed by the Charity Commissioner earlier this year, the Charity Commissioner said that ongoing their investigation, no board meetings can take place for the Ratan Tata Trust. Now the Ratan Tata Trust has two options here. They can write to the Charity Commissioner, which I'm sure they will do, to lift this now that the succession planning needs to be done before the AGM on the 18th of August. But the second option, which was laid out in the Charity Commissioner's order itself, was that they can move the Bombay High Court against the order. So both options are now available to the Ratan Tata Trust, but as of now they cannot meet. The other trust here is the Sir Dorabji Tata Trust. Now the Sir Dorabji Tata Trust has of course met today, and their office is not here at Bombay House. It's at Cuff Parade, the One World Center. One Trade Center, and they've come out with a statement, firstly thanking Mr. Chandrasekharan for his tenure and everything he's done for the group, but more importantly, at this meeting they have passed a resolution to initiate the setting up of a selection committee as soon as possible in accordance with the governing documents of the trust, for the purpose of recommending a person for appointment as the new chairman and the board of directors, replacing Mr. N. Chandrasekharan.
Right, thanks for that, Nimit. We're all going to have our eyes on this transition. But moving on, the RBI proposes transparent loan pricing norms with a cap on floating rate benchmarks. Sharad is now here with more details and the brokerage's take on the same.
Well, largely this is what the industry parameters were there, especially when you talk about the Basel norms, and now slowly we are converging towards that. The floating rate loans will have benchmark resets and they should not exceed more than 3 months. The existing loans might migrate into the new framework. And remember, these are the draft guidelines which are open for public commentary until September 11th. But the brokerages have a mixed views on it, especially Jefferies. They have stated that the prime lending rate, the PLR as we call it, and the spread components, they can be set as per the internal policies of the banks, and this will of course restrict the repricing of the spread components going ahead. NBFCs, however, are not required to adhere to these guidelines. And to put things in perspective in a very simplified manner, this augurs well for PSU banks much more than the private banks, because they have already, most of the category guidelines are already being held by them. Citi, on the other hand, have stated that this impact would be likely manageable, and the ceiling will of course cap some yields for the lenders which are reliant on the high yield small tickets as well. And the complexity and the near term compliance cost can be there, but it is still non-trivial. So the impact won't be so much, but yes, it will be slightly positive for the PSU banks as compared to the private banks.
Thanks for that, Sharad. And viewers, Airtel's tariff tweaks could signal a fresh round of telecom price hikes later in 2026, with Jio expected to follow. Let's go over to Rishabh on more details on what this means.
Tariff hikes in the telecom sector. You've had Airtel, which has recently removed one of its lowest priced packs, and this is seen as a move to sort of rationalize the tariff offerings that they have. What this also signals to is a broader sort of price hike that might come in the later half of this year, with more and more telecom players expected to also follow suit. What we're seeing is that Jio had executed a similar plan in August last year. It had removed its 249 rupee plan. What analysts are expecting is that Jio could make similar moves as to Airtel's in the next few days or so. What they're also seeing is that Vodafone Idea may also match the tweaks that Airtel has made. They may either retain the sort of cheaper plans that could help them actually gain subscribers in a very difficult market for them. But what we're also seeing is that IIFL, they are saying that about 5.3% cash EBITDA upside will be there for Vodafone Idea if they actually match what Airtel has done. On the other hand, Vodafone Idea is also seen to look at a circle-wise plan instead of a nationwide blanket change that we're looking at. What we're seeing in terms of the impact on Bharti Airtel's average revenue per users is that could go up by about 2% given the latest changes that have come in. That's what we're picking up when it comes to the latest tariff hike in the telecom sector.
Thanks for that, Rishabh. Let's shift our focus to some trade data now. India's trade numbers show strong export momentum, with the April-July exports hitting a record $236.28 billion. Q1 exports are up around 13% year-on-year, while merchandise exports have grown 16.1%. Now, July merchandise exports rose 19.6% to a record $44.2 billion, outpacing the 17.5% growth in merchandise imports. Now, the merchandise trade deficit, however, widened to $31.98 billion from $27.88 billion last year. The Commerce Ministry says the deficit as a share of total trade has nevertheless declined to 26.5% from 29.1% in July 2024. As for sectors, electronics, engineering goods, iron ore, meat and poultry were among the key export growth drivers, and exports to West Asia have also recovered, while the US, UAE and Singapore remain India's top export destinations. And also at the trade data briefing, Commerce Secretary gave an update on the India-US trade deal. He said that both sides are aiming for an early conclusion of the deal as India actively engages with the US to resolve any outstanding trade issues. The US, as we know, has imposed a 10% additional duty on Indian imports under Section 301, lower than the initially proposed 12.5% rate. Importantly, around 45% of India's exports to the US remain outside the scope of this additional duty, including several key product categories. So the focus now will be on how quickly those negotiations can deliver further tariff relief and greater market access. And moving on, Parliament's monsoon session ended today with both houses being adjourned sine die. Speaking after its conclusion, Parliamentary Affairs Minister Kiran Rijiju said a total of 12 bills were passed, but the government was not satisfied with the quality of the debate, alleging that the opposition avoided discussions in the House. Let's listen in to what he had to say.
टोटल 12 बिल्स पास किए हैं इन टोटल, और चर्चा की दृष्टि से हम खुश नहीं है क्योंकि अपोजिशन ने ठीक से चर्चा करने नहीं दिया, विशेष करके लोकसभा में, लेकिन बिजनेस अच्छा हुआ है। मेरा जो एक्सपीरियंस, मेरे ज़िंदगी में जो पार्लियामेंट्री एक्सपीरियंस जो मैंने देखा है, ये पहली बार है जहां अपोजिशन डिस्कशन से भाग रहे थे। पार्लियामेंट्री डेमोक्रेसी में अपोजिशन डिस्कशन के लिए डिमांड करते हैं और सरकार उसका जवाब देते हैं। ये तरीका होता है, क्योंकि लोगों ने हमको चुना देश सेवा के लिए, समाज सेवा के लिए। ऑपोजिशन सरकार से जवाब मांगता है और सरकार जवाब देना ही होता है पार्लियामेंट के अंदर में। तो पहली बार ये दृश्य देखने को मिला कि सरकार खुद कह रहे हैं कि हम डिस्कशन चाहते हैं और ऑपोजिशन बहाना बना करके डिस्कशन से भाग रहे हैं।
Let's now shift our focus to the auto industry. India's auto industry has posted its strongest ever July wholesale sales, with overall volumes jumping 24.3% year on year. Two-wheelers led the growth with a 48.6% rise, while passenger vehicles climbed 31.2% and three-wheelers gained 33.4%. Now, within the passenger vehicles, cars rose 37.6% and SUVs rose 29.2%. With the festive season ahead, Siam says that the momentum is holding up. Let's take this over to Danish for a complete breakdown.
Well, Indian auto industry's dream run continues as in the month of July, the wholesales increased by 25% YOY. If you look at the overall figures, in the month of July 2026, there were over 24 lakh dispatches versus 19 lakh dispatches last year at this particular month. And if we look at the overall categories, the PV sales crossed 30% and similarly the two-wheeler sales and three-wheeler sales also jumped over 30%. If we break down further the passenger car segment, we can see that the passenger car sales also shot up by 37.6% and there were 1.32 lakh units that were dispatched this time, and even the SUV sales crossed 29% and the SUV sales have been on a dream run from the past several years. And if we look at the two-wheelers pace has also seen a great jump, and similarly, the three-wheeler category has also seen a great jump. As per SIAM, the industry is very excited right now to step into the festive season, as right now everything is completely positive. We are also seeing that the interest rates are steady, and similarly, because of certain taxation benefits that were passed out in the previous budget, that is really aiding these overall sales, especially after the GS2 2.0 cut. We are seeing that the overall final rate of the cars have come down, because of which we are seeing that there is a huge demand that is there from the past several months, and now we'll have to wait and watch that how this festive season really works out. As of now, the auto industry is completely preparing for the festive season. As we speak, the manufacturing activities are taking place at full swing. So all in all, if we see, July was yet another month in which the auto industry's dream run continued.
And in fact, earlier today, my colleague Danish spoke to Sanjeev Edwards, CEO of Logistics and Cargo at GMR, on the outlook for India's air cargo sector. He says that lower domestic flight capacity has hit cargo handling and pushed up freight rates, while stronger trade will require more freighters and wider connectivity to smaller towns. Listen into what he had to say.
So from an industry perspective, we have seen that a lot of ops, they take place through belly cargo, and over the past few months, because of the West Asia crisis, a lot of domestic airlines have reduced the number of flights. So how is the cargo industry being affected by this?
Yeah, definitely. I mean, it does get affected. Capacity, I mean, acts as a catalyst for growth. And if you take capacity out, it is going to have a counter effect. It has sometimes a counter effect. Sometimes, when the capacity is lesser, the freight prices can go up. So I think the capacity which has been lost on the belly has to be complemented by air capacity. And that's where we're also, requesting the government to look at, something called getting more freighters. Is something called double dip, where earlier, under the cargo open skies, a foreign freighter could come into a major hub in the country. It could touch another smaller airport, and now its smaller airport in tier 2 and 3 city will actually have access to air capacity. If we are providing that kind of access to air capacity to tier 2 and 3, actually we can make up for the loss that has been happening through passenger airlines losing capacity.
With the winter schedule, supposed to come out very soon, how much additional capacity for the industry are you expecting this time? And what sort of, targets are you feeling that this financial year will end at?
See, we've seen, because of the crisis, we've seen some export numbers are up. We've seen, in fact, imports also going up because people are kind of building buffer stocks and things like that. So I see this year should show a strong growth in terms of, air cargo. Definitely, this should be a good year for us. Air capacity definitely is something that we need. And the way to really say how much of air capacity will come, if we have to bring more foreign freighters in capacity, because India, unfortunately, does not have the freighters, right? I mean, once we have the freighters, definitely that will be something something that India can thrive on. But until that happens, in the interim, we need to allow some foreign freighters touching 2 airports, and bring that capacity in, and India for sure will benefit, and air cargo will see a growth.
And with that, that's all the time we've had on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं।